Good morning, ladies and gentlemen, and welcome to this 7th edition of the Trieste Eastern Europe Investment Forum. Yes, we are at the 7th edition, and this year is a very particular year due to the, of course, to the consequences of the pandemic, but to the perspectives of the recovery also in Eastern Europe and in the Western Balkans. And so we are here today with a very strong program, very dense program. It will be a very long day, but very interesting one. And here we are. And so this forum is dedicated to this next generation Eastern Europe. And so this Trieste Investment Forum is strongly focused on the current situation and economic situation. So let me first of all thank all the participants, all the guests that will be with us today, and let me thank my colleagues and friends who are today with me on the stage and on the backstage. So first of all, let me introduce Federica Seganti. Federica Seganti, who is with us today, and Federica is the program director of the Master in Insurance and Risk Management of the MIB Trieste School of Management. The MIB Trieste School of Management is our traditional partner in organizing this international event. But let me give the floor also to Franco Del Neri, who is the authentic organizer of this very engaging and challenging initiative. So, Franco.
Thank you, Gianni. Thank you, Gianni, and thank you to everybody to be today here with us. This is the first time in our forum, Trieste Forum, that we introduce we start with the youth forum. We call this a Youth Forum on the Future of Eastern Europe, the Next Generation, and the Financial Communities for Eastern Europe. We have a direct connection with Trieste, where students from the MIB Trieste School of Management are in the work. So, few words about the youth generation. We should recognize that the difficulties and benefits of being young in today's difficult economic times, compared with us, their parents' generation, and about issues relating to anything, so housing, education, jobs, pension, environment. We have selected a certain number of young people from the Southeast Europe region through an independent survey. These people are with us today, and they will respond to the question, and they will be part of the discussion together with the two chairs from London, which are even young, exact part of the young generation. So I believe that is a good and encouraging example of the next generation. But let's go, let's move ahead, and let me throw the word to and to introduce the people from London. Tobias from. An associate in EBRD Capital Market Development Team and responsible for portfolio of transaction advisory and policy dialogue project in Eastern and Southeastern Europe. So I think is a perfect guy to have a dialogue with the panelists. And Tobias is a co-founder of EBRD's Young Professional Network. And the other chair will be Erika. She is a senior coordinator for the IISS Director General's Office and research analyst for the Conflict, Security and Development Program in London. I'm very proud because she was a stagiaire, Gianni, in your team.
She was more than a stagiaire. She's a friend. She's a FEBA friend.
Okay, she's a FEBA friend. And this is a community of ex-FEBAF interns. So, but let me immediately give the floor to Tobias, but just one welcome to our young people from the Southeast Europe. Dragi prijatelji, dobar dan svimi I dobrodošli. Rado mi je da vam vidi ovdje. Good work.
So this was a sort of a coup de théâtre with Franco's specific languages concerning Eastern Europe. Thanks, Franco.
Tobias, the floor is yours.
Thank you, Gianni, and thank you very much, Franco, for this very, very warm introduction. My name is Tobias. As Franco said, I work for the EBRD. I work in the Capital Markets Development team, and I'm here today to host this event with my wonderful co-host, Erika Pepe. The Western Balkan countries are extremely close to the EBRD operations. For instance, Serbia is a recipient of more than 7 billion euros in investment. Bosnia, similarly, has received roughly 3 billion, which puts us very high in the list of EBRD's countries of operation. And in recent years, these investments are a reflection of the significant progress Western Balkan countries have made. Talking about the EU integration, the EU accession, talking about investments in fintech, investments in startups, and a more competitive economy in many, many countries in the Western Balkans. However, and unfortunately, many problems still remain. Be it the very high corruption, sovereign level, or in the private industry, be it an extremely weak rule of law in some of these countries, be it uncompetitive state-owned enterprises, which most of the time is a legacy of former political systems, and of course, be it the very high youth unemployment, which because of COVID peaked at 35% on average in the Western Balkan countries. And this, as Franco said, will be our topic today. We will be talking to young people from the region to understand what is their view on the different challenges and what is their view on the solutions to these very, very pertaining and long-lasting problems. In 2016, the European Union started an initiative to give the voice to young people. Today, we would like to follow up on this. We would like to hear the voice of young people. We would like to understand what do they think, what are their solutions. And with that, I would like to hand over to my co-host Erika to introduce our speakers and to say a few words about herself.
Thank you very much for the introduction, Tobias. And thank you, Gianni and Franco, for creating this opportunity for discussion. And welcome again to the Youth Forum of the Future of Eastern Europe. So my name is Erika Pepe. I am Senior Coordinator for Research and Analysis for Conflict, Security and Development at the International Institute for Strategic Studies in London. And as said, I am part of FEBA's Friends. We have a great lineup of speakers today who have different backgrounds and experience and represent the next generation and the financial communities for Eastern Europe. And as Tobias mentioned, we're going to discuss with them about economic growth, European integration, and the challenges and the opportunities for the future of the region. We have with us today Slobodan Franeta.
Recording in progress.
Yes, okay. We have Slobodan Franeta, who is an economist from Montenegro and currently senior consultant at the 4FI, where he works for the implementation of decentralized financial solutions. We have Mihailo Gajic from Serbia. He's an economist research director at the free market think tank Libek, where he works in the field of economic freedoms, public finance, and business regulation. Ognjen Markovic is a political scientist from Montenegro, currently in Bosnia and Herzegovina, where he is project expert on the Western Balkans Youth Lab project, which is an EU-funded and regional cooperation council implemented project providing opportunities for youth in participate in decision-making. We have also Radislav Puric. He's an economist from Montenegro. He's an investor relation junior analyst at Georgetown SLL and responsible for institutional investors' analysis during financial communication campaigns. And last but not least, Edip Smolo from Bosnia and Herzegovina. He's an assistant professor and vice dean for scientific and research activities in the Faculty of Business and Administration of the International University of Sarajevo. Before we start with the discussion, just a couple of housekeeping points. So we encourage everyone to raise questions. So please write your question in your chat box, in the chat box at the bottom of your screen. And Tobias and I will pick on your questions during the Q&A. And since we have a very long and exciting day ahead, so apologies in advance if Tobias and I will need to be the timekeeper today. We have about 15 minutes for the discussion before we open the Q&A, around 10:30, 10:35, and we need to conclude at 11 sharp. So without further delay, I will give the floor to our speakers. So Tobias, let's start the discussion.
Awesome. Thank you very much. My first question would focus on the current economic challenges, or challenges to economic growth, as I would put it. Slobodan, given your experience and your background, why don't we start with you? What do you think are currently the biggest economic challenges to economic growth?
Thank you, Tobias. First of all, I would like to thank you, organizers, for putting young people in front of this conference. I think it is very important, especially for Eastern Europe and our Western Balkans region in these challenging times indeed. Well, I believe many of my fellow speakers will tackle some of the issues, but I would like to focus on two that are very dominant and I believe possess a biggest threat and challenge for the further development of Western Balkans region. One is, of course, crony economy, and it is concerning the role of it is concerning the relationship between business companies and ruling parties or government in some sort of shadow relationship. It is mostly visible in the construction business, and whether it is on the coastline of, for example, Montenegro, or whether it is on working on the highway, that is now very popular question in our country. So this is one of the question that one of the challenge that is possessing a lot of threat for the future development, not only in Montenegro but the whole region as well. And it is something that is also visible in the newly published reports on corruption and how citizens of Western Balkan countries are perceiving corruption in public sector. Another challenge, of course, also that is afflicting economic freedoms. For example, in Montenegro, just in the last decade, Montenegro declined for 40 position on the economic freedom scale. So it is a significant threat also for investors and people who are eager to start new business. Another threat that is also, I believe, or challenge that is also here present is trade barriers between countries in the Western Balkans region. According to the World Bank report, there is, I believe, 26 million hours spent on the crossings between countries in exporting goods. Hours, which is also, this is putting a lot of burden for companies in the region, but also it is slowing down investments and job creation of new jobs. Youth unemployment in the region is also something that is relating to this problem, and it is, especially in pre-pandemic time, it was very high in the region, ranging from 25% to 55%. So I believe those two challenges are something that are very crucial and that can be tackled, that should be tackled in the future by young people.
I agree. Yeah, definitely. Ognian, do you think corruption and the high burden of bureaucracy for companies are the biggest threats, or do you have more reasons or more challenges to add to it?
Maybe it's for Slobodan.
Hello. I hope that now you can hear me well.
Yes.
Thank you very much, Tobias. Hello, everyone. It's a great pleasure to be today with you, and congratulations for the organizers for including young people in this year's edition of the forum. It's really a practice that we should all follow, and to include young people in discussions in all those areas that really do affect well-beings of youth from the region. Regarding your question, I mean, challenges to Southeastern Europe's economic growth are different, and even as Slobodan mentioned, starting with unemployment and different other things, I believe that lack of business-friendly environment in regard to your question, in regard to the quite long administrative procedures and similar, is something that we should focus on, as well as with the aim to increase the investments, both foreign and domestic ones. But on the other side, there should be a focus on generating more jobs and support to small and medium enterprises, to encourage youth entrepreneurs, but also to include all of those, not only young people, but all citizens when it comes to their vulnerability, meaning providing equal opportunities for persons with disabilities, Roma, but also additional support to women entrepreneurship as well. Thank you.
Yes, this is very true. Based on these answers, Mihailo, my question would be, could it be that the brain drain, that young people leave the Western Balkans is a direct result of this, or could it be that it has, different consequences or even different causes in this regard?
Thank you, Tobias. Well, we need to first acknowledge the fact that a human being is not just a homo economicus, it's also zone politikon. So one of the causes why people are emigrating for these countries are not due to only economic reasons. The level of salaries in the Western Balkans is significantly lower than Western countries. And since the geographical distance is not that big, people see it, people perceive it. And that's one of the main drivers of mass immigration from the countries in the region. However, in recent years, we have a rise of people who are emigrating from the region, not only because of economic reasons. These are people who are high professionals in their areas of expertise. They have very high salaries in Serbia or Bosnia, Montenegro, for example. These are IT engineers, data scientists, etc. But they leave the region because of the unregulated or very bad environment in which they live. So there is the problem of the healthcare accessibility and the quality of care. There is also the problem of the way how the public services work. People are fed up with corruption, inefficient bureaucracy, and similar problems that are resulting from it. Also, one of the main detriments that this mass brain drain will have on the economies in the region is the lowering level of economic growth in the future. So not only that the ever-rising costs of social expenditure, for example, for the healthcare and the retiree benefits are going to increase, they will also fall on the payments of the ever lower number of people, the working age that remain in the region. Also, there is now already a problem in Serbia finding good skilled workers because most of them are, for example, in London or Munich.
So it's a little bit the chicken and the egg. Is it the people leaving? Is it the business environment, why people are leaving? And the business environment is because of people leaving. Yeah, very, very clear. Erica, would you like to follow up on this?
Yes, thank you, Tobias. So this was a very good overview of the main challenges to economic growth in the region. But let's now talk about European integration. Do you think that the integration process of Western Balkans into the European Union will increase its speed after the COVID-19 crisis? And what is, in your opinion, the role of the private sector in this integration process? So I would like to hear Agyan perspective that might be a more policy perspective first. I think you are still muted, Agyan. You cannot mute yourself. Okay. Can you please help Agyan to unmute? Okay, so Agyan is not.
Here I am.
Perfect. Thank you so much.
Seems that I have some difficulties with technical agency. Maybe I would not like to hear, but yeah, thank you, Erika. Yes, EU integration process is something it's kind of an anchor for the Western Balkans region. And as you asked, I believe, is it going to speed? I'm not sure, but is it going to be maybe more challenging, especially now when we are all aware on the circumstances of the COVID-19? I'm quite sure. But on the other side, I believe that at this period, we should all focus on the essence of the very EU integration process, meaning that concrete developments, concrete reforms in regards to the first of all, rule of law, judiciary, legal adjustments, but also introducing different initiatives as per EU best practices to the region is crucial. Having in mind, first of all, financial crisis, and now we are all witnessing the new COVID-19 crisis that showed how vulnerable we are, but on the other side, how through cooperation among ourselves, we can really achieve many different, let's say, successful stories together. And in this regard, I would like to mention regional cooperation, first of all, having in mind that, for example, when it comes to regional cooperation and in general, average regional youth unemployment rate in 2020 was 35%, which is more than double than the European Union rate of 16.9%. On the other side, we are having 51% of young people who are worrying about employment. But in the same time, we are having young people from the region as the key supporters of the EU integration processes. And therefore, having in mind that youth constitutes more than 20% of the overall population, let's say in Western Balkans, I believe that should be the main reason to including young people in discussing all of the important topics and developments that are tackling their lives, having in mind that 20% of overall population is not something that we should forget, and definitely not speak about it as the future of the region, future of the Europe and similar, but rather focus as we as young people are also the present. In that regard, having in mind that through cooperation, I really believe we can solve many different things. I would like to stress Balkan Barometer, RCC's Commission annual public opinion poll, which states that 61% of youth aged 18-24 tend to agree that what brings Western Balkan citizens together is more important than what separates them. On the other side, 43% of this group would consider as a good thing having people from other parts of the region coming to live and work in their economies. And that is something that when it comes to EU integration process and is it going to speed up or not, we should think of and really utilize young people from the region, their innovative ideas, solutions, as someone mentioned earlier, I believe Slobodan, and really bring them to the table together with policymakers in order to maybe not achieve a faster EU integration process, but maybe to fulfill all of those obligations and criteria that we have to, but rather in essential way, and in that regard, having the essential participation of young people. Thanks, Erika.
Thank you very much. Again, this is very interesting, and I want to hear Edip's point of view because he might have a different view. So Edip, do you agree that reforms, regional cooperation, as well as involvement of young people are crucial for integration, as Agyan suggested? And do you think the integration process is going to move forward?
Well, first of all, thank you very much for having me here, and good morning to all of you. Now, I agree 100% with what was said by my colleague earlier. Indeed, if we involve the younger generation, younger population, and even if we involve the people in general, they would support integration 100%, I'm sure, given all these reasons that they mentioned earlier. However, we have to understand one thing, and that is that, the integration, EU integration is the two-way street, i.e. we need support from the EU in the first place, as well as from the countries in Western Balkans. And I'm afraid that, it is not quite clear if we have this kind of situation right now, if we have the right environment, both in EU and the Western Balkan. Maybe some countries are pretty much in advance when it comes to the EU integration because they don't have that much complicated government and everything. But given the Bosnia that is lacking behind, due to all these, people that are in control and they are not doing their job as they should. In fact, what happens is that, some of these, some of these people who are involved in EU integration or in general in coming up with the decisions are very much the first one that are, going against any kind of the proposal that are putting us in front or putting us on the track to the EU integration. So this is something that we need to work out, and I think that the best approach would be if we have some kind of joint initiative by all countries, which would be supported, directed, and controlled to some extent by the EU. Otherwise, I'm afraid if we go case by case, that most of these countries will not be seeing EU integration in the next 10 years or even more. Maybe some of them, yes, but in general, let's say for the Bosnia, I don't see that it is going to happen at this speed that we are currently developing that regard. However, when it comes to the private sector, I would say that the private sector is much better in a sense, and this is the reason, again, because the private sector has its own management that is not nationalist, that is not divided between different ethnic groups, and they are making the progress much faster to the EU. And they are sometimes, the engine of the change, that they are bringing the economic changes, some rules and regulations that are helping them, enter the EU market. So this is a positive sign. However, this is again limited because this is only available to some major sectors and big players in the market. So the overall situation is, I don't think that in the aftermath of the COVID-19 that will speed up in any way due to basically these things that are going on, the issues that are being raised in the EU in the first place, who are the holding basically the controls and everything, and besides, because of the governments that we are having in this region.
Thank you very much, Edip, for raising these important points. I want to go to Mihailo because Edip said, of course, that EU integration is a two-way process. And so I wanted to ask Mihailo, if the integration process does not move forward, can you, what is in your view an alternative solution for growth in the region?
Well, I think that we need to stop thinking inside of the EU box and start thinking outside of it. So the European Union is not the only thing that promotes economic growth. However, the European Union is the, let's say, some kind of international organization which usually consists of countries that are business friendly, meaning regulation, have high economic freedoms and stable institutions, especially judiciary. So it's not bad to be a part of that club. However, if you want to be part of the European Union just because you want to be a part of it, not because you want to have the whole socio-economical system that is connected to it, then we have a big problem. I believe that the governments in the region are pretending to reform, and the European Union is pretending to believe them. So we don't have any significant reform aim, except maybe in Northern Macedonia for the time being, that is pushing on the European agenda, making countries in the region more palatable for the European taste, basically making our societies and countries better. So how to increase something that is not rising by itself, it's a big problem. I believe that if the countries in the region became more similar to Switzerland or Iceland, which are not members of the European Union, then basically the EU will want those countries in, and we won't be talking about EU as the only way of moving our societies forward. We need a local impetus, and that is something that we're lacking. One, because although the young people are more pro-EU oriented than the older ones, more than 50% of voters in each elections in the countries and the regions are older than 50. So basically you need to tackle the problem of the very old, ultra-conservative traditional societies in these countries. And also the political elite in these countries are not too keen on becoming a EU member, because that will cut off most of the lucrative businesses they have in the way that Slobodan Franeta spoke at the beginning of this conference.
Thank you very much, Mihailo, for highlighting the importance of demography when we think about European integration is an element that we should always consider. Tobias, back to you.
Yeah. Thanks. I completely agree. The EU integration could be a big chance for the youth. However, it's very uncertain, and we're not sure how this develops in the next couple of years. However, one area which has been relatively close aligned to EU standards is, in some countries at least, the financial sector. And my next question would be twofold. On the one hand side, it would be, what potential does the financial sector have to perhaps, to a certain extent, stop the brain drain, to stop leaving, to stop young people from leaving the country? And on the other hand side, what role does the financial sector play in overcoming the COVID pandemic? How financial institutions managed to cope with it? And I would like to talk to Radislav about it first.
Okay, hello everyone. First of all, I want to thank all FEB members, and especially Franco Del Neri for the invitation. It is my big honor to represent the young generation of the Balkans and my country, Montenegro, in such an important event as the Trieste Eastern Europe Investment Forum for East and for all of us. In the reference to the question, as a response to the COVID crisis, we have witnessed a set of measures, both from government and financial market regulators. So the government has adopted a set of measures to target industries affected by the crisis, such as credit lines to support liquidity, financial aids, tax allowances, reduction or delays of custom duties, similar sets of measures in all the countries. The example in Montenegro, there is the Insurance Supervision Agency that has introduced a list of recommendations that provided insurers affected by the crisis. So to postpone, reschedule, or reschedule the insurance premium payments. So or obtain travel insurance premium refunds. The Central Bank of Montenegro has also introduced sets of measures that provided debtors with the right to a moratorium on loan repayments, as well as with loan restructuring options. So this need for digitalization has been recognized before the crisis, but has been put into scope during 2020 and has been strongly supported since. So hence, by the end of 2021, the amendments to the law on the prevention of money laundering and terrorist financing are expected to be adopted, which would provide persons to be identified by electronic certificates and or by video call without physical presence, so allowing owners easier communication with banks and other financial institutions. So this can help. This this is the way. So furthermore, the new payment system law is to be introduced and will fully transpose the EU directives on payment services and internal market in the legal system of Montenegro. I'm talking about Montenegro in this case. So the mention would enhance digitalization in terms of security and protection of payments, ease of transactions, and new types of payment methods. So mobile and internet payments, something that we have in these developed countries. It should be also mentioned that the process of digitalization relies on the new format of biometric IDs that were introduced in 2020. So these are a couple of pros that we have during this crisis. The need of digitalization is bigger, and we are really trying to make profit out of it.
And Radoslav, just to follow up on that quickly, digitalization in this, do you think it could be some sort of creator of let's say, or it could limit the youth unemployment in these regions? Could it be a sector that creates many more places for people to work, especially in the younger generation, if it would be invested heavily in it?
Yes, I completely agree. When we arrive at digitalization that is important in the whole world, I think that the countries from this area just need to follow the steps from these developed countries. Basically, we just need to copy and paste. That's my opinion. And that will enhance, of course, everything, and it will give the youth possibility to improve. Because my opinion is that the young generation and the government actually can overcome this brain drain problem that was mentioned earlier by motivating us and assuring young people that are actually needed in the country of origin. So yeah, this is my opinion, and of course it is really important, and I really think that this can help in the future.
Yes. Slobodan, over to you. So you think digitalization in particular is something each and every country should embrace to generate more jobs and to keep people in the country?
Well, yes, definitely. I saw some positive outcomes after the COVID-19 pandemic, in sense that private companies started finally to embrace digital solution and started implementing them and using them, and that led to engaging a lot of young minds in creating them and being involved in those companies. So this is a positive outlook that is a positive trend that I'm seeing. Of course, there is a lack of institutional support at this moment, and it is something that government officials should be focused on in the future to establish an ambient or where young people, especially those who are interested in developing technological improvements for private sector, could benefit and be and push this region to become a more innovative hub of Europe. There are a lot of challenges in this field, especially if we are, I can tell about two in Montenegro and Serbia, I believe. In Montenegro, one of the problems is the lack of access to financial services, international financial services, in sense that people do not have any platform, especially small and medium enterprises, in which they can work with the world, but not using banks directly. For example, PayPal is not functioning in Montenegro. It is a big problem for several years. In Serbia, there was a problem, and I believe Mihailo can talk more about it, with freelancers, with governments wanting to retroactively tax freelancers, and some of the burdens that was imposed on these people are pretty high for what they are earning. So this is something that can be discouraging people of going into this field, and this is something that should find a lot of institutional support if we want to push more innovative solutions in private sector. So in general, I think this is something that can be beneficial for both private sector and government. And this is something that can bring, that can solve some of the problems we have in solving, for example, corruption, in sense that maybe we can start thinking about e-governments and how we can make data more transparent and accountable for public. So in that sense, I believe COVID-19 pandemic push these topics in front of a discussion, at least among people who are in private sector.
Slobodan, just to quickly follow up on that, because your point on taxation actually is very, very interesting. To be able to invest in digitalization and to embrace this transformation, a lot of investments need to be made, and this money has to come from somewhere. Obviously, if the taxation burden is too high, it backfires. But have you seen any changes in the investment climate due to COVID-19, or is it as pre-COVID, let's say?
Well, my opinion is that there wasn't a lot of change because of COVID-19 pandemic, but mostly because of political events in the region, because I believe at this point political turbulences are something that are causing changes in investment climate in negative way. So this is something that is now also very problematic, because it is starting to reignite some old problems that could move the region in backward instead of moving forward.
Interesting. I guess, Erica, you have another very interesting question, so I'll hand over to you.
Yes, thank you, Tobias. So we discussed the challenges of fragmentation, institutional flows, corruption, brain drain, and employment, and access to capital, of course. But as you all are part of the next generation of Eastern European, I would like to hear your thoughts, 2 minutes each, and I will start with Slobodan, on how you think you can contribute to a healthier, greener, more digital and inclusive society for Eastern Europe. Slobodan, you go first. Mihailo is the second.
Thank you. Well, in general, what I'm trying to do is to focus more on digital, green and sustainable businesses, and to promote something that can be done through blockchain technology, which I believe can accelerate development of not only financial sector in the Western Balkans region, but in general in the whole world. I believe there is a great use of blockchain technology in many areas that can be very, very good implementation and can move private companies forward. So in general, that is something that I believe we should focus, although I understand it is very challenging for this region at this point to think about it. But in general, I think the region should become something more of early adopter in new technologies if we want to push it forward, and if we want to bring young people, if that is intention, to bring young people home so they can further contribute to the regional growth and prosperity.
Thank you. And how would you increase the awareness of the benefits of the technologies, and also how would you increase the possibility for training, because the access to technology comes obviously through training?
Well, what we are doing now, or we are starting that actually officially in September, is that we are starting a program that is called Decentralized Future, a program which will focus on providing educational and other tools for private and public sector in embracing this technology, and so they can start understanding benefits and how can they use it. I would like to see Western Balkans governments more going toward the electronic version, let's say, and putting more data transparent, and so they can be accountable for everything they are doing, because there is a lack of it at this point. But in general, this is something that I will be focusing in the next years in providing education and tools for private companies mostly, but also for public sector in embracing these new technologies.
Thank you. That would be very helpful. And Mihailo, can I ask your 2-minute thoughts on how you contribute to a healthier, greener, and more digital inclusive society?
Well, thank you for this question where we could talk about for hours and hours, I believe. So let me be short. On the first topic, I think that through my work at Liebeck, where we analyze public policies that are proposed by the government or non-government entities, and by pointing out to flaws in them or good sides, whichever happened first, basically we believe that we provide some kind of a service to a wider society, because then some of the bad solutions can be stopped during the legislative process, or some good solution could be swept better through the public administration. However, the second very important way how something like this should be tackled is through media and the meta-narratives. People do not usually believe in the data. People believe in stories. So basically we need to be there, and I hope that we are creating this through our media portal and by being guests to widespread Serbian mass media, providing the meta-narrative of optimism, of reform, of change, and of better future.
These are obviously important points, but you talk about the public policies, and I wonder how would you tackle the problem of implementation of the policies? Because something is having a policy, something else is an implementation challenge.
There are twofold problems here. One is the low capacities of the public administration, on which we are working for, because we organize courses for public administration workers in areas that we believe they lack their competencies. For example, the way of understanding of the policy process itself, on the way how public documents are to be properly analyzed using econometric techniques, etc., in order to provide the best possible solution, and how to why for it. And also we have the problem of democracy. Serbia has a regime that has, for the first time since the democratic changes in the 2000, has been described by the Freedom House as a hybrid regime. So the government in power is not really too keen on cooperating with out-of-government groups and service providers. They can be paranoid, which we have seen, although they have a good standing among the international community, mostly because of their lax stance on Kosovo and buying a good profile by providing enough vaccines for not only the population of Serbia, but for the whole region mostly. So we have much more problems than you could just see from a glance from abroad.
Yes, totally agree. But your point about skills building is nonetheless very important to raise at least the competences in the public sector. And I would now go to Ognian and ask him his thoughts about your contribution to the future of Eastern Europe.
Eric, microphone issue solved, and thank you for this question. Well, I believe that giving young people a chance to actively participate in decision-making processes related to either digitalization or environmental issues is a key step to be made. Youth can contribute with ideas, but also solutions. Here we have to have in mind, when it comes also to COVID-19, for example, innovative solutions and digital solutions for fighting the pandemic, bringing the health services closer to citizens, actually came from young people. And those ones who are leading creative startups, hubs, or owning their own businesses should be highly encouraged. And here I have to mention that it makes me very happy to see that a lot of international organizations and institutions are more and more recognizing the power of young people. In that sense, we need more innovative initiatives that would trigger youth innovation and engagements. And here I would like to mention Balkathon, which is the first ever Western Balkans competition event organized by RCC for the first time last year, and it continued this one with the aim to trigger development of digital solutions in selected categories such as tourism, smart cities, e-health services, and similar. And we can see that actually it was a successful instrument for young people, startups, but also small and medium enterprises to actually unlock their innovative ideas and on that way contribute to the better future as you asked. But on the other side, I believe that we also need empowered young people in labor market. And here I would really like to stress the importance of economic and investment plan of the European Commission, and especially flagship 9 in regards to youth guarantee, which is a scheme that would provide all young people after finishing their education to have the first and initial employments. But on the other side, hopefully we will have it in the region as well, in recent future, but also being a scheme for young people, I believe that it has to be discussed with young people. So actually that is the rationale we are having in RCC, and that is something on what Western Balkan Youth Lab project is actually working, and that's the essence of the whole idea, because all the topics that are affecting lives of young people should be actually discussed, but also later on led by young people. And previously you asked about implementation of policies, and that is something also that we are focusing on, having in mind that we do not want to see young people being involved only in policy making, but also later on in implementing of those policies, but also evaluating of those policies, so that we can build on later on better and more inclusive policies when it comes to region. And here, and I will finish with this so that I don't take much of your time, but really, as Tobias asked earlier, some of the other panelists, brain drain is one of the key issues that we are having in the region. And here is the question, how we can change the brain drain to brain gain and actually bring young people, especially those ones, well-educated ones who spend their studies abroad, to come back to the region and contribute, especially having in mind that staggering 71% of Western Balkan youth would consider living and working abroad. So this needs really multi-sectorial approach, having in mind that it seems that it's regional and systematic issue that we should all work on. But again, we have to work also on brain drain with young people to see what are the needs, our needs. Thank you.
Thank you, Ogyan. This is a very good point on having people returning to country of origin. Being an Italian abroad, I have this feeling. But I actually wanted to ask, how would you increase the participation of young people in institutional decision making? Because we were talking about the participation in the economy, but in the institutional decision making, considering also that institutions, there are many people that are from another generation, but also the majority of the population is aging. There is a demographic problem that we mentioned before. So how to break this circle and increase the participation in institutional decision making of the youth?
Thank you, Erika. Great question, and actually, that's not an easy task to do, definitely. And here we would need to count on the openness of the governments from the region, first of all, and also to rely on the mechanisms, both formal and informal ones, that are existing at the EU level. And in that sense, having in mind institutional policy making, for example, EU Youth Dialogue as a principle or as a mechanism of including young people to discuss laws, strategies, action plans to different topics, as you asked on the very beginning, related to either digitalization, green agenda that now we are having for the Western Balkans, or maybe health, is something that we should focus on. But still, EU dialogue really needs quite a lot of adjustments to the region, and having in mind the context of the region, because we are fully aware that something maybe that is working at the EU level would not maybe work in the Western Balkans. But still, the principles and the values that those mechanisms are having is something that we should really focus on and try to adjust it to the region, and then include as much as young people as possible. And I have to say that within Western Balkan Youth Lab, we have actually created it, and the name of the project is actually the new innovative mechanism of policy making. And I have to say that for now we are quite satisfied with the process, even though it's a long-lasting process, and hopefully by the next year we will have quite concrete results to share with the public, in sense of what are actually the policies that have been created, institutional ones created by young people together with policymakers. Thank you, Erika.
Thank you very much again for these thoughts. And I want now to go to Radislav and hear his thoughts about his contribution as an economist and as a person working in the financial sector to make the region more healthier, greener, and more digital and inclusive.
Yes, so first of all, I would like to mention being a citizen, respecting the rules provided, like so-called citizen awareness. We are all forgetting that, I would say. Those rules are really important. Then another step is to bring that experience from abroad to your own country. There are so many people from Montenegro and from the region, including myself, that are studying in the EU countries. And I think this can be of the massive importance of developing of a new, healthier system, let's say. Another way is also, and it's really also important in my opinion, is a better connection with foreigners living and working here, so-called expats. And also my experience in investor relations and corporate governance showed me how things are different in our area, and showed me that there's so much space for improvement, like investments based on environmental and social and corporate governance principles are crucial. And at the end, the one that I also mentioned before is digitalization. This can be made by just following the steps, what I said also before, following steps from the developed countries and follow EU standards, let's say.
And thank you very much.
Thank you.
Do you think you can help converting like the brain drain and having people coming back to the region from abroad?
Yeah, as I said before, I think this is the main task for the government, and the government should basically motivate us young people to come back, and then provide importance of us, let's say. Young people have to have this feeling that they are important in their own country. So this is the way.
Thank you for the suggestions, Radislav.
Thank you, Eric.
Last but not least, I would like to hear Eric's view on what we've discussed during this past 10 minutes about how to make the region healthier, greener, more digital inclusive.
Well, quite many things have been mentioned, and I think the last point that Radislav mentioned just now is the will or the readiness of the government that is the main issue here. I mean, let's be honest, the young generation, young people, young students from the regions are winning many competitions when it comes to the education, to some extent, winning the innovative solutions, but they are not given chance to implement, to use these, to advance this knowledge and bring it further. And this is basically the lack of incentives from the government, which needs to be changed. Now we can talk about the green, green solutions. We can talk about digitalization, but unless and until we have the incentive from the government, sort of, at least some kind of legal and regulatory, framework that would facilitate the development of these sectors, I think it is going to be a very, very daunting task for the individuals, unless they have some kind of, bigger investor support from the overseas. But again, this brings us to the issue of the whole investment. Why some of these regions are, avoided is because of the lack of transparency, political instability, lack of rule of laws and regulations, and doing business in many of these countries is at the bottom of the EU. So people don't want, the investors don't want to get in and support these projects because, it's not just about the money that they are investing, but at the same time, they are losing so much time. For example, in Bosnia, you need like 30, 40 days, even more, just to open the company, which is, nonsense. If we have the digital approach, to submit the documents, to prepare the documents, and open the company, it would be much easier, like we have in some countries. Now, I mean, the funny thing is that, I'm talking about the Bosnia in particular. The funny thing is that we still need to do many things manually. We need to go to the front office. We need to bring some kind of crazy certificates, documents. Even though if you show your ID, they're still asking you for some kind of birth certificates and things like that. And even though everything is already there in the system that we have, what is called the CIPS, CIPS. And it should be integrated all over the country. But unfortunately, we are still, walking from the office to office to sort out the simple things. Now, if we are unable to do this one, I mean, and this system is already implemented for more than 10, 15 years, I don't know exactly. If we are not able to operationalize and, put this one in the right view, to the right use, how we are going to come up with the new solutions like we are talking about here, having like digitally opening the account, over the video calls and things like that, and sorting out the registering companies, paying the taxes completely online, filling up the taxes and so on and so forth. So obviously what we are faced here is something that, the authors Echimoglu and Robinson are talking about, why nations fail. They fail primarily, according to them, because of the excessive institutions, extractive institutions. So this is what we have in majority of the Western Balkan countries, i.e. that the government, the apparatus of the government, this bureaucracy is taking too much, space and too much of the GDP, and we cannot develop in that sense because we are wasting much of the time. At the same time, our institutions are, instead of being inclusive, they are exclusive. So this is the combination, according to the authors, for the failure. So unless this takes place, I mean, some kind of incentive from the government, we are not going to see any significant change. But definitely the young people, if they are involved, like we see it, like we heard from the other people, if they are involved, I'm sure that they contribute significantly, not only in producing some kind of the policies, but also in implementation and evaluation state. I've been part of the young group that is supporting parliamentary people, but the funny thing is that, even though we do the whole job, we prepare the documents, the only need from them is basically to pass it to the government and make it into law or something like that, but they are not doing that one. So it shows, I mean, they don't have any kind of responsibility. There is no any kind of, due diligence on their part. And this is something that is significant.
There's more to do.
Yeah, thank you.
Thank you very much, Edib, for sharing your thoughts with us. I believe that we have already had many good suggestions to eliminate barriers to participation in decision-making, stop brain drain, increase digitalization and skills building. But now I want also to give the possibility to our audience to make questions. So I encourage everyone to write a question in the chat box at the bottom of the screen, and Tobias and I will pick on your questions and ask them to our speakers. In the meantime, I don't know if we have already any question in the chat box, but Tobias, I know that you had a question for our speakers, taking our privilege of the chairs. I think that we cannot hear Tobias. Okay. So in this case, I will.
Now it works. Sorry. Just
okay, no
took
problem.
us a while. My question is, and that's a question that I come across a lot in the Western Balkans. I mean, the use of cash is still extremely high, and there's obviously benefits, corruption benefits, the black markets and so on. So I was just wondering, do you see this changing in the younger generations? Are they adopters of, digital payments, contactless payments, and so on? And how do you see this whole thing of, using cash developing in the future? I'm not sure who would like to answer that of you. Yeah, Edip, if yeah, please.
Yeah, thank you. I wasn't able to unmute myself at first. Well, I recently actually, given this, the changes in the cryptocurrencies that took place in last 20 days, I wrote a paper for the Al Jazeera, Balkans, the portal. And one of the, basically, the bottom line is that what I'm saying there is that the cryptocurrencies are there to stay, for sure. The only way is that, how the governments are now introducing the central banks cryptocurrencies, that they are trying to come up with these things so that they have control. Because the money is big issue for every government. So what I'm saying is that someone also mentioned that we need to basically adopt the technology as soon as possible. Unfortunately, this is not taking place in the region very much, but I think that is the future. We are going to have the sort of cashless society. In one report in Singapore that I've seen, the title was that the cash is dead. And indeed, I believe that, one of the major results of the COVID-19 would be that we are going to move more towards the cashless society in every way that is possible. How is going to be done? Are we going to still stick to these kind of credit cards? Definitely they will be there, but I'm sure that the new technology, new ways of the payments would be developed, as we have already so many, like in China, I forgot that the name of the payment. In the US, you already have the Apple Pay and so on. So from that point of view, I believe that, young generation, they are highly educated in a sense when it comes to technical issues, and they are more inclined. The problem is, of course, this older generation that they are still skeptical to the use of even the ATM machines, and I mean, they are not skilled, or they are not that much aware of that. But for the generations to come, I think we are going to move significantly towards the cashless society.
Yeah, that's a very good point. We did a study a few weeks ago, and we determined this only in Serbia. You have a few billions of euro, which is somewhere in the system being held either in cash or somewhere else. And this is actually money that could be invested or could be lent to SMEs or different companies, which would increase economic growth. Hopefully.
You just reminded me of the case of Bosnia. You see, in Bosnia we have around 12 billion of the savings in the local banks. Okay, and that is the money that is idle, and the government is still borrowing from the World Bank. And I was at some point saying, don't go to the World Bank, don't go to the IMF. Basically, try to make the program, but of course, this is not in interest of the government, because they need to change the many policies. But you see what happened. This government of the Republika Srpska borrowed at the London Stock Exchange at the rate much higher than they should be borrowing from the even local companies, local financial institutions, which is crazy, But no one is. I mean, that's like they came to the deaf ear, But what I'm saying is that we have significant amount of saving that could be utilized. Even though we have this pandemic, we have the lack of investments and so on, we could turn our faces, our focus on the local savings from the countries and arrange the system. There are many ways how it can be done, but we don't have time to discuss about that.
Yeah, that'd be a very broad one. Let's put it that way. Erica, do you have another question?
I will use again my privilege of being the chair to raise another question, but I still encourage everyone to make their questions now in the chat box. So in the meantime, we mentioned that the EU project is a two-way process, and in my work at IISS here in London, we've seen China's massive investment projects in the Western Balkan as part of the Balkan Silk Road, the regional segment of China's ambitious Belt and Road Initiative, and also rising Russia's influence. So I wanted to ask what you think. Do you think that the EU integration can lose steam in the face of these developments? And what is your view of the role of foreign investments for the prospect of economic growth and development in the region? And maybe Radislav can have a view on that. But feel free to chip in if you want to.
Yes, of course. So what, in my opinion, is essential for Montenegro, I will talk about my country, so is that when the foreign investment come, it is to direct those investments towards projects that benefit the overall growth and integration with the EU. The EU, acting together with major international and national financial institutions, has made further financial support worth more than 5 million to develop infrastructure in the whole area, all the region. So, but also diversification also has its importance, and well-organized tendering procedures to achieve it with a close look at these ESG rules that I mentioned earlier. So the region by itself was always attractive to the West and to the East. So China, Russia, Turkey, they're always present as potential investors. So I think that we have to use this opportunity for the well-being of our people, first of all, but always keeping in mind the priority of joining the EU. I know that that it is evident that also in the EU there is so-called enlargement fatigue, but I would say that people here are also tired of waiting. So yes, that's my answer.
Thank you very much, Radislav. Is there anyone that wants to add on what Radislav said? Mihailo?
I might add that even though we still see the influence of Russia and China in the region rising, at least the Chinese one, more than 80% of total FDI in Serbia, which is the main recipient in the Western Balkans. Basically, Serbia receives more FDI than all other countries in the region combined together. More than 80% of those FDIs come from the EU. Also, we have countries in the region that invest in Serbia, so the Chinese and the Russians are quite minuscule. However, the Serbian government, due to its propaganda purposes, tries to portray Chinese loans, state-owned enterprise loans to Serbia for infrastructure projects and as investments. However, these are just loans. The Serbian government needs to repay them in the future years. It is not something that is free. So we have like on different layers here. One is the economic issues. Will the Serbian government be able to repay these loans? However, for the time being, there is around 8% of the total Serbian debt that is owed to the Chinese government, which is quite low. Although we believe this will arise with new infrastructure projects, for example, the metro in Belgrade, etc. And will these infrastructure projects create an impetus for further economic development where they have been made?
Thank you very much for this contribution. Tobias, do we have any questions?
Currently not, but I mean, I have many questions, so very happy to chat to all of you. Following up on what I said before, I would like to focus a little bit more on the private sector, because obviously the policy should be guiding the private sector to generate economic growth over the long term. And you mentioned several times, currently in many of the Western Balkan countries, we have a very unfriendly business environment. I was just wondering, do you have any concrete solutions on how this can be improved? Obviously, government policies would be one factor, but also maybe with a view on cooperation between the different Western Balkan countries. Could this be a potential solution where you would create, let's say, some sort of technology hubs in a certain area, and then try to get companies to move from different areas to this hub? could this be a potential solution? I mean, Slobodan, maybe you have a view on that.
Okay, I'm now unmuted. Well, yes, I believe there is a report by the EU that is called Untapped Potential for the Western Balkans, because the cooperation between those countries could significantly improve not only the position of private companies but also of young people in general. And this is something that is very important, because it allows young people to be more involved and to go more in private ventures and to try putting their ideas on the market. And I believe this cooperation could be very beneficial. What can be obstacle at this moment is that most people, and this is something that I believe Ognjen spoke about, are trying to leave the region. And the others who are staying here most probably will be unemployed, and thus more eager to join political parties and political activism, in sense that they are being radicalized by political events here. And this is something that is slowing region in its progress, in sense that usually people from, although these countries share common history, knowledge, and culture, language and culture, there is divide in political sense, and that is what in some way politicians are using with young people, and especially those people who are staying in the region. So this is something that can slow the progress, but I believe that if we manage to go over this obstacle, and if we manage to solve this, I believe there is a great potential for this region to be what you said, innovative hub, and something that will be a significant contributor to European economy and competitiveness on the global level.
Do we maybe have already case studies or examples we could talk about? Because I mean, I work in the financial sphere, and the EBRD was promoting for a while at least, I mean, the Southeastern European link, so which is a linkage between different stock exchanges, just to increase the liquidity, and which resulted actually in positive impact on these different markets. So I'm just wondering, an example of where cooperation has worked out very well, especially with a view on the private sector.
Mm-hmm. Well, in general, mostly those case studies you're mentioning would be in, let's say, descriptive way, because there is also a significant lack of data that can support anything that we are talking here. So in general, I believe that there were a lot of projects, and sense and the young people who were organized themselves in some communities that were working together and are still working to promote a better region. One of them is, of course, Ognjen's organization that is working in the region. There was some private initiatives by young people in the past, in the form of Western Balkans Young Leadership Forum or something like that, in which young people try to engage more in overcoming the obstacles I mentioned. But in general, in sense of private sector, I believe there is not a lot of these actions at this point, although there are some ideas and some projects that are slowly appearing on the surface, although they are not that popular at the moment. But I believe that this is something that we may see in the future if we understand the potential of it and why it is important, especially in this matter that I mentioned about trading barriers and how that is afflicting our everyday operations. And this is something that any company in the region, especially because the structure of companies in the Western Balkans region are mostly small and medium enterprises, are feeling very, very hard. So this is something that may be a common point where those organizations and companies can come together and start working.
Yeah, good point. I was thinking, it creates synergies. It costs a lot less after all. So it just, absolutely makes sense. And I've also read the report by the EU. I would have a few more questions. Yeah, please, you go, Erica.
Yes, we have now a question from the audience, and this is about the topic of migration of young people and more developing countries, because the reason related to salaries, healthcare, public administration, etc. And so the question is, what do you think the political issues between those countries? Do you think that is also a reason of emigration, the political aspect? And so reading some newspapers, this person says that that this is because of the tensions in the Balkan area, the political tensions. So what do you think about this problem of the political issues driving the immigration? Is there, yes, please, Mihailo.
Thank you for this question. Although I might be repeating myself, I believe that the younger generation has been born during the very turbulent times of the dissolution of Yugoslavia, bloody wars, genocide, ethnic cleansing, and all other jolly things that the Western Balkans has been known for. However, I believe because of that traumatic experience, the political situation and the tensions between countries today are a very, very low level of importance for the younger generations, because we've seen worse, and we don't think that current political tensions are something to worry about. However, I believe that people of my age or younger have lost optimism. They do not believe that in 10 years' time, the situation in their countries of origin will be better than it is today. They do not believe that their children will live a better life than they do. There has been a very strong outburst of positive energy after the democratic, let's say, transition in Serbia in the year 2000 after the fall of Milosevic. However, it was cut short by the murder of the first democratic Prime Minister Zoran Đinđić in 2003. That's very easy when you take a look at birth rates in Serbia. After the year 2000, they increase. After 2004, they decrease. So that is very, very strong way how optimism has a very strong impact on our overall lives, and also decisions where do we want to live and raise our families.
Thank you very much, Mihailo. I have also another question about the challenges of access to finance. And I think Edib could answer this one, since it is about the challenges of the ethnicity differences and related challenges in access to capital.
Well, can you hear me?
Yes.
Okay, thanks. Well, when it comes to the access of the, again, this is very much related to the overall situation, in particular in Bosnia. I can talk about Bosnia because there are significant diversities between these two entities, Republika Srpska and Federation, of course, and the operations are very much limited. So given that fact, what we have at this stage is many times, the financial institutions that have a small market to operate. And this brings up the cost of these financial institutions to provide the financial solutions. The access to capital, then it is lower to the overall people. However, we have also the rising trend, and for many years, especially after the 1990s, we have rising trends of the microfinancial institutions that are, taking care of, certain, how to say, groups of the people, of the population, as for example, like these retired people. They have even the microfinancial institutions that provides to these people. However, in general, this is again very much limited to the the mortgage loans for the leasings, for the purchases of these, like cars, like the apartments and similar things. Unfortunately, very few or very small amount is going to the investment. So the financial institutions are not. I mean, this could be on couple. There could be a couple of reasons for this one. First, that there are no significant or good projects that are coming in for these financial institutions. Second one is that the overall situation, the instability of the country, political and all these rule of law, the protection of the rights of all these parties that are participating in the market is another issue. And finally, of course, the financial institutions want to play safe. That is the reason why we see that in recent years that the fees, service fees are increasing significantly in the market in every way, which is a quite negative trend. So we are in much worse position than the EU countries in many ways, and this is due to the overall situation that we have.
Thank you very much, Edi. I want to ask another question, because I am the only woman in this panel, but I know that there is a long lineup of speakers and there are many other women. But I wanted to ask about the gender gap and what actions you think can be taken to improve the gender gap. And I want to ask the question to you all, whoever wants to answer, because it's a collective effort that also men need to take a part in it. Does anyone want to start? I know it's a difficult one. So the one. Oh, again.
Thank you, Erika. And actually, we are approaching to the end of the Youth Forum, and I would really like to see that maybe also in further editions there will be Youth Forum prior to the main panel discussions, and I believe that this is really a good message to be sent to the audience. But in the very same time, maybe for the following ones, as I'm sure that you will have it, it would be really great also to have more women or women included in the panel as well, and to hear their perspectives as well, having in mind that the high importance of the issue that you mentioned, including women in first of all, and supporting different initiatives in regards to women and entrepreneurship, women employment and similar, but also having women on the high policy ranking positions in institutions, but also in financial institutions as well, is of high importance. But and in that regard, I would like to say that the region has its, let's say, the key resource of the region is youth, but also women, but also vulnerable groups that we are having, which really need additional support from the governments, but also civil society, but also financial institutions. Here I would like to mention network of women in STEM, science, technology, engineering, and mathematics, that RCC launched this year. Having in mind that, and I have to just share a personal view, that I was amazed on how many successful women, young women we are having in the region that are dealing with engineering and mathematics, and that are actually having innovative projects in that regard. And in that sense, would highly encourage everyone, and following the discussions that will be today, that special emphasis shall be always made on youth, but also all different subcategories of youth, such as women, vulnerable groups, and similar. And maybe just as an idea for the future editions, or maybe additional events that you might have in mind, that I know that organization is quite open and always willing to have this innovative approach. Maybe even some follow-up as discussion of youth and women would be quite relevant.
Thank you very much again. Thank you. This is very encouraging. Unfortunately, our time is running up, and we need to conclude our youth forum on the future of Eastern Europe today. We heard the next generation's point of view on institutional problems in Eastern Europe, the challenges of COVID, the EU integration, and also the solutions for the future. And I will have to report the highlights of this discussion in the concluding session in the afternoon, and give the chance to policymakers to hear your reflections and suggestions. So I want to thank everyone who attended this webinar, those who made questions. Thanks Tobias for facilitating the discussion, and most importantly, thank thank you to all 5 speakers and for your contribution and participation. And now back to the studio.
Thank you. Thank you, Erika. And thank you to Tobias. I think you made a great job. So young chairs discussing with young panelists.
Franco, may we launch an applause to this young,
thank you.
Young speakers, panelists, and chairs. Thank you very much.
Very good idea. So I think it was a good experience, and we have to replicate this in other occasions. I want just to pick up one thing which was said during the discussion. I remember probably Ognian, and saying that if there is a long-term consequences of a decision taken today, so the young generation should take part of that decision, because in the long term they will be bringing the consequences of that decision. So I was thinking about Brexit, but I mean, we will discuss this in another occasion. Thank you to everybody. Hvala svima, and see you next time. Gianni.
So yes, thank you very much, everybody, because it has been really a very interesting session. And if the next generation, I would say the current generation actually, but if the next generation is this generation, well, there are good reasons for optimism, and there is room for improving also in those regions the social, political, and economic situation. So, what to say now? We have a short break, which is not actually a break, it is a bridge, which is bringing us to the first webinar of the forum that will take place in about 25 minutes, 11:30. And the title is The New Geopolitical and Business Context for the Post-COVID Recovery. It will be a very challenging, a very, very dense, a very important session, and we'll see you in about 25 minutes. In the meanwhile, please stay tuned and give a look at 2 very interesting interviews. The first one is with Anna Gervasoni, Director General for the Italian Association of corporate finance, the private equity and private debt. And the second one is with Michele Morganti of Generali Investments. So stay tuned, and anyway, we'll see you in about 25 minutes. Thank you very much.
It's a pleasure for me, for the Italian Private Equity, Venture Capital and Private Debt Association, AIFI, to be here. So I think it's a very crucial moment to reinvent our economy. And all of us, we are hoping that the pandemic could be soon over control. But now we are facing the need to define a new context in which the European economy could return to growth. And let me look at the SMEs first of all. In this framework, it's important to reactivate a virtuous cycle, bringing investors, both private and public, to invest in real economy in order to give fuel to SMEs and having a positive impact on innovation, sustainability and job creation. Job creation is central, is crucial, and let me give you a figure. In the 2019 in Europe, 10.2 million European employees worked in private-backed and venture capital-backed companies. So this number is the 4.3% of the total European employees, and it represents the same number of the Portugal or Sweden's workforce. So very important number. And to realize 10 million, 20 million of employment in those SMEs, very innovative, with a very strong commitment to realize innovation path to growth and to realize sustainability goals. We have to work all together, and we need a real capital market union. So why? First of all, because international funds, European funds, have no nationality. So in every country, we are working together, local funds and international pan-European funds. I define them stateless because they raise capital everywhere and they can invest on a global scale in order to pick up winners, future champions, in order to give money, advisory to entrepreneurs, and to work together in this very crucial transition progress. So I hope we can strongly define a new framework context, a new legal context, where we can realize a strong new European community with more private finance, working together with public finance, of course. Thank you.
Good evening, everyone. I'm glad to be here at the FEBAF event once again. I will tell you about the most relevant changes for the insurance industry group post-COVID. The global pandemic and the consequent health and economic crisis have forced huge social changes to adapt to the new normal. Two key elements that have been pushed by the pandemic crisis as levers of change are the fast acceleration of technology and the focus on sustainability, which is key in restoring a safe growth which takes care of the increased inequality. Concerning technology, COVID-19 epidemic has increased the audience of technology users, further boosting the tech-changing trends, accelerating the customer adoption of digital-based interaction models, and forcing insurers quickly to adapt to the new normal. InsurTech businesses are extending the application of innovative technology, gaining competitive advantage, as well as potentially valuable opportunities for partnerships with incumbents in this evolving scenario. How quickly incumbents adapt to these inexorable market changes will determine the size of their share in the future industry of insurance. Among the main objectives, improve risk selection, improve customer behavior, and among the main area of intervention, we have operation efficiency, cost reduction, digital distribution, and customer satisfaction. Among some examples, we have telemedicine and addressing client expectation, which are increasing focusing on protection. Concerning sustainability, the EU Recovery Fund and the Green Deal are accelerating the digital adoption made during the crisis, rendering the economy more sustainable. Green technology is also growing faster, representing big opportunities for institutional investors and public saving investments. In particular, pandemic has highlighted the need for strategic and shared prevention plans, preparing for climate change, which is a global threat. Such commitment has become stricter and more broadly shared. But more importantly, the European community has chosen to share the ecologist project to refund its economic integration. Part of the EU recovery will be funded with green bonds and channeled through green initiatives. As a consequence, financial regulators are introducing climate risk disclosure as mandatory, and biggest international institutional investors are making sustainability the new standard for investing. Insurance corporations are setting ambitious ESG targets with increasing focus on social dimension. The sustainability and ESG trends are reversible and will soon involve Southern European countries, which will have to organize and equip themselves as soon as possible to be ready for the new challenge. The sooner this new trend will be embraced in SEE, and the sooner local players will be competitive also at the European level. Generali Group has launched a crucial phase of definitive internalization of ESG criteria in business processes and investment processes. We strongly believe that the new frontier of ESG investing is focused on companies, the improvers, that show they want to become more focused on the issues of sustainability with the aim to scaling up the ESG score system. Generally, given its strong presence in Eastern European countries and ongoing development process in terms of sustainability, hopes to make the right contribution to the future ESG transition of the insurance and asset management business. Thank you very much.
It's a pleasure for me, for the Italian Private Equity Venture Capital and Private Debt Association, AIFI, to be here. So I think it's a very crucial moment to reinvent our economy. And all of us, we are hoping that the pandemic could be soon over control, but now we are facing the need to define a new context in which the European economy could return to growth. And let me look at the SMEs first of all. In this framework, it's important to reactivate a virtuous cycle, bringing investors, both private and public, to invest in real economy in order to give fuel to SMEs and having a positive impact on innovation, sustainability and job creation. Job creation is central, is crucial, and let me give you a figure. In the 2019 in Europe, 10.2 million European employees worked in private-backed and venture capital-backed companies. So this number is the 4.3% of the total European employees, and it represents the same number of the Portugal or Sweden's workforce. So very important number. And to realize 10 million, 20 million of employment in those SMEs, very innovative, with a very strong commitment to realize innovation path to growth and to realize sustainability goals. We have to work all together, and we need a real capital market union. So why? First of all, because international funds, European funds, have no nationality. So in every country, we are working together, local funds and international pan-European funds. I define them stateless because they raise capital everywhere and they can invest on a global scale in order to pick up winners, future champions, in order to give money, advisory to entrepreneurs and to work together in this very crucial transition progress. So I hope we can strongly define a new framework context, a new legal context, where we can realize a strong new European community with more private finance, working together with public finance, of course. Thank you.
Good evening, everyone. I'm glad to be here at the FEBAF event once again. I will tell you about the most relevant changes for the insurance industry group post-COVID. The global pandemic and the consequent health and economic crisis have forced huge social changes to adapt to the new normal. Two key elements that have been pushed by the pandemic crisis as levers of change are the fast acceleration of technology and the focus on sustainability, which is key in restoring a safe growth which takes care of the increased inequality. Concerning technology, COVID-19 epidemic has increased the audience of technology users, further boosting the tech changing trends, accelerating the customer adoption of digital-based interaction models, and forcing insurers quickly to adapt to the new normal. InsurTech businesses are extending the application of innovative technology, gaining competitive advantage, as well as potentially valuable opportunities for partnerships with incumbents in this evolving scenario. How quickly incumbents adapt to these inexorable market changes will determine the size of their share in the future industry of insurance. Among the main objectives, improve risk selection, improve customer behavior, and among the main area of intervention, we have operation efficiency, cost reduction, digital distribution, and customer satisfaction. Among some examples, we have telemedicine and addressing client expectation, which are increasing focusing on protection. Concerning sustainability, the EU Recovery Fund and the Green Deal are accelerating the digital adoption made during the crisis, rendering the economy more sustainable. Green technology is also growing faster, representing big opportunities for institutional investors and public saving investments. In particular, pandemic has highlighted the need for strategic and shared prevention plans, preparing for climate change, which is a global threat. Such commitment has become stricter and more broadly shared. But more importantly, the European community has chosen to share the Ecologist project to refund its economic integration. Part of the EU recovery will be funded with green bonds and channeled through green initiatives. As a consequence, financial regulators are introducing climate risk disclosure as mandatory, and biggest international institutional investors are making sustainability the new standard for investing. Insurance corporations are setting ambitious ESG targets with increasing focus on social dimension. The sustainability and ESG trends are irreversible and will soon involve Southern European countries, which will have to organize and equip themselves as soon as possible to be ready for the new challenge. The sooner this new trend will be embraced in SEE, and the sooner local players will be competitive also at the European level. Generali Group has launched a crucial phase of definitive internalization of ESG criteria in business processes and investment processes. We strongly believe that the new frontier of ESG investing is focused on in companies, the improvers, that show they want to become more focused on the issues of sustainability with the aim to scaling up the ESG score system. Generally, given its strong presence in Eastern European countries and ongoing development process in terms of sustainability, hopes to make the right contribution to the future ESG transition of the insurance and asset management business. Thank you very much.
a pleasure for me, for the Italian Private Equity, Venture Capital and Private Debt Association, AIFI, to be here. So I think it's a very crucial moment to reinvent our economy. And all of us, we are hoping that the pandemic could be soon over control, but now we are facing the need to define a new context in which the European economy could return to growth. And let me look at the SMEs first of all. In this framework, it's important to reactivate a virtuous cycle, bring investors, both private and public, to invest in real economy in order to give fuel to SMEs and having a positive impact on innovation, sustainability and job creation. Job creation is central, is crucial, and let me give you a figure. In the 2019 in Europe, 10.2 million European employees worked in private-backed and venture capital-backed companies. So this number is the 4.3% of the total European employees, and it represents the same number of the Portugal or Sweden's workforce. So very important number. And to realize 10 million, 20 million of employment in those SMEs, very innovative, with a very strong commitment to realize innovation path to growth and to realize sustainability goals. We have to work all together, and we need a real capital market union. So why? First of all, because international funds, European funds, have no nationality. So in every country, we are working together, local funds and international pan-European funds. I define them stateless because they raise capital everywhere and they can invest on a global scale in order to pick up winners, future champions, in order to give money, advisory to entrepreneurs and to work together in this very crucial transition progress. So I hope we can strongly define a new framework context, a new legal context, where we can realize a strong new European community with more private finance, working together with public finance, of course. Thank you.
Good evening, everyone. I'm glad to be here at the FEBAF event once again. I will tell you about the most relevant changes for the insurance industry group post-COVID. The global pandemic and the consequent health and economic crisis have forced huge social changes to adapt to the new normal. Two key elements that have been pushed by the pandemic crisis as levers of change are the fast acceleration of technology and the focus on sustainability, which is key in restoring a safe growth which takes care of the increased inequality. Concerning technology, COVID-19 epidemic has increased the audience of technology users, first boosting the tech-changing trends, accelerating the customer adoption of digital-based interaction models, and forcing insurers quickly to adapt to the new normal. InsurTech businesses are extending the application of innovative technology, gaining competitive advantage, as well as potentially valuable opportunities for partnerships with incumbents in this evolving scenario. How quickly incumbents adapt to these inexorable market changes will determine the size of their share in the future industry of insurance. Among the main objectives, improve risk selection, improve customer behavior, and among the main area of intervention, we have operation efficiency, cost reduction, digital distribution, and customer satisfaction. Among some examples, we have telemedicine and addressing client expectation, which are increasing focusing on protection. Concerning sustainability, the EU Recovery Fund and the Green Deal are accelerating the digital adoption made during the crisis, rendering the economy more sustainable. Green technology is also growing faster, representing big opportunities for institutional investors and public saving investments. In particular, pandemic has highlighted the need for strategic and shared prevention plans, preparing for climate change, which is a global threat. Such commitment has become stricter and more broadly shared. But more importantly, the European community has chosen to share the Ecologist project to refund its economic integration. Part of the EU recovery will be funded with green bonds and channeled through green initiatives. As a consequence, financial regulation
So, good morning, ladies and gentlemen. Good morning, buongiorno, amici e amiche. Good morning, everybody, for being with us today for this seventh edition of the Trieste Eastern Europe Investment Forum. Let me thank all the young panelists who joined us this morning for the first edition of the Youth Forum. We had a very interesting session dedicated to the young generation, well, to the next generation, as it's called in European terms. So, my name is Gianfrancesco Rizzuti. I will be today for a while together with my friends and colleagues to introduce our distinguished panelists during the whole day. It will be a very dense day, but a very interesting one. And let me also introduce, on behalf of the Italian Banking, Insurance and Finance Federation that has been organizing this forum for 7 years, let me introduce my colleague Franco Del Neri, who is with us today in the backstage, but he will soon get on the stage, replacing me, of course. But let me introduce also Federica Seganti, who is the Program Director of the Master in Insurance and Risk Management at the MIB Trieste School of Management, which is our traditional partner in organizing this prestigious event.
Yes, it is.
Federica.
It is. Hi. Thank you, Gianni, and it's a pleasure to be here to welcome all the ladies and gentlemen connected with our seminar, with our web forum. And it's a great pleasure to discuss with you today about the next generation, Eastern Europe, the role of investment and finance during the Trieste Eastern Europe Investment Forum 7th edition. And the topic is very challenging, and we have the chance to discuss about it thanks to a large number of European experts, academics, managers, and now it's time to start, I think, and to move to Trieste, where there are two important person that are the chair, the head of our organization. And in particular, it's a very great honor for me to introduce to you Professor Andrea Tracogna, Dean of MIB Trieste School of Management, and Mr. Innocenzo Cipolletta, the chair of FEBAF. And now I would like to connect to Trieste, where I think there is... okay. Hi, Andrea. Thanks to be here. Hi, Mr. Cipolletta. And Andrea, the floor is yours for your welcome speech. Thank you.
Thank you, Federica, and good morning to everybody. Welcome to this Trieste Eastern Europe Investment Forum, which MIB, Trieste School of Management, together with FEBAF, is hosting and co-organizing. And we are very pleased and honored for this. Unfortunately, as in 2020, we have to run this event remotely. Our hope is for the year 2022, when the situation will be back to normal, to host again the forum at our beautiful premises here in Trieste, the Ferdinandeo Palace, from where I am speaking. Let me just say a couple of words about the special link between Trieste, MIB, and the Eastern European countries. The city of Trieste has a long-standing tradition of cooperation, a common history with Eastern Europe, a tradition of trading, financial, insurance links and operations in the Eastern European countries. As regards MIB, we have, of course, a more recent history. We were established in 1988, but since the very beginning, we had a clear focus towards East. In 1988, we designed and launched our first master, the MBA in International Business, with a focus on Eastern Europe, at a time when the Berlin Wall was still standing very firmly, And when known of the following radical changes were even conceivable. Further, it has to be said that thanks to our geographic proximity to Eastern Europe, we have always attracted plenty of students from these countries, and in particular from Southeast Europe and the Balkans. What to say? Well, we have been leveraging on the relations with hundreds of students and graduates over these 30 years. And we can say that we have become privileged and direct observers of the many changes that have taken place in the last decades over there. I mean, and I refer to the establishment of new national states, to the harsh conflicts and wars fought there, the challenging economic transformations, the pre-accession and the accession processes to the European Union of many countries, and last but not least, the new recent challenges related to the pandemic and the post-COVID scenario. I would say that Southeastern Europe, the Balkans, Eastern European countries in general have become part of our school's microcosm. I mean, they stand apart from the rest of the world as they have become a laboratory of research and analysis for us. Analysis and research that takes place at different dimensions. Economic dimension, business, social, demographic, political, and of course also financial, as we will see and learn during this forum. And we are looking forward as MIB to taking part to the discussions in this forum. And we wish to all the speakers, the delegates, the participants, a fruitful exchange of ideas, of views, of practices. With the hope of meeting you again in person soon here in Trieste, we wish you fruitful participation and good work. Thank you very much.
Thank you, Andrea. And of course, all of us, thanks that next year will be face-to-face in Trieste. And now, Mr. Cipolletta, Chair of FEBAF, thanks, and the floor is yours.
Good morning to everyone. We'd like to welcome all of you for the participation to the Trieste Eastern Europe Investment Forum of 2021. It's also for me the first time I am here because I was nominated the president of FEBAF just a few days ago. And this forum will start this year earlier at 9:30 with an initial session dedicated to the younger generation. I was very impressed by the young panelists, which we have selected through an independent survey made in the Southeastern European region in the last weeks with the involvement of the local youth association. They discussed about the biggest challenges in the Southeastern Europe's economic growth, the integration process of the Western Balkan into the European Union, and the role of the private financial sector. They brought to our financial community food for thought with their amazing and useful views and the contribution of ideas for a healthier, greener, more digital and inclusive society. Growing inequality between generations has been exacerbated by the pandemic and has left many people in their teens, 20s and 30s feeling like they have got a raw deal. We must give an answer to their concern. Moving now to the theme of the forum, the 7th edition, let me say that the Southeastern and more broadly, the pan-European region is the new frontier of the continental economy and finance, but also, in large part, of the institutional building of the European Union itself. In the next two sessions, our consultant, Professor Kozarevich, will bring to us the results of the study on banks and insurance sectors, performed with data contribution from 13 countries, with very different political, economic, and social systems. An area that has become central to the unstable and conflicting multipolarity that today threatens international collaboration as well as international peace and security. The post-COVID recovery offers new risks, but also opportunities in relation to the restructuring of a global value chain, which have been heavily impacted by the crisis. These chains are in fact regionalizing, shortening, and becoming more resilient, thus fully investing the geostrategic location of the Eastern Europe and the Mediterranean area. And Italy is in the middle with all the risks that this entails, but also the significant opportunities. The Union has developed the policy of gradual integration of the country of the Western Balkans, but with stop-and-go delays, contradictory signals, and divergent visions. It is time to accelerate the process of unfinished business of Southeastern Europe. Capital market issue will be the theme of the fourth session, which will be developed with the substantial contribution of our partner, the European Bank of Reconstruction and Development, who play an essential and a strategic role in Eastern Europe and in the Mediterranean area. The need for a strong regional capital market and innovative solutions has never been stronger, and the role of public and private equity markets in the regions in financing the recovery is essential, together with the foreign and the local institutional investors. Space for growth are also evident for our Italian private financial sector. Most of these economies are characterized by differentiated and evolving banking sectors, a significant and widespread level of underinsurance, and still underdeveloped capital market. All elements that, combined with the presence of many Italian companies in the area, strengthen the prospects of our banks, insurance company, fund, financial companies that already operate in this area or intend to do it in the future. Finally, let me warmly thank the Minister of Finance of Montenegro for agreeing to attend our last sessions and all speakers involved in all 6 sections. In the last session, we will make the conclusions of the forum and discuss the role of financial community in the post-COVID era. We need to move towards the Eastern Europe policy agenda. Dear friend, there is a lot to do. The benefit that can be drawn from integration are high, not only for our business, but for the stability and the prosperity of the area. And we as FEBAF want to do our part of the job. Thank you for your attention. And now back to the studio.
Thank you, Innocenzo Cipolletta. Thank you, Andrea Tracogna. And let's say that both their speeches give very clear reasons why we've chosen Trieste for Eastern Europe, why Italy and Trieste are both that important for both the Mediterranean area and the Balkan and the Eastern Europe area. And that's why, as a FEBAF, we've been organizing these fora for a significant lapse of time, and we've been also facing the Mediterranean area thanks to our Mediterranean Investment Forum that will take place in the next few weeks or months. So let's now enter straight into the first session of our forum, and which is dedicated to the new geopolitical and business context for the post-COVID recovery. And how do we enter this very first session? We enter thanks to the speeches of Paolo Garonna, who is the FEBAF Secretary General, and who will be in Trieste with the chairman of the Generali Group, Mr. Gabriele Galateri di Genola, and they will be with us for a while, and Paolo Garonna will interview. There will be a sort of an interview on behalf of the community, which is represented in this case by Paolo Garonna, towards Mr. Galateri. And so, Paolo, I think that the best way is to leave you the floor and give you the word. Paolo, please. There must be some.
Particularly warm welcome to Dr. Galateri, who I'm sure doesn't need to be introduced. He has done amazing things in his curriculum, but he's now chairman of Assicurazioni Generali, a major insurance company in Italy, in Europe, in Eastern Europe, not only because of its origin, but also because the headquarters are here in Trieste, a few miles from here. By the way, let me echo what the previous speakers said about how nice it is to be in Trieste, isn't it, Gabriele?
Absolutely.
It's fantastic to be in this beautiful, it's one of the most beautiful buildings in Trieste, in Habsburg Palace, in the middle of a wood, a park, beautiful park. And so I echo what others have said about the prospects that next year, hopefully, many of you will be joining us, sharing with us the beauty of these premises. So I think we have the best location, the best speaker, and the best company for starting our conversation. So the first question, Gabriele, is what is your view? Give us an overview of where we stand in Eastern Europe and in the recovery post-COVID.
Thank you, Paolo. And let me thank all the organizers for inviting me. It's, as you said, it's a great opportunity to be in Trieste, to be in MIB, to be with you, and with all the other speakers. You see, I think that we are in a very, very interesting moment. And I would say that, I don't want to be excessively positive, but I would not have been 6 months ago or 1 year ago. But today I see really a moment that we have to take advantage of. I mean, Europe has proved to be a great organization, a great success after years in which there were a lot of questions concerning the possibility for Europe really to remain united, to confront such a critical situation like COVID. Finally, with the Next Generation EU, I like, the word of saying that this has been a game changer. Europe has become a different reality, much more secure, much more solidarity, much more solidarity with the other nations. So it has given, really the proof of what it should have been already since a long time, but what it is now. I think that for the Central Eastern European countries, this moment also can be very important. Those countries have benefited in an important way from the participation into the European Union, from an institutional and a political and economic point of view. And I believe that the Western Balkans are inevitably and hopefully and with great attention, at least from my point of view, become in the future part of this enlarged Europe. Europe has to expand, and the area of the Western Balkans is absolutely, for many reasons that, historical, cultural, business-wise, they're extremely logic to join Europe sooner or later. Some countries have done already some moves. Northern Macedonia has even changed the name to get ready to become part of Europe. Bulgaria and Croatia have entered the euro. The Schengen area is, studying how to open the borders. So there is a general direction that is definitely positive towards a Europe that will enlarge in this area. Of course, there are risks, and the risks should push Europe to really take this possibility seriously into consideration. Risks are other, operators, other actors that want to get influence in this region, and it's not a mystery that China has made important inroads in some of these countries with the Belt and Road program and projects. you all know, what happened in Montenegro, coming, financing, building, and then, in front of difficulty to repay a loan. And now, there is a question of what's going to be the action of China having some rights on some land. On the other side, Russia has been quite active in providing vaccines, the Sputnik 5, to several countries in the area. And again, it is quite obvious that this region is extremely important for Europe, but also for the equilibrium in the world. So I'm sure that this progress has to speed up, and I take advantage of one of your essay, Paolo, that I read some time ago. I think that we should also think that Europe is not only the Europe that we know today, not only the Europe that will include the Western Balkans, but also the Europe that we have to pay a lot of attention to the countries of North Africa, because our world, the world where Europe can be a really stabilizer. And my frequent comment is that the world has today two big blocks on which it stands, China and the US. I think that it is absolutely necessary that at that table there is a third chair, and that chair is for Europe, and enlarge Europe, a Europe that is more inclusive and more sustainable, more innovative, as we will say maybe in a few minutes.
Well, thank you. But let me ask you an impertinent question, because I do share your optimism. Undoubtedly, we have seen a response to the crisis in the EU, which is unprecedented. But also this crisis has highlighted old vulnerabilities and also created new divides. Some of the countries we are talking about, Eastern Europe, you mentioned North Africa and the Euro-Mediterranean area, they did not have the capacity, fiscal capacity or the monetary policy capacity to respond. So, I mean, the question is, how far is the European Union prepared to go to, well, also to respond to its responsibility to the past commitments? You see, in a few years, a couple of years, there will be 20 years from Thessaloniki. In 2003, in Thessaloniki, the European Union promised these countries, the Western Balkans, to accede the European Union. And don't you think that because of this hesitation in the relationship between the European Union and its near abroad, there is a risk of losing credibility, of visibility in relation to the activism you mentioned? I mean, this is an area where we see global players, regional players, very active, from the US to China, Russia, Turkey. And is the European up to the challenge, and what should and could the European Union do?
Yeah, you're right. A lot of events that happened in the past can create doubts and uncertainties in terms of the program that I was trying to design. But a lot of things have happened in the meanwhile, and I think that we have to be comforted by the fact that all the hesitancies, all the uncertainties. Let's put it also this way. The leaderships that led Europe in the past may be confronted with the new leaderships that have learned from the mistakes of the past, can give us some better hope that things this time will not be abandoned. The crisis have proved, I would have never thought that Europe could produce the next generation EU, 750 billion euros financed by all the community. This would have never happened in the past. It has happened. It shows that when things come to the bottom of the floor, Europe is capable to react. I think that this is a great sign, and to be even more optimistic in the end, of course, I will make a statement also of being realistic, because it's not just good to be optimistic, but I think that Europe has perceived now the pleasure, the understanding that moving along this way, it creates a better place for itself in the world. It is more credible. It is heard in a more intense way. So, in my view, always things like what happened with the 750 billion next generation EU happened because of the crisis. So, as Winston Churchill said, never let the crisis go. Use the crisis. And unfortunately, good things often start after a crisis. I don't expect, I don't hope that we need another crisis of a political kind to make Europe more politically united, but Europe has to become a more clear political and strategic powerhouse. This is absolutely necessary, as I said before. And what has happened in the recent past, I mentioned the crisis, I mentioned the reaction to the crisis, I mentioned the change in leadership around Europe. I mean, Merkel did a great job during a long time, but there were several difficulties in other countries. Today we have, and I speak from a country that with Draghi and its ministers is giving sign that things can change in a radical way, having people that really not only have views, but also are capable to make these views come true. Because in the end, the game is always the same, not just saying things, it's also implementing things. And if we see how the entire COVID, situation has developed, look at the Central Eastern European countries, what they did, in line with what the Western Europe did. Starting the COVID, they had, a rather milder, maybe consequence of COVID. Then it became much worse. The second and the third wave for the Central Eastern European countries was much worse than what was happening at that time in the rest of Europe. And the consequences were, very, very dramatic on population, on economies. We see in countries, Serbia losing 1% of the GDP, but Montenegro losing 15% of GDP in 2020. So, and from there, the reaction came. The reaction came through the vaccination programs, which shows that when you are in front of a crisis, the world reacts, the science reacts, so we're still capable to find solutions. So the vaccine program that is picking up and moving fast here, as in Italy, as in France, as in the US, and giving hope for the future. I know this in the place where we live, in Trieste, in Milan, in Torino, and even in other countries where I start moving again. People see the future with a different, and we expect the GDP in the different countries moving even beyond the initial expectations. In Italy now, a lot of institutions expect that instead of being the 4% imagined by the IMF, it's going to be maybe even 4.7, maybe 5%. So this, and on top of this, the monetary and fiscal policies of the different institutions in the countries, including in the Balkans and in Central and Eastern Europe, have supported, have given a push to the economic system. And then we see little by little in the services area, the tourism is picking up. I saw recently beautiful beaches in Croatia and in other zone of the area full of people, and the demand of other countries that have already moved on brilliantly, like, as I said, China, US, is creating further demand for goods from this area. And that, let's not forget the impact of the Next Generation EU, which will help countries that are surrounding this area growing faster, and growing faster means higher demand. So this will drag, it will push even some of the most fragile countries in the Western Balkans to take advantage of this. And let's make a quick comment on the Next Generation EU. The Next Generation EU is what I said initially, a real game changer. I've never seen something like this in the past 20, 30 years. It is helping particularly countries like some of the Balkan countries that have a rather low GDP per capita, but it's helping a lot also countries like Italy, like Spain. And what is the program going to do? It is going to allow these countries to modernize, to invest in infrastructures, which are highly important for the development of these countries, will allow to modernize it also in many other areas in terms of education, which I believe is one of the most critical areas everywhere in order to allow the new generations and also the older generation to confront the world of innovation and of sustainability that we'll have to develop. And it has to invest in research and so on. Overall, my last comment on this item is this Next Generation EU will allow improved stability in the area, improved stability of Europe, more credibility of Europe. The result will be a Europe that finally finds its correct place in the world, which is long overdue.
I agree with you. There is definitely a new climate, and I think Europe is prepared and should be prepared to do whatever it takes in the next few months and
To use
years.
a famous
Exactly,
statement.
to just use a nice quote for delivering on its promises. But let me now turn to insurance, because I think, well, I'm sure you agree with me that it has become, in a world of structural uncertainties, black swans, unknown unknowns, the business of insurance has become much more challenging, but also more fun, more interesting. I think measuring and managing risks in areas like climate change or even health security now, not to speak of geopolitical stability, it's a challenge. And so, how do you see this new environment affecting the business model of insurance, and what prospects does this give to the business sector?
Yes, Paolo, you know that I come from long experiences in many other sectors, very different from insurance. So when I joined the insurance sector some years ago, I was a little bit puzzled by what, this sector that we all know because we have to pay, the coverage for our RC in the automobile or for protecting our houses. But insurance, of course, is much more. First of all, the experience of insurance in the pandemic period has been extremely important and extremely teaching for me, at least. First of all, it is a sector which has proved to be what many people call it resilient. We've been able, after 2 weeks, to take care of our employees with smart working. 90% of people went into smart working in 2 weeks after the start of the pandemic. And they were able, smart working, to continue doing their activity, to continue into their role, which is the second big element of resiliency, taking care of the clients. Clients were supported in a very delicate moment from a health point of view, from some other risk point of view, from a business interruption point of view, was helped. And, honestly, of course, I'm not an element of key statistic, but I mean, the criticism that I heard during all this time were really limited. So our people were capable, our agents, to maintain their engagement, which in our purpose is defined be a lifetime partner of our clients. We really have been, in this period, lifetime partner. So partner even in moments in which life, is not as easy as before. And this is also proved by the economic the results of the insurance sector. And the Solvency II, which, as you know, is an indicator of balance sheet solidity, was really high and really important. 224%. For us, about 200% of the other players. So the minimum, is 100%. So I mean, it shows that have been able to confront a moment of very complicated financial markets, very low interest rates, a lot of disruptions along the different value chains in a rather solid way. Second element of this sector, compared also to other sectors that I lived in the past, from the mechanication and so on, we are in a position to be also part of the solution. We can be in the recovery plan that has been launched. We, first of all, as a sector, not unfortunately just a Generali, we as sector manage in Europe alone 11 trillion euros of assets. This is an enormous reality of firepower that can be, used in part, of course, and respecting all the rules of the insurances, but used for long-term investments, for supporting the efforts of government and public institutions. So we have an enormous expertise, as you can imagine, in judging investments, evaluating investments, controlling investments, and this can be offered, and we offered it to governments and to public institutions. We started projects that we call the private-public fund, in particular pandemic fund, which are a very important benchmark for this crisis, but also, I warn everyone, for future systemic crises, because we talk about pandemic, but we do not have to forget that there are around many systemic risks that sooner or later will appear, unfortunately. And I don't want to be, talking about risk in the future, but you hear Bill Gates, you hear other people that say the question is not if, the question is when these other risks will materialize. And they talk about cyber security, I talk about catastrophe risk, and so on. All these things are too big to be managed only by private sector. We need to operate public and private, and in some cases already functioning. So I'm sure that this is going to be one new, event, one new will be taking place in the future. We have launched ourselves a fund called the Fenice 190, and 190 is because we are celebrating this year in Trieste 190 years since the starting of our company that was born in Trieste in 1831. And this is a program directed to invest 3.5 billion euros in 5 years in the direction of supporting SMEs, in supporting households, in order to make projects that will move along, the public institution orientation. And then, if I have 2 minutes more of time, we are important supporters of the two main guidelines that the European Union has clearly indicated: the sustainability project and the innovation project. Sustainability has become since years, but now it has been accelerated in terms of governance into our group. It is really in the DNA of our group. Our plan, our strategic plan that we will review at the end of this year, will start with the question of the ESG component as part of the process, as part of the products, as part of the strategies. ESG has entered into our processes, into our products, investments, underwritings. So we are building assets in the green area. We are proposing services that take advantage of all the technology that are available, including how you reach your client in a digital way, how you can inform about a claim through video inspections. There is plenty of new things that will go along with the indication that the European Union has given. And being also chairman of an Institute of Technology in Italy, I know how many developments and improvements in technology are taking place, and how many of these improvements can be part of insurance products that we sell already in some countries, France, Germany, and even in Italy. And last, in the sustainability area, we have launched a project called the Human Safety Net, which will take care of disadvantaged families and immigration in terms of including them in the economic arena. It is expanding in an incredible way, and believe me, it is one of the most appreciated programs that we have in our group. You cannot imagine how many employees and colleagues are actively constantly when they move in one country or the other on how we're moving. And we're now, after 3 years of launching the program, we are in 21 countries. We are assisting hundreds of thousands of people. So it is really a proof that this works. And then on innovation, just one comment. Insurances have been born on data. As you know, data were the basis for whatever kind of insurance that we could create. Now we talk about big data. So we have plenty of data, plenty of capacities of data to improve processes against fraud, in order to improve our forecast, in order to improve the possibility of offering a modular service to our client. So there is plenty on our, and in the region, in the Central Eastern European region, we have launched a regional digital acceleration program in March 2020, where we are introducing possibilities from the digital connection real time between clients and agents, clients and the company. We are introducing a process to improve the entire area of claim management. So there is an enormous change underway, and this area is extraordinarily efficient and dynamic in pursuit. And I close with two quick indications. The asset manager is another branch or leg of the insurance business, not only life, but asset management. We are creating a hub of asset management in Poland and in Slovenia. They are producing and distributing products in the area to take advantage also of the possibility of giving a return to savings of the population in this period. We have brought one of our companies specialized in the ESG assets called Sycamore from France in order to provide updated services to the local population, and it is working correctly. So I see plenty of opportunities. This is why maybe here more positive than normally I should be, but I will conclude by saying that I'm still realistic, which means that I know that there are a lot of obstacles to reach what I'm indicating, but if you don't see the flag far away, you will never find your road. So this is my point. Let's believe that there is a new normal, as they say, or even a different normal that is in front of us. We have to get there, and this would be extremely positive for Europe in itself, for the Eastern Europe, and particularly for the West Balkans when they will join Europe. And let me add that this would be positive for the world, particularly now that Biden on one side and China on the other have agreed on some of these main projects, particularly in terms of sustainability.
Thank you, Gabriele, for mentioning the important role of insurance in filling the protection gaps, in investing in the real economy, in capitalizing on new technological developments. I think this is extremely also for mentioning the partnership approach. I mean, there is a lot of talk now, the return of the state. There is also the return of the private industry. I think what we want is really a new partnership mode for the market, the private sector, and the public policy to work together to address it, like they did in relation to the vaccines, for instance. The important emerging problems and actual problems we experience. Unfortunately, we've exhausted the time, but just a quick on this partnership. If in 1 minute you had to ask public policies, governments, what they can do and they should do to create an environment that would enable the insurance sector and in general the financial sector to play a more positive role, particularly in Eastern Europe.
Well, I mean, it's a question that concerns the insurance sector overall, of course, in Europe, in the Balkans, in Eastern Europe. Basically, what we need today, I mean, of course, I synthesize a moment, is that particularly at the European level, so in Brussels, they take care of two main things. One is be clear on what the sustainability program is in terms of green products, taxonomy. We have to be clear, comparable with the rest of the world. We have to know when we talk about sustainable projects, sustainable programs, where we have to put a lot of money, we need to have all the same understanding, real understanding, correct understanding. We don't want to see and to hear anymore the word greenwashing. I mean, this is a fake. This is something that has to come out of our pictures, but it's still a problem around. And the second, we need that, the regulators, I said this several times in Brussels, the regulators have to take in consideration in this review of Solvency II, which is the main, rule book for the insurances, that if they want to receive part of the money that I indicated before towards long-term sustainable projects, innovative projects, they have also to give to this particular view in terms of long-term investment. Rules are different from the short-term and variable and volatile investments that banks can make. I mean, the insurers are other animals, are different animals. They have a very long-term view. We have very long-term liabilities, so we can confront, the investment expectations of the world, of Europe in particular, of the sustainability project in particular, with a totally different set of rules than what we have still today. This will allow us, the project that had the dimension of hundreds of billions of euros a month and trillions over years. I mean, this cannot be confronted by public institutions alone. They certainly cannot be confronted by private people alone, but private and public, particularly with this fund I mentioned before. Let's take the insurers, the first layer, reinsurers, the second layer, private investors also in the financial markets, the third layer, and governments and the public institutions, the fourth layer. All together, we will be able to confront the needs of our populations and of our clients and of our economies in a very efficient way.
Thank you very much, Gabriele. I think we've come to the end of our conversation. Thank you for your messages, well taken, and definitely food for thought for the proceedings of our forum. Thank you also for your vision, for your leadership. It was a privilege to have you here in Trieste to start our forum. And I think now we have to engage in the roundtable that will follow. And so thank you. I know that you have other commitments, so you will have to go. But we have now a very prestigious panel of speakers. I will introduce them one by one as they speak. and I would like to follow the order of the program to discuss, I think, the geopolitical and business context of the post-COVID recovery. I will start from Roberto Antonione, he's the Secretary General of the Central European Initiative. I think he's one of the oldest after the end of the Cold War organization based in Trieste, and he's a medical doctor turned policymaker, has had important role in parliament, but also in local politics and in CEI reforms. So welcome, Roberto. I will give you the floor, and I will start by asking you a blunt question. Because
gli altri non li
because
presenta.
I think this is a question that is in the back of everybody's mind, but nobody dare to ask. When Eastern European countries, particularly the Western Balkans, will access the EU, is it possible to think of a date? Is this concrete? Is this something that is in the cards? Or is it something that we keep talking about, making rhetoric out of this? Because I think on this particularly, you heard the young generations. They expect they expect to see governments moving, taking bold decisions. And the essence, I think, the quintessence of your organization is to prepare these countries for accession. But so, when is accession coming? Roberto, you are mute. You are mute.
Sorry. Okay, can you hear me?
Yes.
Can you hear me
go
now?
ahead.
Okay.
Yes, go ahead.
Good morning. Okay. Good morning, everybody. Thank you for inviting me. This is a very interesting forum. Your question is absolutely, how can I say, impossible to answer. I can say that I agree. I totally agree the vision, the political positive vision of Gabriele, of the president of Generali, and as you said, the process started a long time ago in 2003 with the Salonico Council, in which all the countries, all the European countries, decide to open the door to all the Balkan region. But the process now is not exactly what we hoped the process could be, and we hope in the future we can have an improvement, an acceleration, for the reason that you said and Gabriele said and many other speakers said. But it doesn't depend only on the countries. I think we have to work on the public opinion, because we know that all the political process depends on the public opinion that are able to influence the policy makers. And if we think of the past, for example, during the enlargement of 2004, the biggest enlargement of the European Union, at that time, all the European people was in favor. And so it was easy for the policymaker to continue to enlarge it and to have all the positive support of people. Now the process is a slow process for what they call European fatigue, and this depends on the political public opinion. So we have to work also in this context. But about the topic that we are here to discuss today, let me, of course, express my appreciation for the topic that the organizers have chosen. And in this regard, let me first of all add my compliments to young panelists that this morning have opened our forum. For me, it's a pleasure to be here to discuss these topics with prestigious speakers with complementary backgrounds and competencies. I think we all agree that we cannot look at the COVID-19 pandemic as something that will pass over quickly. From where we stand now, we need to plan and prepare for short, medium, and long term. Exchanging knowledge and experiences on economy and social challenges is particularly important nowadays.
and needs active international engagement and mobilization. We at the Central European Initiative, CEI, are very much dedicated to addressing the crisis through a coordinated multilateral approach, which is our core business. In this regard, let me refer to our recent cooperation with the European Investment Bank and the Organization for Economic Cooperation and Development, OECD. Together with these strategic players, we organized two virtual events in March, April this year. First, a chief economic forum that carried out a comprehensive macroeconomic review of the current situation in CI water region, which, as you know, encompasses 17 member states in Central, Eastern, and Southeastern Europe. Then we convened a larger forum of regional investors and associations, which has attended inter alia by some of the speakers present today, such as Franco Del Neri and Pierluigi Gaggi. The main lesson we can draw from the valuable inputs collected during these international and multilateral stakeholders discussions is a general consensus on the historic opportunity we are all facing to define a more sustainable and inclusive model of economic development. Yet only by working together can we try to provide efficient responses to the long-term recovery efforts and thus curb the dramatic impacts posed by the COVID-19 pandemic. Our common agenda must focus on productivity and competitiveness, on making our economies greener and more digital, with the goal to make our region more innovative, more resilient, and more sustainable. Nevertheless, I shall remark that while all the CI countries have gone into recession after the outbreak of the pandemic, they had been suffering from prevision, unstable, and unsustainable growth. Indeed, many economies were experiencing slow productivity growth, and unequal opportunities were present. Against this backdrop, recovery represents an opportunity to build resilience and help establish a new growth model built on four pillars. The first one, innovation. The second one, digital technologies. The third one, climate change mitigation. And the last one, skills, labor, and social inclusion. To reach this ambitious goal, we cannot disregard the current geopolitical context in Central Europe, as well as along Europe's southeastern and eastern borders. If we look at these areas, we can identify significant geopolitical challenges that the pandemic has somehow exacerbated. First, the need to reinvigorate the European integration process to address the resurgence of nationalism within the EU, which was particularly evident during the first wave of the pandemic in the first months of 2020. This represents a weakness, not only in terms of internal cohesion, but of the EU, but also if we consider its international projection, both on the global scene and on its immediate neighborhood. I'm referring in particular to the Western Balkans, where the slow pace of EU enlargement is opening its doors to competing players such as China, Russia, and Turkey, as exactly what Galateri Gianola said in his speech. The post-COVID recovery in Balkans need to be far more convincing that it was with the initial European response to the pandemic last year. To meet this objective, I believe a large alliance to support the action of the EU in the Western Balkans shall be mobilized, also ensuring better communication of the policies, tools, and funds that EU is targeting towards the region. Advocacy for fostering the EU accession process is urgent not only in the Balkans themselves, but also in those EU members where the phenomenon called enlargement fatigue is particularly evident. Disinformation campaigns targeting the Balkans are to be countered as they represent a dangerous threat to the consolidation of the democracy institution of these countries. Major effort to strengthen the civil society and specific action addressing the young generation are, in my opinion, urgent measures now more than ever. Youth affairs represents one of the priorities of the Central European Initiative. Therefore, I'm glad to acknowledge that this event was opened with the Youth Forum for the Future of Western Europe. In addition to Central Europe and Western Balkans, a third area of geopolitical concern is included in our membership. I'm referring to the Eastern neighborhood. The recent dramatic events in Belarus and the low intensive war ongoing in Ukraine, Eastern regions are regrettably under our eyes. At the same time, these circumstances are balanced by the new pro-European impetus occurring in Georgia, Moldova, and Ukraine. Last 17 May, the three countries signed an agreement to reinforce trilateral cooperation, which formalizes their willingness to work together towards a more ambitious European integration. While the EU perspective of these countries are certainly far, the inception of the associated trio has, in my opinion, a strong political meaning, at least in symbolic terms. Dear colleagues, considering the challenges of the post-COVID recovery, as well as the geopolitical context that I have briefly outlined, I believe efforts should be made to define well-framed policies, including all relevant stakeholders and actors, ranging from ministries, international organizations, and financial institutions. Regional organizations such as CI can also be helpful for specifically by providing solid ground for diminishing the negative impacts created by the pandemic and for finding common solutions to challenges that know no borders. Multilateralism is and will be key to ensure convergence and harmonic development of this broad portion of Europe. A lot of work is waiting yet. I am confident we can overcome this crisis, rebuild our economies, and transform our region into a prosperous place. Thank you for your attention. I'm looking forward to an inspiring discussion.
Thank you very much, Roberto. I think I now turn the floor to Richard Middleton. He is the managing director of AFME, the Association of Financial Markets in Europe, a very important association of our sector. Richard is based in Frankfurt. He's an expert of regulation and compliance, and obviously he's an expert of financial markets. Also, he has had a prestigious career working in Bear Stearns, GE. Actually, he started from Oxford. He's a graduate of Oxford, and he's an applied mathematician. And I think it's interesting that you have an applied mathematician expert on machine learning, if I'm not wrong, Richard. So I think to you, the same question that I have asked others, how do you see capital markets supporting the recovery? What role do they play in the recovery that is underway? Richard.
Well, thank you very much. Can you hear me okay? Go ahead. We hear you. Great.
Yes, we hear you.
Well, thank you very much for the kind introduction and the invitation. And indeed, yes, I enjoyed at the start of my career researching into machine learning when maybe not too many people were doing it, and all of a sudden it seems to be very popular now. Maybe just in my remarks, and I will keep them quite short because I know we're close on time. I just maybe briefly cover 4 short questions about the recovery in capital markets. So the first one is, what is the scale of the funding challenge? The next one is, what are the sources of equity funding available? The next one is, what are the key issues for different types of companies looking to raise finance? And the last one is, how can the upcoming reviews of markets regulation help with that process? So, well, as we know, the COVID situation has prompted an unprecedented scale of public measures to help businesses, and that's been really crucial. But the challenge is going to be to repair the equity base of many companies. So, in other words, we need to move beyond the bridge finance in the form of debt to instead focus on longer-term economic repair and recovery. So debt has provided kind of a rescue, but its equity recapitalization is going to be needed to accelerate the recovery, because that will enable companies to invest for the long term, as we were hearing earlier. Now, listed markets have been able to access the markets reasonably well, I think, but for unlisted mid-caps and SMEs, other solutions are needed. And AFME and PwC published a report in January to provide some ideas on recapitalizing companies. And that report begins by noting that the scale of the recapitalization could be very significant. And it looks at other studies and then estimates that the total losses to the equity base, and this is within the EU, is likely to be around 1 trillion euros. And that brings me to the second question, which is, what are the sources of equity funding available? Well, in terms of private sector sources of traditional or common equity, you can go to the listed markets or the private equity markets. And a few numbers, in 2020, EU companies raised about 77 billion on the listed markets and 16 billion on the private equity sector, and also raised some hybrid funding, that is with some equity-like features, of 57. So if you add those numbers up, you get to about 150 billion. And then what about the public sector? Well, as we've heard earlier, Next Generation EU, that's clearly very important. Some of that financing may come through the form of equity. For example, part of that fund is the Recovery and Resilience Facility granted to member states. And to some extent, that might get used for equity investments. We also have other funds as well. For example, the Invest EU fund, 26 billion, which then can be further leveraged, and the 25 billion from the European Investment Bank and their Pan-European Guarantee Fund. So there's lots of sources, and if you add those up, the private sector sources and the public sector sources, and make some assumptions about how much different funds are leveraged, etc., then the report estimates that the equity available will be sort of somewhere between about 400 and 550 billion in total. So that clearly represents a shortfall compared with the estimated scale of the funding challenge. So now I'm up to the third question, which is, what are the key issues for different types of issuers in the markets? As I said, large companies have generally been able to access equity finance, for example, through secondary issuances. And there are many reasons for this, but maybe just a couple of aspects of the market structure to comment on. The first one is competition. So investors on the markets and traders can choose between a number of different trading modalities. And what that means is they can lower their cost of trading, and they can maximize their potential returns. And I'll say a little bit more about that when we talk about the fourth question on regulation. And then the second aspect is liquidity. So this is important for investors, clearly, but it's also important for the issuers in the primary market. And that connection is really quite simple. Investors might hesitate to provide finance to issuers on the primary market if they're not confident that they can realize their investment at a later date. So what I'm emphasizing there is that if you build competitive and liquid secondary markets, that goes hand in hand with having well-developed primary markets as well, and can support the recapitalization of Europe's economy. But what about mid-sized companies and SMEs, which of course are the vast majority of businesses? The report finds that many mid-sized companies and SMEs don't want to give up control of their business, which of course they might do if they issued common equity. And they don't want to dilute their voting rights, so they want to stay in control. But they are willing to distribute a share of their profits to investors. So it's therefore worth thinking about whether some kind of hybrid instrument which meets all their requirements might be a useful source of equity finance. And the report makes a number of suggestions, including exploring the development of a new sort of EU-wide instrument designed specifically for non-financial companies and SMEs. And ideally, this could be developed to comply with ESG investment objectives as well, to attract maximum investor interest and support the green recovery. That brings me to the last question. The fourth question to address is what about the role of EU markets regulation? And you may be aware that a key part of the EU regulatory framework is the Markets in Financial Instruments Directive and Regulation, which is due to be reviewed towards the end of this year. And that will be very important in promoting diverse and well-regulated EU markets, which support the needs of investors and consumers. And in our view, there are two principles which should guide the upcoming review. First, it should focus on the outcomes for the investors and the issuers. So although it's all about the markets, the review should not be focusing on banks or exchanges, but more on savers, pensioners and issuers to maximize returns and reduce financing costs respectively. And secondly, it should be evidence-based. In other words, it should be anchored on a thorough impact assessment of the benefits and costs. This may sound like a very obvious point, but a thorough impact assessment is not an easy task for some of these regulations, because there's a huge amount of very complex data to analyze. And indeed, a lot of debate on how to do that. For example, a very live debate at the moment, when you analyze trading data, we think that from the point of view of the investor, it's important to identify the trades which contribute to the price formation and those trades that don't. And if we do that, we can get a more accurate picture of where those respective types of trades are taking place. And this links back to my earlier point about trading modalities and competition. If this is a topic of, rather technical, but if this is a topic of interest, we published a report just last week about it with the economic consulting firm Oxera. And the headline in the report really is that it estimates that when analyzing those trades that contribute to price formation, most of the trading, a little bit more than 80%, is taking place on the exchanges and multilateral trading facilities, and the rest, just under 20%, taking place either over the counter or through what are called systematic internalizers. We hope that our analysis will be a useful source of evidence to support the impact assessment which the European Commission will need to carry out. We also hope that it will help to avoid any changes which might inadvertently reduce competition in the market. So I think I should come to a close there, because my stopwatch says just over 8 minutes. So I will close there.
Thank you very much, Richard. And indeed, as you said, the present phase we are living in, moving on from the emergency phase into the recovery, this question of the shift from debt to equity is really of paramount importance. And it applies, as you said, well, definitely to the small and medium enterprise sector, the issue of recapitalization, but I think it applies to 360 degrees. It would apply also to the infrastructure sector. It would apply to the welfare system, things of the health sector, how important it is to have a robust private sector able to invest in research, vaccine research, therapy research. So I think it's the issues that you mentioned, including the regulatory aspects that make this possible, is central to our discussion. And now let's move on to Enzo Quattrociocche. Enzo is the Secretary General of the EBRD, the European Bank for Reconstruction and Development. It's an important role in a very important institution. EBRD is the multilateral development bank for the whole pan-European region. And I think Galateri was mentioning the need to, when we talk of Europe, to have a broad mind, to think not only of the European Union, but also the wider European context. And I think definitely EBRD, based in London, has that kind of approach. So I think now Enzo has had a distinguished career in the Italian Treasury, educated in where I also graduated at the University of Rome, but then also in the UK. He spent time at the IMF, so I think definitely he has a lot of experience to tell us what the EBRD is doing or is thinking about the support that we need to provide for the recovery. And so you have the floor.
Thank you very much, Paolo, and good morning, everybody. I have been to this forum 4 years in a row, and I always look forward to it. So thank you very much for having me once again. I would like to spend a couple of minutes to comment about the change in mindset that seems to be happening in Europe. We are slowly just beginning to reemerge from over 15 months of prolonged national lockdowns, a health emergency unparalleled in modern times, and a second global economic crisis in just over 10 years. Many things remain uncertain, but what is quite clear is that the economic ramifications brought on by the coronavirus crisis have reinvigorated state intervention in both Europe and elsewhere, with potentially far-reaching consequences. National governments and the European Union have begun to spend their way out of this crisis in a manner that was inconceivable 2 years ago. This change in mindset could lead to a wider rethink of Europe's political economy, and this may be no bad thing. While comparisons have been made between the economic crisis we are currently facing and the financial crisis of 2008, the two crises were, of course, very different in both their genesis and systemic impact. After the crash a decade ago, there was no paradigm shift in political thinking in Europe. Austerity and structural reforms followed, but the traditional thinking that markets should rule remained the same. Many people, policymakers and citizens alike, are now questioning this very orthodoxy. Ordinary people have witnessed European governments unleashing unprecedented fiscal and monetary interventions, and this is fundamentally changing how they view the role of the state. Going forward, people may expect similar government interventions to continue well beyond the initial pandemic response. While some would welcome this, the ramifications of such a course need to be considered. Is such an expectation unrealistic? Is it too interventionist? How will it be ultimately paid for? Perhaps even more important to remember in this context is that while many of these interventions have been agreed in principle between the EU and national governments, both within and neighboring the Union, not all member states started on the same foot entering the pandemic, nor were they all affected by it in the same way. And recognizing the particularities of individual economies while also promoting regional harmonization is something that we at the EBRD pride ourselves on. As a multilateral development bank with a distinct private sector mandate, the EBRD is committed to assisting the countries in which we work to move toward market-based economies. We recognize that in exceptional circumstances such as this, there is a need for targeted state intervention. The Next Generation EU 750 billion euro fund, which will be financed by collective borrowing through the European Commission, is an excellent example of this. One important point that is somewhat missing from the debates, and something that I kept thinking about when reflecting on what I wanted to say today, was the view of youth. And it's very good of the FEBA forum to have given voice to the youth at this forum today. The youth of today will be the ones shouldering the debt burden arising from this crisis for many years to come. Yet their voices are distinctly missing from conversations surrounding the recovery. The 2008 crisis destroyed opportunities for young people for over a decade. Now that same generation and those behind it are facing another unprecedented crisis for the second time in their short lives. Between February and September 2020, youth unemployment increased in Europe to 17%, and 3 months into the pandemic, 1/3 of employees aged 18-24, excluding students, lost their jobs or were furloughed. This is largely attributed to the fact that the industries most affected by the pandemic and the resultant government-mandated lockdowns were those in which a high proportion of young people worked. Yet nobody's really listening to what today's youth have to say about recovering from this crisis. Things that matter most to the young: tackling climate change, affordable housing, livable cities, good healthcare, relief from student debts, to name a few, need to form the basis of the recovery. Otherwise, we are at risk of another lost generation. Finally, I don't think any conversation regarding building back from the coronavirus pandemic is complete without reference to doing so sustainably. I don't think this point can be overstated. As a bank that aims to be fully Paris aligned by the end of 2022 and to invest in a majority of green projects by 2025, the EBRD is committed to building back better from this crisis. There is a political window of opportunity to leverage the disruption brought by these unprecedented times to bring about innovation and develop better sustainable practices. If COVID has taught us one thing, it is that we cannot sit idly by. We must harness this opportunity to move to a greener path. The International Energy Agency published on 18 May its long-awaited roadmap for a global energy sector that meets net zero emissions by 2050. The key message of the report is that this transformation is unprecedented in its scale and speed, but it is possible. The technologies and policies needed to achieve the 2030 emissions goal are all available now, and it can be done while preserving, indeed enhancing prosperity. A surge in clean energy investment creates 14 million new jobs and adds 4% to global GDP in 2030, compared to business as usual. It also brings electricity to the nearly 800 million people who currently lack access to it. And the reduction in air pollution avoids 2 million premature deaths annually by 2050. The IEA analysis confirms the EBRD's strategic directions. One of its key messages is that getting to net zero is a whole of economy effort, meaning that every sector requires investment and every economic actor will need to reshape its thinking. The analysis reinforces the vital importance of energy efficiency, the area where EBRD's green initiative first began, and confirms our decision not to invest anymore in upstream gas. To move to a greener path, however, we must do so in a uniform manner. The EU and other like-minded jurisdictions are already doing Trojan work to classify and define what green and sustainable means in the context of green finance. It is important that we find the right balance between incentivizing browner companies to transition to greener practices while protecting against greenwashing. It is a delicate needle to thread, as it is accepted that more granular definitions are required. But we want to avoid a binary choice between green and not green investments so that we do not end up leaving worthy projects out of the transition. Thankfully, there are myriad instruments being brought to market lately as the market innovates and adapts. We have use of proceeds instruments such as green, sustainable, and social bonds on the one hand. We have KPI-linked instruments such as sustainability-linked bonds, one of which EBRD has just invested in Greece. These instruments are extremely useful as they not only drive green projects, but they can strongly influence corporate strategy and behavior. It is now time to get to work, put words into action, and make Europe greener and more resilient. Thank you.
Thank you.
Thank you very much, Enzo. Thank you for mentioning the challenge of the transition, net zero transition, transition to resiliency, sustainability, and for highlighting the important role of the financial sector. In the end, it will be the financial sector, the working of capital markets, banks, insurance companies, that will enable the channeling of the resources away from declining sectors into the sectors of the future. Now I turn to Maya Mdiska-Trendafilova. Last but not least, Maya, thank you for being with us. Maya works in Sarajevo at the Regional Cooperation Council, which is a very important institution of the region that works for integrating the different countries of the region from different aspects, different points of view. And she's responsible for this new project, a very ambitious project, the common market, for Eastern European common market. I think it's a very ambitious project, and well, obviously I will ask her the same question the other speakers, what are the initiatives that the Regional Cooperation Council is taking for the recovery. But let me start, just for the sake of discussion, with a provocative question, because obviously the focus is on the common market now. And now, is this common market, should we consider it as a stepping stone for preparing countries, to enable countries to access the European Union quicker and better, or is it a stumbling stone, something that will, when you have another big ambitious project on the way, that it becomes a condition, and then perhaps for somebody an excuse for delay and not moving forward. So, I mean, how do you see it from Sarajevo? Maya, you have the floor.
Thank you very much. I mean, to start off immediately with an answer on the provocative questions, definitely a stepping stone. This is the intention, and that is why the common regional market is also based on the EU rules and standards. So it is indeed used as a stepping stone and never instead of. So then, thank you very much for, of course, extending the invitation to the Regional Cooperation Council. It is my pleasure to address you on behalf of RCC and to outline this vision for regional economic integration, both within the Western Balkans, but also with the EU, that we in RCC pursue, which actually grows in importance in this new geopolitical and economic context. So the vision that we have as a region, and actually confirmed at the highest political level of the Western Balkans leaders, is actually the attainment, as you said, of a common regional market along the four freedoms, which is based on EU rules and standards, so that it is indeed a stepping stone to earlier integration in the EU single market, so dispelling any fears of instead of processes of EU integration that from time to time, of course, surface in the discourse. So that's why it is very important, especially at such a geopolitics panel, to stress the complementarity and this mutually reinforcing nature of the common regional market with the EU integration processes, as it will pave the way for deeper economic integration with the EU single market. So what we in RCC, but also in the region, believe is that in this rather sadly stalled enlargement context, our region can much more aggressively tap into the potentials of the new enlargement methodology, and also the avenues that are identified in the economic and investment plan for enhanced economic integration in the EU, even ahead of the political accession. For us, this is crucial because this is where the economic and the transformational potentials lie, on that side, on the side of the EU, because they are incomparably bigger than the transformation potentials that can be unlocked only through regional economic integrations. So now, if you allow me, in the next few minutes, I will give you a couple of examples of the centrality of these EU models and standards, and the importance of integrating our region, so-called phasing in the EU policies, programs, and market as part of the accession process. So to start off, the objective, for instance, of cutting roaming costs between our region and the EU, once we have successfully abolished the roaming costs in the region through an EU model-based regional agreement that we in RCC had the pleasure to broker. So now from the perspective of a roaming-free region, we'll continue to work with our European partners until our citizens are able to roam without additional cost in the EU, as should the EU citizens in the region. A second important example concerns the extension to the EU of all the mutual recognition arrangements that we are doing, of various certificates, licenses, testing results, professional qualifications. So the moment we attain this in the region based on EU models, we want to unlock the recognition with the EU. Or thirdly, extending the very successful Green Lanes initiative that we had within the region, which actually enabled that there is no shortage of all the essential goods and medicine in the most of precarious context in the immediate aftermath of the pandemic. The idea is that now this is extended to the EU because we know where the queues lie. And we know that it is the EU member states border crossing points that actually sustain around 70% of our trade flows. So given today's audience actually at the forum, another important example also includes the reduction of payment transaction costs in the region. So we as a region are working to cut the payment transaction costs within the region. But of course, we expect that the second stage is joining the single European payment area due to the benefits it generates in terms of efficient exchanges, but also market integration. So if I can wrap up these examples, our aim, our hope is that this EU element that is unlocked after the region harmonizes regionally based on EU models is much more prominent. And this will not only bring a very important boost to economic, of course, performance and investment, but this for us is the very important political signal that the future of our region is with the EU. So now, in a few words, allow me also to walk you through some of the concrete reform agendas that stem from the action plan adopted last year that are relevant for today's forum. The first one, for instance, concerns trade integration, including elements of establishing regional e-commerce market, facilitating customs clearance of parcels, eliminating geo-blocking, but also improving the dispute resolution mechanism, risk management in our trade regimes, and as well as systematic exchange of data of all agencies which are involved in the clearance of goods. The second important strand that we do concerns investment reforms, actually aligning our investment policies with the EU standards and best practices, and promoting the region as a unique investment destination to the foreign investors. And here we focus on policy reforms. For instance, we brokered for the first time regional standards for negotiating international investment agreements, so new generation of international investment agreements. We are assisting the region in boosting transparency on investment incentives. We will start a process on regional criteria for FDI screening inspired by the EU process, etc. Together with the Chamber Investment Forum, we also work, as I said, on joint investment promotion and attracting investment leads in promising value chains. We also work in the area of financial markets, which is very relevant for today, focusing on diversifying and deepening financial markets, cutting the cross-border costs of payments, but also strengthening interoperability among Western Balkans, deepening the capital markets through exploring possible EU-style single regimes. So actually in the post-COVID context, our region is particularly well positioned for these nearshoring alternatives, for especially EU-based investors that are looking to adopt a more balanced distribution and diversification of supply sources, and of course, develop the means of production which are closer to the consumers. This should not be, of course, an ideal portrayal of the situation. Of course, building the common regional market needs not only investment, but serious critical reforms to help unlock the full potentials of green and investment development. So if I can sum up, the potential is there, actually it's here in our region, but so is the need for reforms and much more work ahead. But such disruptive context can be particularly good for changing gears from laggards to leaders, or at least directing ourselves in that direction. Of course, RCC has a wide portfolio. As part of the wider common regional market agenda, we support the digital transformation of the region, the green transformation of the region, and with this COVID-induced digital leap that happened, which will of course not subdue after the pandemic, this is really a prime time for accelerating reforms on digital transformation, broadband connectivity, improving resilience, and we in RCC support this. We even have an annual digital summit, high-level leaders forum, which for the first time will talk a lot on digital economy, because if there is something that the COVID crisis showed us is that whoever invested in e-commerce, automation, etc., of course, got the returns compared to the digital laggards. We also do another enabling reforms, such as in the important freedom of movement agendas. So I'm closing here just to say that the pandemic underscored the need and potentials for regional cooperation and solidarity, and this regional dimension grew in importance. And actually the citizens and the businesses of our region hold regional cooperation in high regard. And actually just to throw a couple of numbers to spice up our discussions, even though I know that we are nearing the end, 77% of our citizens believe that regional cooperation contributes to better political, economic, and security situation in the home, and 69% of the businesses directly attribute improved regional cooperation to the increased quality of the businesses. So actually it is these voices and these pulses that chart our way forward and oblige us to work better and together. Of course, we have a long way ahead, challenging road ahead in terms of building back not just better, broader, smarter, more inclusive, greener. And we in RCC continue to be a committed partner, and we are actually led by this vision of cooperation and cooperation and togetherness, rather than competition and the races to the bottom, which were characteristic for the initial stages of the cooperation. So thank you very much for this opportunity to outline the common regional market agenda that we in RCC support. Thank you.
Thank you, Maya. Thank you very much indeed. I think it's very important. The work that you're doing is very interesting. And I want to use this opportunity really to pay a tribute to you and to all the women and men working in Sarajevo, because I think they are showing how moving onwards with practical steps to abolish obstacles, eliminate fragmentation, you can achieve a lot. And I think I fully agree, certainly from the business perspective, that this is perceived as a very positive work. I mean, particularly as you said, on the backdrop of the enlargement of the stalling of the enlargement process that we are living in. I mean, I must say I'm still have difficulties in coming to terms with this political reality that we have an enlargement process that is stalled, because I do believe that it would be in the interest of everybody to move it onwards, and certainly the responsibility of politicians, policymakers, to move on and for something that has worked for other countries. I think it should also work, and certainly would work also for the Western Balkans and Eastern Europe more broadly. I think time is up, unfortunately. We didn't have time to go more in depth, and I'm sure we have not exhausted the complexity of the issues, but I mean, we were not expecting to do that. I mean, we wanted just simply to throw on the table topics and ideas and food for thought, and I think we will have time now in the following session to go more in depth. And with that, I turn it now over to you, Studio in Rome. Thank you very much to the speakers, the excellent speakers, for all their very important and valuable contributions. Over to you.
Thank you, Paolo. Thank you to all the panelists. I have to inform that we need now a 2 minutes technical break. So stay with us. We'll come back to you in 2 minutes. Be patient, please. We are online now. Can you hear me? Yes. Good. So I want to introduce the session, which title is Banks Facing Old and New Vulnerabilities in Financing the Recovery. And the chair of the session is Daria Ciriaci. She is Vice President of European Long-Term Investors Association, ELTIE, of CDP, Cassa Depositi e Prestiti, but this is not only, this is the short title we have in agenda. Daria is an experienced industrial economist with extensive knowledge of European affairs and strong political acumen. Then we'll have two keynote speakers. The first will be Stanislav Zadravec, who is director of the Bank Association of Slovenia. And the other is Safet Kozarevic, Professor Safet Kozarevic, Faculty of Economics, University of Tuzla, our, let's say, consultant for the last 5-6 years, I think, Safet. So immediately I will throw the word to Daria. Please, Daria, the floor is yours.
Daria.
Daria, please.
Daria, could you speak?
Okay.
Yes. Can you listen now?
Yes, okay, you can start.
Excellent, excellent. Thank you a lot, Franco, for this excellent introduction, and thanks to FEBAF. And good morning, ladies and gentlemen, and welcome to this second webinar of the 21st Trieste Eastern Europe Investment Forum. In the next hour, we are going to discuss how old and new vulnerabilities are affecting the ability of the banking sector to finance the recovery in Eastern European countries. Before giving the floor to our speaker, however, I would like just to introduce the discussion, providing some background and spelling out the key questions that we will try to answer today with our keynote speakers and panelists. You know better than me that the COVID-19 sanitary crisis started hitting hard Eastern European countries last autumn and peaked this spring. And this has put enormous pressure on their fragile health system, but has happened in many other areas of Europe. On the top of that, restraining measures had an immediate negative impact on domestic demand, supply and private investment. The tourism sector was strongly affected, and we have also observed a temporary decrease in remittances, foreign direct investment and trade. And all these further slew down the economic activity in the region. As in other European countries, the economic downturn did not spur the labor market. So we know that employment levels are in the region dropped, and youth unemployment is among the highest in Europe. So in this context, as it was, I would say, quite normal to do, most of the Eastern European central banks reacted with expansionary monetary policies. And at the same time, national governments put forward fiscal stimulus packages. And this has led to historically high fiscal deficit and to substantial increase in public debt. So it means that the fiscal space in the future maybe will be reduced with respect to the time previous to crisis. However, in this situation and amid the pandemic, banks and other financial institutions of the region proved to be quite resilient, as differently from what happened, for instance, in the previous crisis in 2008. Most of them entered the crisis well capitalized and riding the wave of recent reforms. Obviously, this does not mean necessarily that the situation cannot get worse when fiscal and monetary support will be reduced. So we may observe solvency of domestic companies deteriorating and surge in non-performing loans, but I'm sure we will speak about that in a while. Now, against this background, today's webinar intends to answer some key questions. I would say that there are 4. First, what are the main challenges that Eastern Europe economies are facing and will face on the road to recovery? Second, what role can banks and other financial institutions play to finance the recovery in Eastern Europe and support what is called the twin transition, so the green and digital transition that is in any case a challenge in many other areas? Third, what are the main vulnerabilities of the financial sector? Fourth, what public policy, especially at the EU level, may help the financial sector generate a faster and more resilient recovery in the region? So, for instance, can the EIB, we have a colleague from the EIB who will intervene, or can other, together, maybe with other national promotional institutions that are very active in the area, play a role in this respect? To answer this question, I will first give the floor to our 2 keynote speakers that were just introduced by Franco, who will set the scene for the panel discussion. So there will be Ms. Zadravec, followed by Professor Kozarevich. And then I will ask our panelists to intervene in alphabetic order to react to this speech and try to answer the questions that are, let's say, that is the aim of our session. So after this first round, our speaker will have more or less another minute each for additional statement. And then I will open the floor to questions from the audience. And in this case, it's important to know that participants are invited to type the questions in the chat box. I will receive them on my mobile, and then I will ask them to the panelists. And now, without any further ado, let me invite Stanislava to start with her keynote. So thank you, Stanislava.
Thank you very much, Daria. Good afternoon to everybody, to the colleague speakers, presenters, as well as to all the audience, and special thanks to the organizer to invite us to this traditional but also extremely important regional conference taking place and always addressing challenging questions that are important for the countries in the region. As indicated, banks are actually, banking sector is in Europe as well as in the region one of the most important providers of the financing to especially private sector investments. So important for financing the growth, regardless the different access of the different countries in the region to this private financing, but still remains one of the key providers of the financial resources. And as mentioned by Daria, this time the external shock, health shock that caused the economic crisis did not actually reflect in the financial crisis or crisis of the banking sector for different reasons. One of them primarily refers to the different swift policy makers' reactions, being monetary as well as the fiscal policy, but also on the other hand, the banks came into pandemics with a relatively high capital as well as relatively high liquidity buffers, and have been so far because of these 2 main elements, banks' balance sheet strength as well as the economic policy responses, resilient so far to this crisis. Now, they are obviously, from this angle, very well prepared to support the recovery, economic recovery, growth, investment. But on the other hand, the phasing out of the policies may also significantly impact on some banks, for sure, resulting on their appetite for lending. loan demand is expected to firm up once the recovery gains strength. But again, on the other hand, there are certain challenges that may influence the capacity or willingness, appetite of the banks to provide the credit to support the economic growth, especially private investment as well. Now, the improved economic outlook has reduced the range of adverse outcomes, but still there exist downside risks for the future GDP growth. And especially the recovery is expected to be asynchronous and divergent across the economies, depending their structure, as well as their legacy structural, I would say, weaknesses. And there is the risk that financial conditions in some economies may actually even tighten, depending on the country's specific fundamentals. So the phasing out of support policies could have, as mentioned before, a significant impact on some of the banks, and should be carefully, potential impact should be carefully addressed by the policy designers and decision makers. Now, as mentioned, the role of banks in financing the recovery could be an important and should be important with the sustainable economic recovery program, which was launched by a European Union to cope with the recovery after the COVID-19, and also take advantage of this process in pushing forward some of very important policy agenda of Europe that was in place in place before, but the time framework was speed up now. And this refers to the goals that are also included into the three presidency priorities of Germany, Portugal currently, and forthcoming Slovenia in the next 6 months, which are strong, sustainable, competitive, and more connected Europe. And this program, together with especially emphasizing also the need for EU enlargement with this region, can importantly support the stability and also economical growth. This is also opportunity for the countries in the region to take advantage of, because it also, the priorities that refer to green transition, digital transformation, sustainable, inclusive growth also can bring into, I would say, enhancement some of comparative advantage that the countries in this region have, namely digital transformation. We know all that in terms of private business, there is a growing capacity within the region of, I would say, IT specialists, engineers, mathematicians, with relatively competitive wages. So further investment into the digital transformation is something that brings opportunity to the economies in the region, as well as to the banking sector in terms of financing opportunities. And same for the green transition, given also the fact that some of the structures of the economies have an important focus also in the agriculture that can be used also in increasing the share of tourism, services, and so forth in the economies. Now, what should EU-level policies provide to support a faster and more resilient recovery is one of the questions that important to be addressed, as you, Daria, also emphasized, especially because of uncertainties and fragilities of current economic recovery and support for the strengthening of this one in the future. It is essential that the policy support remains until a sustainable and inclusive recovery takes hold to maintain the flow of financing into these countries and prevent the pandemic also from posing a threat to the global financial system. Especially the support has to be further provided to the sectors that were the most exposed and during the pandemics, meaning that tourism services, as well hospitalities, as well as supporting the recuperation of the cutted chains of within the industry sector. And the coordination among different national and international institutions in this respect is also essential, as well as the recently also upgraded, renovated support for the EU accession countries in the financial aid program. So that would be, I would say, a key emphasis that should be taken into consideration to support not only the growth, but also financial sector to support this growth with the financing in the region. Thank you very much.
Daria, I don't know whether you have...
Okay.
Yeah.
Yes, every now and then I cannot unmute myself. Thank you a lot, Stanislava. I think that you have used 4 adjectives to better characterize growth that are key to our discussion. You have spoken about green, digital, sustainable, and inclusive. So I do believe that any support coming from, let's say, Europe or national promotion institution or other European institution should really go to ensure that also inclusiveness is considered, no, in let's say in the puzzle. So you have absolutely a very interesting point there. I would open the floor to Safet for his keynote. Please, Safet.
Okay, thank you, Daria. It's a great pleasure to see all of you, and congratulations to the FEBAF and MIB School for organizing this new event, this forum for this year, and especially for the morning session, which was really interesting to see and to hear young people what they, how they see the situation in the Southeastern European countries, especially how they see financial sector in these countries. I will just try shortly to present the main findings of the survey we conducted in 12 Southeastern European countries, from Slovenia on the north to Turkey on the south, plus Ukraine. But I will focus in this session to the macroeconomic and the banking sector data. Regarding the macroeconomic environment, the most important challenges for the countries are the first trend of depopulation. So the depopulation caused by many reasons. First, demographic reasons, high unemployment, problem of corruption, migrations that is a little slowed down by the COVID pandemic. And also because of that, actually, all countries have this trend except Turkey. Turkey is the only country with positive population trends in the last years. And because of that, we also have to stress that the countries have a low level of GDP in comparison to the European Union. It's only 9% of the European Union GDP, and it's about 1,500 billion euros. But 45% of this amount is Turkey, share of Turkey. And there is also low level of GDP per capita of about 8,000 euros. It's 4 times lower than the European Union average of 32,000. There is also problem with high unemployment rates, especially unemployment of young people. And you could see this morning there are problems regarding finding the jobs. And generally, we also have problem with increasing of the general government gross debt, but it's still below the level that we have in the European Union. Regarding the banking sector, I will just stress some main, let's say, indicators. First, regarding the regulatory framework, we can say that European Union country already implemented Basel III standards, while the other Southeastern European countries that are not members of European Union, they have a different various stages of process of adopting, and this process is actually a little by the pandemic crisis, it's a little, let's say disrupted, but they continue with the implementation. Generally, the sector is generally all economies in the Southeastern Europe are highly bank-centric, and because of that, banks play a very, very important role in the economy of these sectors, especially in financial service as well in real sector of economy. And banks are very important for stability and growth of the region. Their businesses, especially core business, is more conservative approach by attracting deposit and lending the money. That's the approach. And also we can say that they have a high capital adequacy and solid liquidity profile in the banking sectors, but there is mismatch between the maturity of banks, deposits and loans regarding short-term and long-term, And there is also a trend of downward regarding the number of banks, credit institutions, similar like in the European Union, for number of, because of mergers, acquisitions, or even liquidations. But regarding NPL ratio, it's actually reduced during the year. But it's still unevenly distributed among the countries. So profitability of the banks is also, let's say, positive. It's still a challenge, but all the countries had positive return on equity in last years. Regarding the coronavirus, COVID-19 pandemic, we just can say that there are numerous, as we know, countries introduced many measures, containment measures, in order to save the lives and protect the people and their health. So because of reducing and pausing numerous social and economic activities, domestic demand and supply decreased significantly. And because of that, the export also in these countries was decreased. But as with start of 2020, it started to recovery. Because of that, also the acceleration of public and private investments is expected in the next period, especially because of a lower level of FDI. And these measures also had affected many sectors, especially tourism, because of reducing of global traveling. And level of the GDP also in these countries depends a lot of inflow of remittances. And we noticed it, especially in 2020, high level of reducing and downturn in remittances, especially in the Western Balkan countries. That depends a lot of these inflows. There are also various economic relief package focused to support companies by temporarily subsidizing wages of their employees and provide social assistance benefits to unemployed individuals and most vulnerable households. That also led to fiscal deficits and accumulation of debts in the countries. That's also very important. It will be a problem for the future.
and the sector of the economy that's most, let's say, with most consequences is, of course, tourism, because of reduced traveling, and of course because there were a lot. Unemployment is actually level of employment declined remarkably. After tourism, there is high influence to the transport, manufacturing, construction, real estate activities, and wholesale and retail. So in second quarter of 2020, it was interesting that 140,000 people lost their job in the 6 Western Balkan countries. And finally, banks responded to the crisis. There are plenty of measures you can find in the report. I just give you the main highlights. Actually, there's plenty measures that bank introduced in different countries. You can find it in the report that's available on the web page. But generally, some measures are proposed by the banks, some by central authority, central banks. But generally, they try to support and to provide liquidity of the economy and to save SMEs, to provide them special credit schemes with government guarantees, outstanding loans to stimulate credit demand, and loan restructuring, also in order to refinancing to easy debt burden for SMEs. Of course, these short-run measures required fast and well-coordinated support that combine financial measures to address their cash flow problems and to avoid bankruptcy. That's shortly, but there are, of course, a lot of data and indicators that can be found on the report that's available on the web page. Thank you.
Thank you a lot, Seyfet, for this broad overview. And I will, let's say, take home what you mentioned, that the financial service in the region is bank-centric, and how important is supporting SMEs in response to the COVID-19 crisis. I would leave on this and open the floor to our panelists, and in particular to Massimo, because maybe he will for sure explain to us how it is possible to support SMEs and how his institution is helping in that direction. Massimo, the floor is yours. Thank you.
Thank you very much. Thank you very much, Daria. And first and foremost, let me thank you, FEBAF, for inviting us here to join this conference today. And let me say hello to Federica as a director of this program, being myself an ex-alumni of the MIB Trieste School of Management. And I remember her with a lot of pleasure. Said that, let me go to the question. First and foremost, let me say Siemens is not a bank. So we look at things in a different way. We are a private/public company whose mission is to provide capital for growth, for international growth on one end. So we're using our balance sheet. On the other hand, we are the asset manager of 3 different kind of funds that the government provides through different ministries to the real economy in Italy, in order to support them in their effort to go toward other economies, of course, avoiding the delocation of productions, because this is not, as you can imagine, the mean, but trying to put together international value chains. So looking at the upstream and downstream of the sector, where our Italian SME and mid-corporates are actives. So let me, if I have 2 seconds, let me first give you a snapshot of the role of Siemens in this region. That is a very important region because alongside others, I would say alongside the Central European economies and the US, this region, so all the countries belonging to this large region, are the third main geographical area of investment in terms of how do we support Italian companies to go outside Italy. And let me start with few numbers, a few figures in terms of the equity investment through which, through using our balance sheet, we have been supporting Italian companies. And from the 2010 year to date, Simest has acquired approximately 40 million in equity investment, plus more or less 15 million use of the venture capital funds that we provide at same level of risk together with our balance sheet when we help Italian companies to merge or acquire or let's say greenfield new ventures into this country. So we have been running through 37 projects that has been promoted by the Italian company in Southeastern Europe. Let me give you, to be, as I said, we do not have large numbers because we are not a commercial bank, but we do go straight alongside the entrepreneurs, and we try to provide, on one hand, the capital at the equity level, on the other hand, or debt level, on the other hand as well, the advisory and the mindset to penetrate these regions. And so we have been working on 11 projects for Serbia, 6 for Turkey, 5 for Croatia, 4 for Romania, 3 for Kosovo, 3 Albania, 2 Slovenia, 2 Bosnia and Herzegovina, and 1 Macedonia, for a number of total 40 million euros said before. Alongside, the investments are concentrated in key sectors of the Italian production system, including automotive, of course, metalworking, chemical and petrochemical, and mechanical industry. Moreover, some investment projects in the area are under evaluation and in our course of acquisition. And namely, we are looking at the moment at Slovenia in the healthcare system, in Albania, healthcare system, Bosnia and Albania, in agri-food, and Croatia in fitting. Not only equity, but as well, as I said before, in our role of managing public funds to support the comprehension on one hand and the penetration of foreign markets for supporting Italian SME. In the past 10 years, Siemens has approved 538 loans financing for a total amount of 200 million euro, more or less. And those actions have been provided in order to penetrate the markets that we are looking at, and to get with more or less 300 projects of entry agent financing for a total amount of 180. Trade fair and exhibitions, feasibility studies, and technical assistance program. That is very important because if you are a company that wants to put together, for example, a servicing program for your customers, you can look at these funds, and those are so-called soft loans. Soft because of the not heavy at all cost of the interest rate. In e-commerce, 13 project, and temporary export manager. We are looking at very recently.
Sorry to interrupt you. I mean, these are really impressive numbers. Just to let you know that we have just 1 minute left, and then I will
finished.
I
finished. But I mean, for me, that's the most important thing, to testify that we are active and to testify to your side and the corporate side that they can look at Siemens as a potential strategic partner. We have been working as well in 200 extra financing incentivation, i.e., let's say, strengthen the working capital of Italian companies that have been actively exporting to these countries. Let me then go to this major point that I want to finish with. We do see, and we have been ranking, and we discuss and propose to our Italian customers this region because of many different plus and strength that we see. And if I can put emphasis on some of them, let me say that the region has a strategic location for productive and commercial expansion, have a skilled labor at lower cost than Italy, of course. There is a compatibility, culturally, and not only culturally, of the area with the Italian productive system. You can find several people that are used to speak or at least understanding the Italian languages. There is an favorable investment legislation, is free access to third markets, so from this region to Russia and so on, is business friendly. We consider this more or less all these countries. And we do see low bureaucracy and charges for setting up a new company, and the market aimed and reforming to adjust following EU standards. So to finish here, I would say that we wish for the regional economies of this macro region to plan more and more for a structural transformation, trying to leverage on digitalization and the green taxonomy that we are trying to force in as well into the Italian economy, and talking to especially, for Siemens, I mean, with a deep dialogue with SME and mid-cap. So this is what we've done, and this is what you can count on us to be done in the future.
Thank you, Massimo. I would like to hear from Guido, who is head of unit for Slovenia Western Banks at the EIB. What's his point of view on the situation?
So thank you, Daria, for this invitation. I'm very happy to be with you in this panel. I see also Silvio Pedrazzi from Tirana. I'm very happy to be with you. The European Investment Bank is the bank of the European Union, and we are the world's largest multilateral lender. We have been active in the Western Balkans for over 40 years, and as of today, we invested more than 8.6 billion euro. Daria, let me say, and let me go to the title of this panel and the reference to vulnerability. Vulnerability comes from the Latin vulnus, wound, and we saw how this wound in the region was so deep and relevant. As a European Investment Bank, we, in our own identity, we have a counter-cyclical mission. We intervene when the economy, we intervene more when the economy is in recession. And in the Western Balkans, in 2020, we invested 50% more than the previous year. We invested more than 870 million euro. Of this amount, more than 380 million euro have been dedicated to the private sector, to the SMEs, the mid-caps. We work with commercial banks, which are our national partner on this regard in the region. We signed contract with the ProCredit Group in Serbia, Albania, North Macedonia, and Bosnia and Herzegovina, with Podgorica Bank, just to give you a few examples. Let me elaborate very quickly regarding which are the challenges that we see ahead in the region. And I think this was this will be in line with also what mentioned by Stanislava before. We see a digital divide. Daria, we just launched a survey a few weeks ago, and we noticed that in the region, the local companies have been able to react during the crisis through online activity, but this was definitely behind what it has been registered in the European Union. There is a digital divide, and on this we will work. We will work, and we started to work. Just to give an example, in 2020 we signed with the Serbian government a contract to rethink the local school, providing digital assets, providing connection, which will have an impact on more than 50,000 teachers and of course students. Second challenge, the green challenge. On this regard, we are really, we have been the very first bank to state clearly our identity. Currently, we are our activities are Paris aligned. By 2025, 50% of our activity will be related to climate change and environmental efficiency. And on this regard, also in the Western Balkans, we will definitely support the transition. We know the challenges, specific challenges of this region regarding the ability to transform and to capture the green opportunities. Third challenge, what we call the social challenge. On this regard, although this is not really one of the primary activity of the European Investment Bank, last year we signed with UniCredit Serbia an operation for 30 million on the impact finance, meaning that this operation targets the more marginalized sector of the economy. This is something which also this year we want to roll out and to expand on a regional basis. Daria, let me conclude that we are a bank for which crowding in private sector is fundamental. It is really in our identity, and we want to continue to work with the private sector, commercial banks, our national partner, the European Commission, which will be also, it is already a key player in providing funds in the region, and on this regard, we will we will join forces with all these counterparts. Thank you very much.
Thank you, Guido. Thank you, and of course, the national promotional institutions are supportive of the incredible action that you are doing in the region, and happy to provide any local support. You mentioned again, the key adjectives that also Stanislava mentioned. Also, green, there is digital, and there is social. So welcome all this social impact initiative in the region. So thank you very much for your value added to the discussion. I would give the floor now to Pier Francesco. The floor is yours.
Hello, good morning, good afternoon, everybody, and thanks to FEBAF and to you, Daria, for chairing this session. I also refer to the title of our session, and I would like to raise some topics that are important for our financial sector in Italy, but I would say in the Eurozone and in EU, but I also believe are equally important for the Balkan countries that are not in the EU. And I refer to the prudential measures that are in place in the EU, thanks to some directives, some regulations that became now famous concerning the capital requirements. As I believe that, all those regulations were put in place in the aftermath of the first financial crisis 10 years ago, more or less, and they were absolutely necessary and fundamental to restore a climate of trust in the financial sector. Nowadays, the situation is completely different, as already said by the other speakers. Banks were in a much better condition to enter this new crisis. And we think that if it is absolutely true, and it is true, that the financial stability is a prerequisite for the growth. On the other side, we should also avoid that for the sake of giving excessive relevance to measures that are considered important for financial stability, we endanger the growth in a phase like this one, that is where the growth is absolutely fundamental to give our economies a new boost, new perspectives. So our requests to our EU authorities and what I think would be also useful, maybe this is I would say even more question to those colleagues that are more experts than me in the financial institutions environment in the SEE countries. But the suggestion is to ask and to join what are we doing at European level with our regulatory and supervisory authority to not to release the measures, because this would be too much and not necessary, and fundamentally also undue. What we believe it's important is to consider the temporary release of some of the measures put in place to manage, for instance, the issue of non-performing loans that has already been quoted by some of the speakers, where we have very restrictive measures in place, very mechanistic, I would say. And what we need for the time being is to give back banks a certain degree of their capacity of evaluating case by case, some specific, their specific business. I can take the example very practically speaking. We have measures that are called calendar provisioning that compel banks, force banks to classify some loans in a given manner, in a given bucket, when the debtor is past due for more than a certain time, for a certain amount of money. I mean, all these mechanistic measures that can apply in cases where the debtor is clearly in a general difficult condition that would have happened also independently from the pandemic. In this case, of course, these measures must remain in place, must work as they worked before. But there are some cases where you have businesses that are clearly hit by the crisis due to the pandemic. I think, for instance, to beautiful resorts in the Dolomites that were always full of people, of customers, and then, of course, unfortunately, suffered in this very dramatic year. Well, in this case, if you also have the situation where the owner of this resort goes past due for a certain period of time for one of the payments of his mortgage, well, you can, in any case, provide the bank the instrument to evaluate on a different manner its approach, instead of going in a directly mechanistic manner, hitting this customer so hard that he can also create more difficulties than he went through. So to avoid procyclical measures.
Yeah, I understand, Pier Francesco. Thank you a lot. But I think that your message is very clear, and up to the point. I would ask Silvio now, is coming from the banking sector too, so he's the CEO of Intesa Sanpaolo Bank Albania. So please, the floor is yours. So let's try to have just a quick exchange, final exchange among us, and then we need to close. Silvio, please.
Okay. Thank you, Darius. Thank you, everybody. Excellent organization. Ciao Guido, ciao Pier Francesco. I try to be quick in. Okay, first, of course I fully agree with the analysis provided by Professor Kozarevich and from Stanislava. This is clear. We all of us know how big was the impact on the economies and all the headwinds that we have in front of us. Nevertheless, I think that we have to move to the action plan, let's say, because we are aware of the important role that we play, especially in the Balkans, and they would bring some good news, I would say. First of all, and here I want to, I have a bit of clash probably with Pier Francesco, because Albania and many other countries in the Balkans are already out of moratorium since 10 months ago, and nothing happened. So we shouldn't be so afraid to move out from the moratorium. Our situation is that since September last year, all the customers had to restart paying. That's it. And we have already a long period, 10 months of experience in which we strictly monitor all the customers that applied for the moratorium at the time and then are paying, all the customers that belong to the most vulnerable sectors like automotive, construction, tourism, and whatever. And the good news is that apart of very, very few exceptions, all the customers are paying. The only kind of pickup in NPL refers at the level of Albania to individuals. So it's evident that are the individuals that pay the price. Also because maybe we have some element of flexibility in the labor code and in our country, and not only in Albania. So if this is a reliable data, I'm not talking about Intesa, but about the system, we have reason to be optimistic for the future. So we are fully aware that the total impact on the credit quality maybe has not yet been developed fully, but in any case, we have a good back test, and the situation is not bad. This means also that banking systems, not only Albania, according to our information, are still very liquid with very low loan-to-deposit ratio, very solid with high level of capital adequacy, lower profitability, that is true, and I would say also good asset and liability structure, all in all. Why I want to stress good asset and liability? Because we feel the double role in providing funds to the real economy, but also to finance the sovereign. Because, as you may know, in the Balkans, the main subscribers of treasury bills and treasury bond are the banks. Why is so important? Because I'm fully convinced that in the years to come, all the Balkan countries are obliged to increase the public debt. And I hope, by the way, what also the other European and American countries are doing, so nothing special. But we should support also the public debt of the of the government. Very important, because in the Balkans, the economy is driven by are driven, I would say, not only in Albania, by public investments, infrastructure and whatever. So we have to be in the position to keep on fueling the needs of the government, of the sovereign. I hope that there will be a consensus also from our European partners in this light. What are the main challenges for the banking system now? This is something that I would like to stress. I agree with all the other speakers that ESG is the key word: environment, social governance. And for sure, at least as Intesa Sanpaolo, we will be focusing our lending activity in that direction, no doubt. But we cannot even forget that the COVID experience teach us that big changes occurred in the structure of the economy. We are observing sectors, activities that are just dying, and other new kind of activities that are raising from the scratch, I would say. So the ability of the bank should be to understand what are the promising sectors and the ones that maybe will have problems forever. Final consideration, because it was touched by all the other panels and whatever, the relation with European Union. I think we have to be clearer. When we say Europe, it's not like that. The large majority of European countries are in favor to start immediately the negotiation. There are few exceptions that have names and surnames that, because of principles or because of still existing local disputes, are blocking the process. This is clear. And as it was always clear, the position of Italy, let's start with the effective accession talks, because this is the main driver to guide and to drive the Balkan economies and toward the standards. And we have again to be clear, we are not talking about entering the European Union. We are talking about starting the accession talks. Means that even if we started today, we need at least 10 years more to enter. Sorry to emphasize this fact, but it's very important, because if we started today with the accession talks, with the intergovernmental meetings, also other financial resources will be unlocked and will help the Balkan economies. Missing this start, there is the real risk that other geopolitical issues will prevail. So
thank you, Silvio. I'm sorry, just to
thank you.
I think your message was absolutely clear, and let's see in the incoming months what will happen to, let's say, the pre-accession talks. It was reached recently, I think even today, an important agreement, a political agreement on IPA 3, and the instruments needed. To make this pre-accession, let's say, easier from a funding point of view, and let's say the Indiki also fund. So in a global perspective, will help hopefully in this direction. And I mean, this is absolutely fundamental. I need to close here because we need to give the line back to the next webinar. But I wanted to thank you all for your excellent contribution to this discussion. And the line is yours, Franco. Thank you a lot.
Thank you, Daria. Thank you to all the panelists for this second webinar that helping us to better understand how banks can support the development of Eastern Europe economy. Now we move from banks to insurance market, and let me introduce to you the third webinar, the third round table, focused on the development of insurance market in the COVID area risk scenario. Yes, these are the panelists of the third seminar, and in particular we have the chair and keynote speaker, who is Pierpaolo Marano, Associate Professor of Insurance Law and Regulation at Cattolica University in Milan. And then the panelist, Safet Kozarevich, Professor of Economics, University of Tuzla, that joined the previous webinar also, and Michele Cirieko. Michele Cirieko is head of bank insurance and partnership in Generali CE Holding. He was also vice president of the Association of the Italian Entrepreneurs in Croatia for 8 years. Alessandra Pasquoni, head of Finance, National Association of an Insurance Company. Before joining ANIA, she worked as a senior advisor in L Venture Group. Finally, Bruno Servan, CEO, General Insurance Asset Management, and also member of the French Actuaries Institute. Okay, we can start. I will leave the floor to Professor Pierpaolo Marano. Pierpaolo?
So thanks, Federica.
Okay,
and,
hi Pierpaolo.
Hi.
Please, the floor is yours.
So thanks, Federica, and good afternoon, everyone, and welcome to this roundtable on insurance. So we will open this session with a 10 minutes speech by Safet Kozarevich to illustrate the key findings of the Southeast Europe country survey on insurance. This speech will be followed by my brief introduction on 2 priorities of the European Union that impact on the post-COVID insurance sector, namely digital transformation and sustainability. And on these topics, I will open the floor to our panelists to discuss with a Q&A these issues. So now, please, Safet, the floor is yours.
Thank you very much, Professor Marano, and good afternoon again. I will just provide additional short key findings of the survey we conducted on the insurance market of Southeastern Europe, based on the official reports of the insurers' supervisory authorities and insurance associations and the other relevant institutions. First of all, regarding the legal environment, I have to say that in the region we have a situation, as you know, some countries are member of the European Union, some that are not, but the EU members already implemented, and they are in different stage of further meeting Solvency II regimes, requirements, and establishing a related reporting process, while the other countries that are not members of Southeastern Europe, they are more focused to the popularization of risk management practice and also to improving the regulation for MTPL insurance.
Così almeno a fine settimana.
Okay.
Da disintossicarmi.
I think someone has the microphone. Please switch off the microphone.
It's okay now. It's okay.
Yes, it's perfect now.
Okay, and I will continue. So we want to say that in the other countries that are not EU members, the regulation is more focused to MTPL regulation and also to improve the risk management processes in the insurance undertakings. Talking about the insurance and market potential, we can say that the total insurance premium for the region is about 27,000 million euros, 27 billion euros. It's actually a very low level in comparison to the Insurance Europe, since the countries have undeveloped, most of countries has underdeveloped market. It's actually 47 times lower than the total premium of Insurance Europe members. So we can see the underdeveloped market. And even the premium would be even less without contribution of Turkey as the largest country, with contribution of 40% to the total SEE region premium. Similar data we have regarding the insurance density and insurance penetration. Regarding insurance penetration, we have 1.8% of GDP in comparison to the European Insurance Europe members. It's actually 4 times lower. Similar data is for insurance density. We have 145 euros per capita in comparison to 2085 or 14.4 times less than the Insurance Europe members. So actually we have only Slovenia, Greece, Croatia, and Bulgaria as the country with the premium above 150 euros per capita. So all the other countries are less, let's say, developed in the sense of the insurance market. Regarding structure of the insurance market, we can see that the life insurance premium is only with 24%. It's also below the European level. Only Slovenia, Croatia, Serbia, Romania, and Bosnia have life insurance premium above 20% of total premium. There are also a lot of diversity among the countries regarding the other criteria. Of course, you can find all details in the report, even for whole market as well for any individual countries. And we can notice that actually, for example, we have a decreasing, extremely high number of companies regarding the in relation to the market premium. There is also in the several markets, for example, we have only 50 million euros average premium per company. It's almost 8 times less than in the Insurance Europe countries members. So, for example, only Turkey and Slovenia have the average premium per company above 100 million euros. That we have a similar situation regarding market concentration. In some countries, we have a share of largest company above 30%. Also, the structure of insurance regarding type of insurance, we have dominance of non-life insurance with 386 companies, while composite and life insurance are about 150 companies. So actually, life business is mostly in hands of the, let's say, foreign insurers coming from the European Union, and the domestic insurers are mostly based to non-life, are more precisely in the mandatory MTPL insurance. So mandatory MTPL insurers cover 25% of total market, followed by other non-life with 51% and 24% for life insurance. Regarding the numbers of company, actually foreign companies with the foreign ownerships, they actually cover more than 50% of the of total premium for the markets we actually have data available. And generally, for the total market, we can say that it's underdeveloped, but there is also very high protection gap, and there is large potential for the market in improvement, especially in the field of life insurance and other non-life, not MTPL. So that's the situation. Now, talking about impact of the COVID-19 crisis, we should underline that it has influenced the insurance industry mainly through the insurers' investments and a lesser extent on the claims. So since the MTPL insurance is dominant and it's mandatory, and the crisis had no a significant impact on these insurers line of business, actually they continue the business operations without any disruptions, but the significant consequences felt in the life insurance due to massive layoffs, business shutdowns, salary cuts, in generally uncertainty about future economic conditions. Talking about claims, payments, significant implication have recorded and because of increased number of cases of business cessation, unemployment, and debts. So it's expected a lower level of profitability insurers in coming years, especially in life insurance lines. And of course, because of rising of unemployment and lower purchasing power because of economic downturn in 2020s. Regarding ongoing digital transformation, actually insurers mostly focus to the online communications in the organizational hierarchy. And of course, from the demand side, we can say that the clients became more interested in life and health insurance policies that cover risks of the corona diseases, but sales generally did not increase significantly. So we cannot say that there was big change in this field, but the largest drop in the insurance premium was in the segment of travel insurance because as we know, the citizens travel much less. Generally, also talking about coronavirus, COVID-19 actually pandemic, we can say this risk is very interesting to the insurers, but insurers have don't have a I can say the problem how to look at that risk in the future, since there is a question of its insurability, and the question is, does insurers look at these risks like the other catastrophic risks, like natural disasters and terrorism, and does covering of these risks needs some kind of private-public partnerships between insurance sector and governments. So these are, in short, main findings. Of course, much more details you can find in the report. And thank you for listening.
So thank you, Safet, and you keep your speech within the time frame, so much appreciated. And so I mentioned earlier that digital transformation and the sustainability are among the Commission political priorities. So regarding digital transformation, so the Commission is determined to make this Europe's digital decade with a clear focus on data, technology, and infrastructure. So several actions should achieve this goal, and I mentioned the Digital Market Act, the Digital Services Act, the proposal on a European approach for artificial intelligence, and a European data strategy to create a single market for data where data can flow freely within the EU and across the sectors. So this digital decade runs parallel to the digital finance package the European Commission adopted in September 2020, including a digital finance strategy and legislative proposals on crypto assets and digital resilience, so MiCo and DORA. So consistent with this framework and with the reference, to the insurance sector, EIOPA's priorities in the field of financial innovation are related to insurtech, digitalization and big data, cyber underwriting and resilience, and subtech. So the corresponding initiatives are many and can be basically grouped into two groups. One includes the activities that aim to learn about new phenomena, to understand if and how to regulate them. And other initiatives can be considered as in a different group, which aims explicitly at coordination and harmonization of existing national rules. In the first group, I remind you the public consultations concerning the discussion paper on blockchain and smart contracts in insurance, as well as the consultation on open insurance, that is accessing and sharing insurance-related data. In the second group, I remind you the guidelines on information and communication technology security and governance. So with reference to sustainability, so the Commission believes that sustainability is a key in ensuring long-term competitiveness of the EU economy and with it, the insurance and pension sector. So insurers and pension funds as managers of large parts of society's risks and important long-term investors are deemed to have a particular interest in mitigating the impact of climate change and facilitating the transition to a more sustainable and resilient economy. So European Commission Sustainable Finance Action Plan includes several actions. I remind you the EU taxonomy for sustainable activities, the corporate disclosure of climate-related information, and the sustainability-related disclosures in the financial services, that is, what the obligations are for manufacturers of financial products and financial advisors towards end investors. EIOPA has been implementing an ambitious strategic plan on sustainability and climate change with the following objectives. Insurers should manage and mitigate ESG risks through their underwriting activities. Insurers and pension funds should reflect policyholder and pension scheme members' preferences for sustainable investments where relevant. Insurers and pension funds should adopt a sustainable approach in their investments based on principles of stewardship. But now let's see how this European framework impacts the insurance sector and specifically the Southeastern Europe countries. So I will ask now discussants to answer some question investigating this framework. So the first question I would like to address to Alessandra Pasquoni. So Alessandra, how to facilitate and increase the development of insurtech and the contamination between insurance and innovation? Which is your opinion?
Thanks a lot for your question and good afternoon to everyone. Now, the digitalization is leading to a significant innovation process, which is affecting the insurance sector in impacting in internal organization, but also in the relationship with the customers. with an extensive use of smart working tools, but for all the employees, but also simplification benefits in the signature of the insurance contract for customers during the lockdown. So this actually innovation process has accelerated during the pandemic crisis, and is mainly guided by a big data production, which is expected to double to 80 zettabyte in 2022 versus actually the value of 2019. And this actually, if we consider that in 2019, there were 3.4 billion people connected to internet, that is expected to increase to 48 billion in 2022. And with 28 billion of devices connected. Obviously, the consequence of all of this is important, and the impact two aspects. The first one is in attention to the data quality, to the data integration, as most of those data will be detected in real time from different devices, but also in terms of cyber risk increase, and we saw that phenomenon during the pandemic crisis. And finally, the digital skills, because we already experienced a digital skills gap, which is going to be a competitive advantage in the relationship between countries. And we already experienced that in Europe with the divergence in digital skills between the North and the South countries, but also between firms, with obviously big firms able to acquire the talents versus small firms. So this is definitely an issue that we need to look at. And also another impact is an increase of interest in all data-driven technologies, such as machine learning and artificial intelligence, which is obviously impacting the insurtech process innovation, and is impacting all the core insurance processes, such as customer care. So the opportunity with the new technology and data to predict and forecast the customer needs and implement ad hoc products, or the risk knowledge, so the opportunity to price a new risk. Let's think about let's think about the catastrophic risk and the interconnection between insurtech and the space innovation. And we already see a lot of contamination of insurtech in the space innovation with the insurtech. And finally, all the claims settlement and the opportunity to disintermediate the traditional actors and to prevent the fraud. As you say before, we also see an interest in open insure with the connection between incumbents and the startup, in obviously sharing data that will implement new services and new business model. Now, obviously, all of this has been in some way limited by the regulation, which is very restricted, and so far in some way limit the opportunity to share personal or commercial insurance policy data. However, so far the insurtech has been in some way stepped back the fintech trends, but we are seeing acceleration. And there are a number of new startups that are growing in the insurtech space, mainly financed by venture capital funds. However, there is actually room for greater contamination between the insurance and startups, and the opportunity, obviously, to increase the corporate financing to improve the interconnection, the innovation between the two spaces. Thanks.
So thanks, Alessandra. So may I ask Safet, what's the impact of ongoing digital transformation in insurance on the Southeastern Europe insurance market? You have investigated this market, so which is your opinion?
Okay, thank you. Actually, digital transformation is very actual everywhere. So in insurance market of Southeastern Europe also, but generally that's not key issue for the insurance market in these countries, since they have many other problems. As I already told, they have a large protection gap. So there are many structural policies they have to do in order to improve, let's say, their market. But of course, insurers should think about digital transformation in every aspect. First, in the segment of product design, they have to think about how to use, let's say, appropriate model, how to generate and provide data based on the data generated by the customers actually, and also to provide a broader clientele in the sense that they need actually to widen their markets and to provide additional covering of additional risks. There are also many ways how they can improve their sales and distribution, since there are many ways how to use online techniques and technologies in order to improve distribution channels. During this COVID pandemic time, they introduced new ways how to communicate with customers, especially in some insurance lines where there is not necessary, face-to-face contact. Of course, digital transformation also provides lower marketing costs. That's very important, of course, and they should think about it. And also, it can provide this intermediation of sale processes. Of course, there are other ways of talking about pricing, underwriting. There is a lot of possibilities, as I told already, to provide consumer generated data. That's still not applicable in the region, but they should think about it, since the insurers, especially since the insurance market is mostly focused on MTPL. There are many ways how they can use data provided by customers, and it could be very efficient in pricing and underwriting process, since the liberalization of market is very actual, of MTPL market is very actual in these countries. They should think how to use databases for this type of insurance. Of course, there are many ways how they can protect against frauds using digital actual technologies, fraud analytics, for example, to find the way how they what causes of frauds are the most intensive, let's say, in some kinds of in some segment of business. Also, there is possible segmentation, automated segmentation, how they can segment of the claims in separate lines. Of course, many other options regarding full service whole day during 24 hours, what is also something that's new in the insurance market, especially in this area. But they also have to think about financial and digital literacy of the customers, how they are actually, since the insurance products are a little complicated to the customers, they have to think how they can use their financial, how the level of their financial literacy will be appropriate to intensive online distribution products and similar. So these are just short possible ways how they can improve their business using digital technologies. But of course, it's up to the market, to the insurers, and they start to think about it. Especially the insurers in the countries who are closer to the European Union market, members of Insurance Europe, they already think about it. They started with introducing these models based on the digitalization. Of course.
Okay, so let's move on to sustainability. So I have a question for Bruno Servan. So, Bruno, why the COVID emergency has boosted the focus on sustainability in general, and what about the Southeastern Europe countries?
Yeah, thank you, Professor. Sustainability has been around for many decades, as we all know, with the Rio Summit in '92, the Kyoto Protocol and the Paris Agreement and so on. So this has been developing strongly all across the continents, I would say. So it's a general worldwide trend. Of course, with Europe, a focus on environmental topics. The COVID accelerated this. COVID, as we all know, created a major shock, causing a major reduction in economic activity and freedom of travel, capacity to work, meet people, supply chains were disrupted, and unemployment increased. Behaviors that were obvious became exceptional, and people know, and the governments also, this could happen again. And the link to sustainability was through, I would say, we had the example of what could go wrong. Nobody could think of it to such an extent. And this is why sustainability became core, to stabilize, to protect as much as possible the economies, the way society works, and so on. And the link to climate change is interesting because the link between the virus, the COVID pandemic, and the climate change, well, it's the global heating of the economy. It's the way biodiversity has been disrupted in some areas, and the way globalization, to some extent, helped this, facilitate this. Also, we now have scientific evidence that in climate change and global warming helps the development of viruses, of course, with global transportation and the movement of people and so on. And so this virus topic really accelerated the analysis on the need to have a more sustainable economy, to protect it, because we realized that our system was globally at some points of weaknesses, and that in order to protect our societies and our economies, we had to have a more sustainable model. And I think this is the key, and we have seen in the recent month the focus on this climate change topic. We have the US changing, the United States changing their views. The European Union, of course, has had even more ambitious goals to reduce gas emission. We have seen the EU Recovery Fund, and we have seen now in Asia, Japan, China also joining the movement to go to zero net emission either by 2050 or 2060. This is causing major disruption, of course, in the way the financial markets move. But of course, the regulators have their own say. And as Professor Marano pointed out in the introduction, we as institutional investors and institutional players, we have now major responsibilities to explain, to be transparent, to take these factors into account into our investment policy. So I would say this is a world trend, not affecting all countries, all regions. It will not change because we see that this can happen again. It has implications for us as investors, insurance companies as investors, but also for corporations when they do their own, of course, when they conduct their business, when they select their suppliers, and when banks go and lend out money. All these activities will factor in sustainability components in the decision-making process. And this is clear. In general, we've been very active on this front, both on the underwriting side, but obviously on the investment side. I will further elaborate on this topic if you wish afterwards.
So thank you for this, for your view. And so now the last question of this first round is addressed to Michele Ciriaco. And we listened. There's a mega trends like climate, ESG, digitalization. So how do you see the development of these mega trends in the Southeast Europe, Central Europe? So, which is your view?
Hello, good afternoon, everybody, and thank you for the question, which is, I would say, perfect for me because I am sitting in Prague overseeing the activity in 10 countries in the area where we are present. And let me say that I can perceive the difference of the development in these two mega trends that we are talking about. I will focus mainly on the sustainability because this is the long term, the big change and the game changer, really new for our region, while this digitalization is in fact already happening now, as the pandemic has clearly shown. In terms of ISG, it is, in my opinion, doubtless that the originator of this trend and the EU initiative does not live in the sea. It is produced elsewhere, has been accelerated by governments, European parliaments and citizens, their electors, who have already developed a higher degree of consciousness, awareness and sensibility to the environmental issues. Governments and people who already feel the need of an urgent, quick and decisive response to the growing severity of the climate change. But it's not by chance that someone has already mentioned the necessity to avoid a green iron cartel in Europe and to avoid this split and the division in the development of this consciousness. Let me only remember that it is not by chance that the German Constitutional Court ruled in April this year that the previous act of the government, the Climate Protection Act of 2019, has been partly judged as unconstitutional because it does not fulfill the rules, or better, prolong after the 2030 the real tackling of the reduction of the greenhouse gas emissions. And the Bank of England, I will remind, already active in the past, is to conduct this year the first stress test on the impact of climate-related risks on the UK financial system. On the contrary, in a recent survey last year, conducted by the Global Property Forum among the investors, which were mainly in real estate, but this gives a picture, the CE countries with Hungary and Czechia on the lead have resulted as the ones who have the least number or share of respondents who have answered that the factors of ESG and sustainability do not play any role in their investment decision. So, as a confirmation of this fact, I would say that in CE, we lag behind Europe, and in fact, Poland has been the only country which have issued, so far in the CE countries, a first sovereign green bond in 2019. So we are really at the beginning of this process, and this will transform our financial world in the next years. But this has two reasons, in my opinion. One is that the financial markets in CE are really small, almost non-existent, and therefore ideas and developments and rules are set outside, elsewhere. Currently, my information tells me that Amsterdam, Zurich, have started to emerge as the financial markets lighthouses regarding sustainability and ESG products. And the second reason is the really early stage of understanding the full impact of the new directions and regulations, including the complex taxonomy, still under development. This requires a deep understanding of the principles of mitigations and adaptations to the climate risk change that requires also that the taxonomy brings to us. From next year, the taxonomy will define which businesses and transactions can count as sustainable for the purpose of and will cover only the climate change. Critics already argue that the taxonomy is very complex, but my opinion is that the UK taxonomy is yes complex and give hard thresholds in terms of mitigations and adaptation. But it's crucial that governments and the different businesses understand that they can use the taxonomy to create a plan how to reach the tough thresholds, and they do not need to meet them already now. The CE region and its countries, especially in the southern part, and also the business related, are at a different starting point. and some will need more time to achieve the goals. But the purpose is to move all together forward. Therefore, three factors are crucial to succeed. The transparency and clear rules means governments need to implement quickly and fastly the taxonomy and to make country regulations clearly translated the taxonomy. Institutions need to set quick rules, communicating intensely to the public, coordinating the efforts between private and public sectors. Don't forget that the majority of the investments will have
Recording stopped.
in the next 5 to 10 years. And financial instruments also, we need some ESG products, compliance, and
Recording in progress.
Don't forget that the European Investment Bank has already decided to become a fully fledged climate bank. And the European Central Bank has already committed to increase the share of own portfolio of green bonds. This is a move towards non-neutrality, but positive in the net reduction of gas green emissions. It is evident, therefore, to me that a major role has to be played by governments and institutions who need to take the lead quickly and drive the transformation, not only of the businesses with the regulation and of the financial markets, but also of the public opinion, making it possible to clearly understand that the only way that we have ahead of us is to embrace each one personally these goals and targets and to act individually and collectively for the success of the transformation. In the digitalization, I will be very quick and say just that this is already happening and we are part of this movement, part of the transformation, and we see intensive movements in the sea region, almost, I would say, a sort of second Silicon Valley in this period of digitalization with many so-called unicorns in the sea. I know that the time is already.
No, thanks. We can come back maybe in the second round. So now I think we can keep our focus on sustainability, and I would like to listen the opinion of Alessandra on how can insurers support the sustainable transition, which is another important issue.
Now, climate change has impacted in the insurance sector as they act in the dual role as institutional investors and as obviously insurance coverage. Now, in its broad sense, which include environmental, social, and governance, sustainability is integrated in all business processes, from reporting, governance, investments, and underwriting. Now, ESG investing is actually emerging as a leading change in all investment process. It actually affects all the value chain from manager selection, investment analysis, fund distribution, advice, but has also implication in terms of risk, shareholder returns, and asset pricing. Now, market appetite for sustainable investing is actually increasing, and also the offering of green investments is increasing to meet the demands. In this perspective, alternative assets are actually very important to support the energy transition to the new goals of the EU. And the amount of investments in alternative assets is actually expected to increase a lot in the next 2 years, with the major increase in infrastructure investments and illiquid credit. If we consider 2020, despite the COVID, the ESG ETF net inflow increased to over $75 billion, 3 times more than the previous year. And there were actually the launch of more than 120 new products. Now, if you consider last year, the end of the year, there was actually the launch of the new EU benchmark regulation, which set up two new benchmarks for sustainability. One which include all firms that are already compliant with the Paris Agreement, and another one which include all firms that have already implemented a transition plan to 2030 goals. Now, this is obviously will expand the number of new products linked to sustainable investments. It's also important to consider that the European plan is actually foresee around 350 billion of dollars of additional private investments to achieve the objective in the period between 2021 and 2050. This means that the support from institutional investors is critical to achieve those objectives. And the insurance company already positioning their portfolio toward the sustainability. If we look, for example, at the Italian insurance portfolio, which reached in 2020 over 1,000 billion euro, 4.5% of the portfolio was invested in alternative assets, which is nearly double what was invested in 2018. And we expect that obviously this percentage is going to increase. And if we look at the green bonds and the social bonds in the portfolio of insurance company, that was last year over 7 billion. So more than double the amount that has been invested in 2018. According also to the Climate Bond Initiative, the new issue of green bonds in 2020 were actually nearly 217 billion. And if we look at the annual issuance, the majority of share was actually issued by US, but then followed by Germany and France, China, and Netherlands. So it means that in the first three positions, two countries were European. And the first fifth position, if we look at the first fifth position, three were European countries. So this means that the sustainability is really important for Europe. And it's important to consider that in January 2022, will enter into force the taxonomy, which will define what business are sustainable or not. Now, this poses some issue, as in the meantime, without a clear regulation and a clear understanding about what business can contribute to the climate change mitigation and the adaptation, insurance companies have some issue when investing. In fact, they are actually based their analysis focusing on sustainable rating, which are provided by different providers that use a different methodology and data sets. That's obviously is limited because it's difficult to have transparency across the portfolio. Now, in addition to obviously the legislation that hopefully will make some transparency in 2022, we also assisting at the entering into force of the European single access point, so a single database for financial and non-financial information that should make the data access to all investments easier and costless. However, we are still at the first consultation of the framework, so it may actually take more time. And in the meantime, all investors are actually having some challenging in investing in sustainable investments. With regard to underlying activity, obviously insurance are very well impacted by the climate change. And natural disaster has actually increased a lot in the last decade, with an increase of losses that was nearly 70% more than last decade. And that obviously increased all the costs for insurance, increase of the premium for making insurance to all firms that have a connection to some carbon activity. And the market is already discounting this trend because we can see that the risk premium of the firms where the business in some way linked to carbon activity is increasing versus the most sustainable firms. So that will definitely have an impact on the asset allocation of all the portfolio. Finally, I would like to conclude with just making the connection and between innovation and sustainability, as they are very complementary. Now, there are many innovations, for example, in fintech, that can mobilize new resources to finance the EU Green Goal. Let's think about the crowdfunding or the open finance, which can broaden the base of investors, but also the range of the new instruments. Now, in addition, also the machine learning, artificial intelligence can also support the monitoring of ESG factoring, and so can reduce or mitigate the risk of greenwashing. So the European community, but also the European Commission, the market, so are paying really close attention to how digital finance can support and bring additional resource to the investment needs for the new Green Deal. Thanks.
So thanks, Alessandra. So I have a question for Safet. So what's the role of the insurance undertakings in sustainable investments in Southeastern Europe?
No, thank you. It's difficult to say, since the insurers as institutional investors in the market, in this market, they don't have such important role like in the Western European countries. But generally, there is improvement in this aspect since the new trends and new regulation for the European Union regarding the sustainable investing and the practice of investing of money in the companies and funds with positive social and environmental impacts try to be field of interest in regulation in these countries also, and there are different ways how it can be stimulated by the regulation. So as the first, the countries, the governments, they need to have an active dialogue, let's say, with the insurance sector in order to provide appropriate regulations for stimulating this kind of investments. Since it's definitely not, as I say previously, not key issue for the insurance market like it is in the Western Europe. There are also some initiatives from the, for example, foreign institutions. For example, in Bosnia, we had interesting projects regarding financed by UNDP, and they are focused to provide protection against catastrophic natural disasters risks. That's very important for the country, for this protection gap, and also for insurance markets because it will increase the market potential, and it's also interesting for insurers. Generally, regarding the investment policy of the insurers in the country, in these countries, they are mostly focused to investment in the bonds and the real estates and deposits. They are not highly, they are not so developed financial markets, so they can make various options like in the other countries. So they have to think first how to provide sustainable investments through the providing, to finding the insurance products that would be in focus to the climate change, natural disasters, and the other pandemics, and the other aspects that is field of interest for sustainable investment. But also they have to think about, how to find appropriate companies and funds, and how to establish these companies that can improve this segment of investment that is coming to this region, and it's coming especially in the last few years field of becoming field of interest in the Europe, and our insurers have to start thinking about that. That's shortly, of course, considering the time limitation. That's just resume. Thank you.
No, thanks, Safet. So I have a question for Bruno. So what's the role of the insurance sector in the challenge of sustainability?
Well, you can see the roles on both sides of our activity, the balance sheet. On the underwriting side, it's absolutely clear that we have to develop and promote more sustainable products, more sustainable behaviors. The key condition for that is adequate training of our sales forces so that they can effectively explain the challenges to the clients. So this is something which is very strong and powerful in our organization, for example. If I look at our group, in 2020, we reached, Generali Group reached 17 billion of premiums, which are coming from social environmental products. So the first comment on the underwriting side is to be able to offer products which effectively answer to these sustainability challenges and help also clients better understand. We spoke about the insurance gap or the protection gap. I think, of course, some items are very difficult to insure, like a pandemic, but in some areas, insurance products can help the economy and the clients and the population increase their insurance coverage. This was on the underwriting side. On the investment side, all insurers, of course, including ourselves, we have very structured sustainability approach in the investment process. It's basically a four-layer approach. First, we have what has been existing for many, many years, which we call the exclusion filter. Things we don't want to touch, topics, sectors we don't want, on companies we don't want to invest. Initially focused on human rights and the UN Global Compact, we have extended this to the carbon-intensive sectors in 2018. The second level is what now the regulation is asking us to do, which is integrate ESG factors into the investment process, into the investment analysis of the positions we buy, and to be able to quantify that also, which is something very recent. It will be implementable soon. And this is a challenge for all asset managers and for their clients and for all insurance groups. So here, this is what we call ESG integration. The third topic is, we touched upon it already in the discussion, is thematic investing. Alessandra Pasconi mentioned the green bonds investments. Of course, they are very significant at the industry level. So sustainable projects, green bond investments, this is what we call thematic investing, or in some cases, impact investing. And the fourth is active engagement, active ownership and engagement, because at our level, globally, we all have to strive to go for a fair and inclusive transition. That's the key topic. The topic is not to exclude. The topic is not to send to other areas of the world some activities we don't want in Europe. The topic is to make it a global transition, but it has to be fair and inclusive. And this is why, in our point of view, this is shared by most, of course, our insurance colleagues and companies, is engagement with companies. We have, of course, it's a difficult transition. There are some social impacts which are very significant on the companies, on their workforces, on the investments they have to do. But this is a real change, and we cannot escape from that. That's what I would say, Professor.
So thank you very much. So I have a last question to Michele, and then I will ask, the $1 million question to all of you. So the question to Michele is, what are, on your opinion, the impacts of these trends in the Central Eastern Europe, and specifically, of course, on the insurance industry?
Yes, in the future it's open. Impacts, I would mention mainly One is very evident to us, and it's been, I would say, grateful to the pandemic. We switched 95% of our employees and processes in a remote in 1 week in March 2020, all over our units in the CE region. We enabled all the sales forces which were not yet having it, some they had, some they not, digital tools to discuss with their customers and continue a normal, let's say, activity or business activity, even in remote mode. What we found out and what this has shown us is that our customers still need a face-to-face contact, still need a professional consultation and advisory, together with the digital tools. So what we see that instead of a depersonalization, the pandemic has created a new situation, a new need, and the need of a personal contact together with this. So exclusively only online contact is not effective. This is one thing that is fully in line with our strategy to be lifetime partner to our customers and agents. And I would say this is a positive discovery. On the other side, we can say that especially the next generation EU plan will boost public spending, and in our countries of the countries of this region, the largest beneficiaries are for example, Bulgaria, Croatia, with almost 12% of their GDP in form of grants. And they could even add up the loans which are provided by the Resilience and Recovery Plan. Where we see the importance, first in the additional fiscal spending, and so the growing, I would say, wealth of the population. Secondly, the real quick implementation of the projects, which do not depend on the co-financing according to European Union rules. This will allow an easier implementation of the projects, and this will bring also further wealth in the region. And then, honestly, there is also a good news on the region from the investment point of view, but my colleague Bruno can know much better about it, is that this will provide a release or a relief on the country risk and on their internal funding costs, let's say, external funding costs. So I see all positive reasons why to appreciate, embrace, and congratulate the European Union for this absolute change that, as we said, is still to be built.
So thanks. And now, as I mentioned, the 1 billion euros question, which is, how can I say, I address to Safet, but please feel free to supplement the answer. And this question is, so what are the structural policies necessary for accelerating the Southeastern Europe insurance market's development? So, what do you think?
Okay. This is really a very question for $1 million for our markets, but I will try just shortly give some, let's say, key issues what the market, what the regulators, what the associations have to do in the future period if they want to improve the market, since there is a lot of space, and as I already told, there is the growth is expected much on the higher level than in the other sectors of the economy. First, insurers have to restructure their operations and their supply chains. They need to be more resilient to the shocks. So they have to think about their internal organizational solutions. So, of course, the issue of digitalization we discussed about, that's also very important. That should be highly accelerated if they want to improve the market. Of course, the question of investments need to be more efficient. Of course, the investments need to be increased, but operational costs should be diminished in the sense that they provide much higher and better, they have better monitoring and control of their investments. We have problems on both demand and supply sides, and insurance need new products. Insurance markets need new products. There are products, missing products for example, agricultural risks or catastrophic risks, natural disaster risks. They need actually, in this sense, they need new ideas, new products to narrow these protection gaps. Also, as I told, market has a lot of potential, but there are also many solutions regarding public-private partnerships, especially if we are talking about agricultural and natural catastrophes risks. There is a lot of space to cover these protection gaps, and digitalization gives a good chance for this. Now we have ways how can we use these new technologies. Also, there is a process of European Union integration. We talked about it today. It has high impact on the insurance market. I already made some research previously. This correlation is obvious, and there is also good cooperation with EU regulators, and it should be also utilized. Regulatory framework need to be appropriate. There is a necessary dialogue between insurance market and the government, and also academics. It's necessary, and of course, problem of financial literacy. Talking about financial literacy, there is much much more efforts in order to provide informations to different ways, on different ways by insurers, supervisor of associations, in order to increase financial literacy of the potential customers. It could be by pamphlets, brochures, web pages, and the newspapers, internet. There are many ways how they can do it, and it would be also very, very helpful. And I will start with this for this meeting. Thank you.
So thanks. So I don't know if the other discussants, they want to provide some suggestion on how, some suggestion to regulators in the southeastern countries on how to improve, how to develop the insurance market. So especially, I don't know if Michele, from your position, you have an overview, or maybe also Bruno and Alessandra. So just a few lines if you want.
Michele? No? Switch on?
I wanted to speak, but I was not
okay.
Okay.
Again.
Now it's working. Very good. Very quick, I would say what I can say from my observation point here. It is that a lot has to be done, obviously, to make the insurance industry part of the institutional investing in society in many of these countries, where the motor TPL is basically the only insurance we need, which is usually covered in some of the less developed countries. What I suggest is to look and use the insurance industry like it was in the past in other Western countries to allow reforms. I think also for example, for the health, leave some space to the private insurers to help and surrogate part of the state provided services, and this will also help the development of the private sector and improve the quality of the services delivered to the citizens.
Okay, so thank you. And I think, first of all, let me say thank you to all of you for this inspiring, discussion. You provide a very good overview of the issues related to, sustainability, digital transformation in general, and with a specific reference to the South European countries. So, and now, how can I say, back to the studio and see you the next for the next Trieste.
Thank you for Paolo, and thank you to all of you for this very interesting roundtable. And now we have to stop for 3 minutes. Please stay tuned, and we say in 3 minutes.
Mi date la linea?
Sì,
Hello, good afternoon, ladies and gentlemen. So finally we have arrived to the session with the title is Recapitalizing the Eastern European Economy, What Role for Capital Markets? I want to introduce quickly Jim Turnbull as chair and keynote speaker. Jim is Deputy Director of Capital Market Development in EBRD, and he has more than 30-year experience in capital market projects in several countries. So is the right person to talk about the capital market development in Southeast Europe. Thank you, Jim. Very quickly, the other people, the panelists will be Margarita Economides, CFA Principal, Oliver Wyman, Kate Galvin, Associate in Capital Market Development in EBRD, Ivana Gazic, President of the Management Board of Zagreb Stock Exchange. Thanks. Jona Levine, barrister, Minerva Chambers, and Sara Lovisolo, Group Sustainability Manager at the Borsa Italiana. Okay, so Jim, the floor is yours. Please take the line.
Thank you. Can you hear me? Can everyone hear me?
Yeah.
Okay. Okay. It's actually hard to tell because it's a very unusual. It's our second Trieste event, which is actually being held remotely. I'm in Glasgow, and half of the other members of the panel are in either London or somewhere in Italy or in Croatia, and we hope that this is the last time that we have to do this. But this is a very, very important subject because we're just going through one of the most severe crises that we've ever seen in terms of financial markets. And this is on the back of we're still trying to repair the financial system after the global financial crisis. Now, in terms of it, we want to cover a fair bit of territory here, but we want to also allow a little bit of time for Q&A. If you have any Q&A questions, please just address them on the chat panel, and Anastasia will let me know what they are. But without further ado, I would like to pass the floor across to Iona Levine to talk about what the potential role is for the capital markets in repairing the damage done by COVID-19. Over to you, Iona.
Thank you, Jim, and thank you all for inviting me here. Of course, it would be nicer to be in Trieste, but we have to just do it virtually. I don't think, and we'll see when we come out of it, and maybe we want to take a poll at the end, that there's going to be any quick fix to this, okay? I think it's going to be a long uphill struggle, and I'm sorry if that sort of sounds a bit depressing, but I think we have to be a bit realistic here. And when we talk about capital markets, I think that the good thing, though, is that we should look more broadly, possibly not the good thing for two of my panelists who would want to concentrate possibly and will be concentrating on stock exchanges. But I think we need to look more laterally at what we mean by the capital markets. Simply, we need to get funding to those companies who need funding and who haven't been taken back into state or quasi-state ownership. So when I say look at the capital markets, I think we need to be very expansive here. And I think we need to look at things like private equity, venture capital, angel investors, accelerators, incubators, all of the usual funds, and of course pension funds, which Jim will come on to talk about later, will figure very highly in rebooting the capital markets and the economy, but also things like crowdfunding. And so today I'll give you an example. There's a shortage of lithium for batteries. So in England, and I think we need to sort of reference this back to the real economy, how can the capital markets help the real economy? Otherwise, they're always talking about how can the capital markets lend more money to other members of the capital markets, which is not what we should be talking about. We should be thinking about how does it go to the end people that need it, which are the companies that are going to reboot and regenerate our economies. So today, recognizing that there's a shortage of lithium for batteries, I thought I'm going to mention crowdfunding. But I've never done any crowdfunding. How does it really work? How easy is it for somebody sitting here today to decide to crowdfund? So actually, I typed lithium batteries, Cornwall, which is a part of England that used to have in the 18th century a big tin mining business. And it's been decided that they will look at lithium. So I did a real life example just before I came on. I thought, can I crowdfund lithium batteries? And the answer is yes. So when we're looking at capital markets and who's in the capital markets, retail, pension funds, banks, who's in the capital markets, and how do we actually deliver value to the underlying economies? and how do we actually access the capital markets, I think we should think really laterally.
Thank you very much, Iona. And even though there is an exchange presence here, I'm going to welcome Ivana Gazic to actually speak about this particular element, because the Zagreb Stock Exchange is one of the most vertically integrated stock exchanges in the region, with various platforms and supporting various funding mechanisms. So over to you, Ivana, just to speak about the role of the exchanges in the region in mobilizing finance into sectors that need it.
Good afternoon, everyone. Please allow me to first congratulate Jim on putting together the first all-female participants panel in the history of capital markets of the world. In my 11 years working as a CEO of the exchange, I have never seen this. So to go back to your question, Jim, we have realized 5 years ago that we simply cannot do much if we are not supporting the companies in all stages of development. And this is why we started together with Estonian company called Funderbeam, a crowdfunding platform that is called Funderbeam Southeast Europe. And we managed to close 11 fundraisings in a total amount of 5.5 million euro, which might seem not much, but we have actually enabled companies to grow in a market that didn't have any venture capital funds, that didn't have any other investors into these sort of companies. And we are very proud actually on the achievements that we have managed to do with this. And we have also gained a lot of attention of the investment community in Croatia, because we were the only exchange in the world that did that. Many of the people said that we are going into unknown territory. However, I'm very hopeful that some of these companies will soon join the second platform that we have, which is registered at SME Growth Market in Europe. And taking only into account, we might have a couple of new issuers on the regulated market in the future, because I think this is the logical role of the exchange, to raise money, not connected with the size of the company, just raise money for the companies that really need it and that might be issuers on the regulated market of the future.
Okay, that's very, very helpful. So you see the exchanges as being a financing centre for anyone who needs particular forms of finance from the capital markets?
Yeah, definitely.
Okay, and clearly, right there, in that particular area, one of the questions that we're going to have going forward is what's going to happen. We recognise during the reconstruction in the post-COVID-19 period that there may be some government intervention in strategically important organisations, and potentially some nationalisations, at least in the short run, to make sure that these are economically viable. I'd like to flick this across to Iona a little bit and ask her about her concerns about whether the road to reprivatisation of these entities is being thought of, and what needs to be considered in terms of reprivatisation once the worst elements of the COVID-19 crisis are over.
I think it's inevitable that we're going to have what we can call nationalisation or taking into public ownership. I think, unfortunately, now is the time to put aside all economic theories and sort of competing arguments about whether privatisation versus nationalisation is the right thing. I think there are some obvious industries that lend themselves to public ownership, at least in the short term. And we've seen this. We saw this in 2008 with the banks. We continue to always see it with the airlines and some car manufacturers. So I don't think there's anything new. And I think that if there was a choice between letting industries collapse and having to get over the sort of the economic arguments about which economic theory do you subscribe to, I think putting it into public ownership is the best way of dealing with it for society as a whole. But having said that, it should be temporary. And what bothers me is that it may not seem to be temporary, And then the question is, what is temporary? And if you look at what happened with the banks, if I was to tell you that even now, I'm sure all of you know RBS, you may confuse it with NatWest, but it doesn't matter. Let's just call it RBS. If those of you who knew that RBS was taken into public ownership in the last great financial crisis, and bits have been sold back. But last year, as a result of COVID, the British government decided to delay selling it back to a year. So if I tell you it was bailed out in 2008 and 62% of it still remains in public ownership, and that there's no roadmap to sell it back until March 2025, then, you know, the whole idea that you take it into public ownership, make it better, and then sell it back on the capital markets, there's a timing issue here. And by my maths, it's 17 years for RBS.
And theoretically, it could be equally long for any industries that are going to go through a nationalisation process, particularly in areas such as Southern and Eastern Europe, where the capital markets aren't particularly well developed. Would that be your understanding?
Yes.
Okay. I think that I would definitely subscribe to this view. The question that often gets asked of us, EBRD is clearly an IFI, and it's an IFI that's very, very interested in the area, in the region. The question that often gets asked to us about us is, what role does EBRD play in this? And I'll take my moderator's hat off in this respect, and I'll put my speaker's hat on. Basically, one of the things that needs to be remembered is that the magnitude of this crisis is huge, and the balance sheet of all IFIs is finite. So the IFIs have to look for things that are going to be valuable, you know, but they can't be actually there in a place where they're going to guarantee every debt physically known to man. It's just cannot happen because of the balance sheet sizes of all the various IFIs. So one of the things that we've tended to look at is we've tended to look at new products for this time. One of which that we're looking at is we're looking at things called equity bridges for companies that are basically good operational companies but are going through a cash flow crisis at this particular point in time, replacing that with equity and not debt, at such a time that it can be actually paid down when the situation gets a little bit more clear. That's one other area. The other area that we have supported is sustainability-linked bonds, right, which is an area of green related to green bonds, where we're trying to get people to change their behaviour a little bit during this period of time without having to adhere completely to green bond principles. But another interesting one that the IFIs have looked at, and we've only done it in the Baltics, but we have high hopes of doing it in this region, is commercial paper programs. What we're seeing is that a lot of corporations are not able to access the same form of financing that they used to from the banks. So what we're doing is we're advocating the issuance of commercial paper, which is obviously in security form and could mobilise cash from people like the pension funds. So we're looking at solutions, right? But the key in the IFI world has to be mobilisation. How can we mobilise more people to enter into the financial markets of Central and Southern Europe? And that's a very, very key mix. So everything is predicated on designing products, right, that long-term institutional investors, such as pension funds, will look to buy. So that's generally speaking what our process is. Now, we're not helped globally by the fact that with government balance sheets being hurt by the financial crisis, there's a tendency to want to renationalise Pillar 2 and Pillar 3 pension funds. So the mobilisation then, if that does happen in some of these countries, the mobilisation has to come externally from foreign investors. Now, one of the things is we all love foreign investors, but we love a certain amount of them. We don't want to see a huge amount of them, and we're a little bit concerned globally, right, that nationalisation of pension industry at this particular point in time may be throwing the baby out with the bathwater. We may not be creating a long-term sustainable investor environment in many of our countries of operations. So our advocacy would be to continue to support these pension funds. Now, this is the area that we've actually spoken about. Now we're talking about big systemic industry, you know, assisting the big systemic industry. But let's be realistic. 95% of entities in Central and Southern Europe are basically SMEs, right, according to the EU definition. And for that, we have to look at SME solutions. SMEs are not going to be nationalised by the state, right? They're not big enough. They're not seen as being systemically important. So I'm going to flick it over to Sarah, who's got some unique knowledge on providing finance through the capital markets for SMEs. Sarah?
Thank you, Jim. Borsa Italiana has built significant experience in terms of funding SMEs and narrowing the gap between SMEs and the capital markets. We've done these through a number of programs. One is a pre-IPO program called Elite, which helps SMEs transform their business model and their governance to make them fit to deal with long-term investors. So this is an important first step in order for companies to be able to have those conversations with institutional investors who take a different look than banks at a company's business. Over 1,500 companies have been onboarded in these pre-IPO programs. Some of the cohorts, as we call them, are just focused on ESG issues, on sustainability. There are sometimes big listed companies that want to involve their supply chain in this program, so that their supply chain companies also improve their governance and their focus on ESG. On our capital markets, we see specific transactions that support SMEs. To mention one that is linked with this COVID, with the COVID pandemic and the liquidity crisis that it has engendered, our National Promotional Bank, CDP, has issued a 1 billion euro bond on our market, a social response bond, it is called, that supports SMEs, providing them with bridge funding to make sure they get relief to weather the crisis and get back on their feet once the crisis is over. So this is another useful way to create this bridge between capital markets and SMEs. A third example I can provide is our Extramot Pro Q market. It's a it's what you would call a mini bond market where private companies issue bonds. And it's been a very successful market with high levels of integrity and reliability. And we've seen also a number of small companies issue green bonds there. And it's been a very significant way to create a connection between SMEs and private debt institutional investors with an expertise in this type of securities. It's a market just for professional investors. So for investors who have a specific knowledge and who have specific capabilities to understand this asset class. But it's been very successful, and we believe it could be an example other countries could draw from. So I'll just stop here.
Yeah, Sarah, I just have one question about the social response bond. Who does the lending assessment to the SMEs that are lending the proceeds of the bond?
So for this type of bonds, the issuer, in this case, our National Promotional Bank, has created a framework. So there is a governance system, and all the borrowers have to meet the criteria set out by the bond framework that covers the full MTN.
Okay, that's good to know. Thank you very much. That's very, very helpful. There may be an opening for such a thing in Central, Southern and Eastern Europe. Obviously, there are some governance principles involved in that. So as there are some governance principles involved in that sort of approach, Margherita, would you be prepared to comment on the governance process that they would need to adopt in that particular area?
Yes, I think in terms of the overarching governance principles, it has to come from the board. The governance has to be set by the board, and then that has to be reflected across the organisation. And I think we can look at kind of best governance principles which have emerged. So I think traditionally boards have been quite say backward-looking rather than forward-looking. Boards have been more informed rather than part of the decision-making process. Boards also typically haven't been diverse, which can lead to groupthink. And also boards are, in terms of the materials that boards receive, they generally receive huge amounts of documents, and it's very difficult for them to be able to make appropriate decisions accordingly. So particularly related to kind of social lending and green lending, etc., the typical principles of having a more agile board or a board that's fit for the future hold, which I think include having an explorer mindset, so being able to look forward looking and have diversity of thought. And having diversity of thought relies on having a group of diverse members on the board, both in terms of gender, age, ethnicity, background, expertise. And I think that's very important. I think you can also encourage having diversity of thought on the board through engaging in exercises when making decisions, such as red teaming, where you have one member of the board who plays the contrarian view, or you have different members of the board wearing different hats. So one member is responsible for creative thinking, another member is responsible for analytical thinking, etc. And this can all help when making decisions about hot topics, such as social lending and green lending. And I think also on that point, having an explorer mindset also ensures that boards are open to external opinion and external thought. So inviting experts in these areas to board meetings, both as part of trainings and as part of key learnings and decision-making processes, is also fundamental. And that enables them to bring kind of fresh perspective and challenge. Then in terms of active participation, the board needs to be brought in earlier. So typically at the moment, when you're relating to sustainable lending, boards may not necessarily have the right reports with the key metrics for them to comment on decisions. They might just be sent very high-level documents. And there need to be the appropriate board committees or committees at the executive level, enabling boards to work closely with to be able to make those decisions and having the right metrics to look at. So looking at, the number of new loans that are green or transition or sustainable, looking at the number of loans that can be classified as social, and actually having key metrics in place in terms of what those definitions are. What does social lending include? What themes does it include? Does it include affordable housing, lending to minority groups, etc.? And then on the green and transition side, and we'll come on to that later, but in terms of how you define what is green and what is transition. And I think then the final thing in terms of corporate governance at all levels, at the board and at the executive level as well, is that there needs to be a process and a formal process in place to measure, benchmark and improve. So the amount of lending that is done and who the lending is done to needs to be measured and monitored on a kind of continual basis, with a forward-looking process in mind to see, what's the next target we're going to reach, what's the next milestone we're going to reach.
Okay, thank you very much. I brought that in a little bit earlier than I expected, because I thought that it was very important when you're establishing a government entity to at least talk about the governance principles, the general governance principles involved. But if I can just go back a little bit to one of Iona Levine's pet subjects. Iona, obviously, Sarah has laid out some of the key areas for SME financing solutions, but you've got particular views on the use of incubators and regulatory sandboxes. Would you like to expand on those and how we can use those to mobilise capital into particular sectors?
Yes, I think certainly in terms of regulatory sandboxes, I think they're a great idea. The BIS recently published a paper on this, so I'm just going to quote some statistics. And for those of you who want more, it was a paper that they released in November 2020, because Jim and I have been having a great debate about, are regulatory sandboxes good or bad things? In my own experience, I think they're an excellent idea because, having practiced in the sort of financial markets for more decades than I like to sort of own up to, it's not always completely apparent which side of the regulation something falls. And, it's not always apparent whether it's the activity that's regulated or whether it's the enterprise itself that's regulated and whether this makes a difference. So there are these things that fall between gaps. And the more that we've gone into fintech and the more, things have developed that look like banks that aren't banks, it's been more and more important to be able to phone a regulator and get some sort of sensible answers. So I think that sandboxes are a great idea. And in support of my argument, I'm going to bring out the BIS November 2020 paper, which says that firms that join a regulatory sandbox increase their probability of funding by 50%. From firms that didn't bother to enter a sandbox, and those that go into a sandbox increase their funding by 15% after they've gone into the sandbox. So I think it's a fantastic idea because it makes those who are running the firm concentrate, put all of their efforts behind what they're trying to develop and sort it out in an earlier stage and get proper answers. And I think it also acts as some sort of label of acceptance that you've gone through that and you've gone into a regulatory sandbox. So I'm definitely in favour of them.
Well, that's wonderful to hear. Now, you've heard a general overview of where we see capital market financing. Basically, the capital markets can finance particularly any sector at all. But, you have to find a willing series of investors that are happy to actually enter into the product. So one of the keys in this particular area is product development. And we've already spoken about that. Iona has stressed regulatory sandboxes. Sarah has stressed innovative solutions through the government. And Ivana has suggested innovative solutions via the exchange and also via the usage of private equity funds. All of these are very, very important elements. But who are we to say that they promote a solution? I don't know that any of you are completely aware of how many people attended this morning's panel, but there was a panel this morning that was held on what the views of youth are in the region regarding the rebuilding of the region's financing as a result of COVID-19. Now, Kate Galvin attended that meeting, and I wanted her to give a quick summary of where youth sees the priorities. Are we, as a bunch of older, more mature, experienced practitioners, are we taking into account the views of youth when we're talking about the reconstruction of the region via capital markets? Kate, over to you.
Thank you, Jim. Well, I think on a kind of more high-level, general level, I think what the youth panel was saying this morning and what's generally being said by the youth across the EU is that the number one way that we can ensure that young people's needs are recognised in the post-COVID recovery is by giving them a seat at the table. And I know that sounds very simple, but I don't think it's really said enough. That obviously having younger people in decision-making positions is extremely important. And if they're not decision makers themselves, then there should be kind of room and space for their voices to be heard and for their opinions to inform these decisions. And it goes without saying, of course, that these young voices should be from a wide range of diverse backgrounds. To echo what Margarita was saying, that diversity is so important because youth, like any other segment of the population, are not, one homogenous group of people. And I think a lot of young people today, and in fact, polling published yesterday here in the UK showed that 3/4 of 14 to 24-year-olds feel politicians are rarely listening to their views. And I think this is exacerbated by the COVID pandemic. So if we want a recovery that really works for Europe's youth, young people need to be part of the debate, and not just as a tick the box exercise, but because they actually have genuine solutions worthy of being taken seriously. And it's not an abstract thing either, because, you know, if we look back on the previous financial crisis, many of in fact, youth's needs were not taken into account at all. And many youths today, particularly millennials, are still burdening that debt and may do so for the rest of their working lives. So, you know, real life examples of that take the form of, you know, unaffordable housing and unreliable employment. Because even before the COVID pandemic, young people in Europe who were entering the workforce were entering a job market that was really characterized by casual employment, underemployment, part-time employment, wage stagnation. And of course, this has been exacerbated by the pandemic and the resulting lockdowns, which has really disproportionately affected many industries in which young people work. And what was interesting for me to hear from the panelists this morning, which was a really excellent panel, was many of the panelists referenced to the need for sustainability and green to be part of the recovery plan going forward. And I know this is said a lot, of course, but it's important. And I think COVID-19 has unlocked a new energy among young people who really want to make a difference and know how much that the recovery is going to affect them, so that they're really kind of fired up about it. And also digitalization was mentioned. I know we were speaking about fintech and how important it is, but I think the panelists, many of them referenced the fact that digitalization can kind of stymie that regional brain drain that has emerged in many of the regions in Europe, and hopefully transform the brain drain to a brain gain for many of those regions, which was very cleverly put by Ognian Markovic on the panel this morning. But I also, you know, it's not all doom and gloom. And just to finish, I think it should be said that politicians and business leaders are beginning to listen to young people's needs and opinions, far more so than in previous financial crises. And for example, of course, the main focuses of the EU's plan to build back better for the next generation post-COVID is supporting a green and digital recovery. And these are also the priorities of the EBRD. And indeed, the European Green Deal, which predates the crisis, will form a centerpiece of that recovery. But I mean, we shouldn't really rest on our laurels in that regard. And I think we should continuously demand more from our political and business leaders to listen to young people, because they really should be taken seriously when formulating the pandemic response.
And that, I think, is an absolutely wonderful summary of moving into the area that is concerning us. Even though this expression, building back better, is being bandied around, and I'm getting heartily sick of it, to be perfectly honest, but it is actually providing us with a platform, because we now know that because youth is actually going to be a key and very important part of the recovery process, that we need to listen to these views. And we can see that recapitalising the region is a major task, but we also see that there's a desire by the broader community not to build back in the same way. Now, that's not saying that the mistakes won't happen again, but there is a desire of the community not to build back in the same way. Now, we hear a lot of talk about green and ESG capital market solutions, but a lot of the discussion's really general, right? We talk about green, we interspace it with social and responsible and all of these other various terms. Now, in terms of summary, I think that I'd like Kate to give us a quick rundown, right, of the various types of green finance that we're seeing in the market at this particular point. Back over to you, Kate.
Sure, thanks, Jim. So obviously there's many different green finance instruments, but I'll focus on the kind of two main types of bonds in this ESG space. So kind of in one group, we have use of proceeds instruments, and then we also have on the other side, sustainability linked bonds. So to take the first group first, we have green, social and sustainability bonds. And as I said, these are use of proceeds instruments, which means that the funds raised by the issuer have to be used for specific projects. So for green bonds, the money raised must go towards financing or refinancing green projects. So for an example of that would be a renewable energy company implementing a new wind farm project. Then social bonds are slightly different in that the funds must go towards social projects, such as, for instance, health-related infrastructure or affordable housing. And social bonds also have an element that green bonds don't have, in that they have to specifically target a target population. And then sustainability bonds are bonds where basically the issuer commits to applying the funds to both green and social projects. Then you have as well transition bonds, which are also use of proceeds instruments, the proceeds of which are used to fund a company's transition towards a reduced environmental impact, or to reduce their carbon emissions. So these types of bonds don't require the project or the issuer, in fact, to be classified as green per se, but they are required to use the proceeds for climate transition related activities. And then in the other kind of group, you have instruments such as sustainability linked bonds, which are really gaining momentum recently because they have a bit more flexibility. And these are bonds that they're not defined by their use of proceeds. And so the funds raised can be used for general corporate purposes, but the financial characteristics of the bond will vary depending on whether the issuer achieves predefined ESG objectives, which are measured through key performance indicators. And in fact, in March, the EBRD invested in a sustainability linked bond issued by PPC in Greece, which was the first sustainability linked bond in the regions where the EBRD invests. So those are kind of the main types of ESG instruments in the market at the moment, but this is probably only the start of the diversity of these instruments that will be available and will come to market. For example, we are seeing hybrid instruments emerge, such as green sustainability linked bonds. So I think the market will only grow and diversify as this progresses.
Okay, thanks a lot for this. This gives, now somebody wanted to intervene there.
Oh, sorry, Jim, it's me. I just wanted to add to that. And I think as banks also pledge and make their targets for the proportion of lending that they want to be as green and transition over the next 10 to 15 years, that will also help kind of stimulate the market there in terms of what products are offered. And I think the key, there are some industries where it's obviously much easier to do that than others. So I think in energy, it's more straightforward if you use renewable energy sources. Whereas I think in other sectors such as agriculture, that then becomes much harder where the whole sector is in transition. So I think this is definitely a key focus of banks, and this is something that we'll only see the market grow over the next 10 to 15 to 20 years. So, even of the top 50 banks in Europe, about 61% representing 84% of the assets have the ambition to be Paris aligned. And many of the top banks have already articulated what their target is for green and transition lending.
That is, okay, that's actually leading very much into Sarah's comment, because I wanted Sarah to cover the role of the EU in building back better during the recovery phase. What were the conditions of support and green taxonomy? Over to you, Sarah.
So I think the approach the EU has taken here substantiate a bit that, build back better meme that you were complaining about, because they are being very careful that investments made through that big pot of money are not locking in any investment, any technology that can harm the environment in a significant way. So the release of funds is conditioned on meeting a number of screening criteria that can be summarized in the acronym DNSH, do no significant harm, and they will be built on the EU taxonomy. A few weeks ago, the Commission released a communication outlining how the taxonomy can be used to make sure that this money is used in a way that doesn't harm the environment. So this is it's an initial step in demonstrating that the Commission is serious about Building Back Better and in making sure that the ambitions of the Green Deal are not superseded, left behind by the effort made to recover from the pandemic. And this, I believe, is creating a new use case for the taxonomy that was much needed, in addition to the transparency use case that is the only mandatory one for due taxonomy. And it can also, stir controversy because, different governments may have different views about what significant harm means. And here we have a unified way of naming significant damage to the environment. And, it's something that it comes from the top, from the center, from the Commission. It's been agreed by the Parliament, the European Council, and so probably governments have the impression that they have not much leeway in determining how they can spend the money. But I believe it's a significant step forward, and it's very important. It's also consistent with other measures in the space of ESG regulation that the European Union has put in place. For example, from the 10th of March this year, all investors in the EU will have to incorporate ESG considerations into their policies, governance, and risk management procedures, and demonstrate they do so by publishing, principal adverse impact statement. So we see pressure on investors from a number of fronts and also from regulators to invest sustainably. And from an exchange perspective, what we want to make sure that our companies are ready for that. And for our companies, it's very important that also the companies in their supply chain are ready. And so you see a sort of, trickle-down effect of ESG practices from the policymaker to capital markets to the real economy through the supply chain of big listed companies. So we believe that regulation is really providing a big push to the transformation of the financial system. Clearly, if it is taken in a very serious way, and if both investors and the issuers respond, seeing opportunities rather than threats from these overhaul.
Okay, now that's fine. Iona, if you would like to intervene.
Yes, please. I wonder if I'm going to be the most unpopular person on this panel or in the whole conference, because I'm just wondering, is there room for a contrary view on ESG at this very point? I mean, I love the idea of ESG. It sounds fantastic. It ticks all the boxes. It's incredibly trendy. And, I know lots of legislation, regulations been passed. But at the very point in which economies are struggling for their life, in which people are dying and people are being put out of work, why are we, it's great to build back better, but are we sort of putting too much emphasis on ESG? Shouldn't we be putting emphasis on other things? And to have an ESG policy pre-COVID that said we were going to do all of these things, can these ESG policies, are they still valid now at this point? Is there anybody out there with a contrary view?
Okay, I think this is a fantastic point, and it's actually leading to something I was going to raise, which is an issue for Margherita. One of the things that I'm concerned about is that it's great that banks are committing to ESG guidelines. Fantastic that other people are claiming that things are green and all of these, right? But I'm being quite concerned about the lack of discipline in terms of monitoring and reporting. What is your view on that particular area? Are we getting too involved in ESG and not actually building the good blocks of monitoring and accountability that really should be built at the same time as developing ESG products?
So I think there are two things here. I think, and I think Sarah alluded to both of them. So I think on one hand, there's investing. And so there's a requirement for investors to building in ESG into their investments. So, you know, for example, pension schemes now have a requisite to invest in ESG funds and to actually show that they are investing accordingly. For example, specifically in the UK and in other regions. I think, so that's on the investment side. I think from a banking perspective and framework perspective, which links to your monitoring and reporting point, Jim, you know, the EBA has come out with guidelines that say that banks need to come up with a list of projects and activities that they deem to be sustainable. And and what a lot of banks are doing are basing that on the EU taxonomy to the extent that they can possible. So the EU taxonomy can very much serve as a guide, but it does have to be translated to be practical to banking activities. And obviously, to Jim's point, once that framework is defined, which a lot of banks are defining their own framework in terms of what lending they deem to be green transition, social and other, that then needs to be embedded into the organization from a training perspective, from a systems perspective, and into monitoring and reporting. And what we need to be very careful of is the risk of greenwashing. And so we need to be careful that the criteria for what is green transition isn't too lenient. And I think the EU taxonomy has, in general, you know, relatively strict criteria across different sectors, and that is evolving. And there is just a balance between what's practical and what's not. So, for example, I brought the example earlier, but in agriculture, where it's more difficult, it's point to monitor and report, because in agriculture there are many different farmers that might come from small family businesses that, quite frankly, will find it difficult to report on the activities that they're doing as transition and actually provide evidence in a way that other companies in other sectors, it's much easier. So, for example, if you take out a mortgage, it's easy to state what the BER rating of the building is, compared to for a farmer to actually provide proof that the irrigation processes that he or she is using are in line with kind of transition practices. So it has to be seen as a holistic effort. There's no point establishing a framework as per the guidelines without being able to monitor and report on it effectively. And the guidelines do say that, you know, banks will have to disclose what activities will be green and transition. We should recognize that it's not static. So any framework that a bank puts in place will evolve over time. And so there is room for improvement, there's room for adjustment. And, you know, if you fast forward 10 years, it will become easier, because I think a lot more companies will be adopting more kind of green transition type practices. Where the challenge lies is more on the transition side. So where you have a use of proceeds loan, Kate was alluding to this earlier, it's relatively easy to show whether that loan is being used for something that's green or transition. Whereas when you have a general purpose loan and you're evaluating the company and looking at the company's revenues to see if that company has a kind of credible transition plan over the next 10 years, it's a bit more fuzzy, and you have to assess each case on a case-by-case basis, which just isn't as practical for banks to assess smaller companies as it is to larger companies. And then I think the final point, to Iona's point, you know, is there too much emphasis? Well, actually, ESG, there's a big S in that, which is the social, as well as the E and the G, and the social covers health and education, and that really should, I think perhaps you were alluding to some of those points, but that really should come to the fore. So social lending, in my opinion, should include lending to healthcare, lending to education, to really help kind of rebuild and reinvest and help recover from the COVID pandemic that we've seen across the globe.
Jim, may I add something to this, if you don't mind? Actually, I wanted to add to something that Iona said. I agree that ESG is extremely important, but I'm also kind of doubtful about the timing of this initiative. I will tell you why. For a couple of years, we are seeing the Capital Market Union initiative, which one of the main goals of this initiative is that we have more SMEs on the market. And unfortunately, until now, it didn't give huge results because the European Commission is constantly working on the new measures that would decrease the prospectus size and so on. But actually prospectus for me is the least of the problem for the company when they're going to the exchange. The problem is reporting. So companies are shocked with the developments of what they need to report on. So this is just going to be additional burden. The big survey among our issuers showed that they are worried that they will need to hire additional experts because they don't know what to report, how to prove it, who will prove it. Will it have to be conferred by the independent appraiser and so on. So I think in this respect, the goals are a bit controversial. On one side, we want to have more companies on the exchange, and on the other side, we are giving them more and more things they need to report on, and they see it as a very substantial burden to their business. And we are also a listed company, so Zagreb Stock Exchange has 24 employees, and we are in official market of our exchange. And I have to tell you that this exercise is not going to be easy even for us. So I wonder how the companies will cope with more and more stuff they need to work on in order to be on the exchange.
Ivana, I'm very pleased that you actually brought up that point because that answers two questions from the panel. From the audience. I've been deluged by questions from the audience, right? Anastasia is collecting them. The first question was, does the reporting obligation act as a barrier for smaller companies to enter the market? I think your answer is telling us very definitely yes. And the second question is, do crowdfunding companies have to meet exchange listing rules, including regular public reporting of their accounts? I actually don't know the answer to that. Do you have an answer to that?
No, they don't. There is, of course, a sort of recommendation, and it's more unofficial, and companies are doing that willingly. So often the founders or CEOs of the startups on the crowdfunding platforms are regularly reporting on the progress, not in prescribed form. They are usually reporting on some benchmark numbers and so on. And there is also a possibility for the investors to ask questions, but it is not like when you're on the exchange and you don't report until 30th of April, you get the punishment from the regulator and the exchange, and sometimes it's even money punishments. I mean the fine. So basically, you're all the time like running and trying to fill the information into the market and so on. And the question is how much strength and financial power the smaller companies have that on the regulated market.
Okay, thank you for that. Now, on the basis that I've actually managed to design the first all-women's panel for capital markets, by the way, I'm not a woman, right? So maybe we're not an all.
No, I thought about participants. Sorry, James.
That's perfectly okay. I love it, right? Because it suits me down to the ground. But one of the things that I think that we need to discuss here at the moment is how can we mobilise underrepresented investor groups such as women and the youth to access the capital markets? And I'm going to open that question firstly to Ivana and Iona, and then I will open it to the rest of the audience, to the rest of the panel.
Well, actually, I'm just giving a speech in 2 days in front of a female organization gathering about a different approach that needs to be done for female investors. Female investors are currently earning more money than ever in their lives. They are saving in a different way, and they have different behavior than men do. They are more cautious, and they want to invest into companies that are ESG, basically, and they want to support their community where they live and work and so on. Since our investment companies are mainly men dominated, and they are used to have drinks and discuss with investment opportunities and so on, I think they really need to adapt their business model in order to attract female investors, because they are making most decisions about purchasing. It's proven for years that they even buy more cars than men. At least they are making decision about the sort of the car that's going to be bought. However, the individual approach towards investors should be taken into account. Even I'm CEO of this exchange, can really understand why a female investor feels uncomfortable if he needs to come into situation in front of the broker, answer the questions about how much money they invest, what sort of experience they have, what sort of instruments they're going to invest in, and so on. So I definitely think group female investors are the group that is not covered, at least from my point of view, not.
Iona, do you have anything to add to that?
Yes, I completely agree with that. I think female investors are not covered for all the reasons that you've said, but I think there's a big problem with retail investors. And in fact, the EU in its Capital Markets Union itself has acknowledged it, that there's a big problem, a complete disparity between Europe, and I should probably include England in that today, and the US about, are people really investing? And I think the challenge for us, talking about are the capital markets, how are they going to be rebooted? It's not just what are the instruments, it's who's going to do it. So are we just going to be relying on pension funds and foreign institution investors, or are we going to try and mobilize retail markets? And I think that we might find that female investors also like crowdfunding and things more like that. And I was quite interested. There's this sort of little share app called eToro that you sort of see in the UK now. And I'm sure younger people, and Kate will be better able to correct me on this, might find this more interesting because it's kind of trendy. It's an app, it sounds good, you can do it. And it's interesting because cryptocurrency, for some reason, you can hardly walk down the street without somebody saying, oh, should I invest in cryptocurrency? But nobody ever rushes, I don't know why they're asking me, but nobody ever rushes up to me and says, should I invest in an exchange? So there's this whole difference between what's trendy and what's interesting as well.
Okay, that opens up a very interesting thing, and it's actually going to answer two of the questions that I'm being deluged with by the audience, which is pleasing me immensely because it means that we've covered an immense amount of ground, but it's actually hit a bit of a sweet spot. And I would encourage all of the audience, right, if you don't feel your questions have been answered, to get in touch with me or any of the panelists, and I'm sure that they can answer any of the questions that I can't cover. But a question straight across to Margherita, why is board diversity important? And how do we ensure the right balance on the board to fit into these areas that Ivana and Iona have identified?
So I think just building on what I said earlier, so board diversity encourages inclusion, and they're different. So board diversity is ensuring that there's kind of diverse members or diverse members at the board level, and then inclusion makes sure that everyone's opinions are heard. And the combination of a diverse and inclusive board limits the potential for groupthink. So I think with a diverse board, there's less of a risk of a minority view not being heard. If you're the only one to say a point and don't have any support from anyone else, that point is more likely to be missed. Whereas if you're one of many saying a point, there's generally a sense of agreement there. And I think in terms of encouraging board diversity, it's not just gender, and it's not just age, it's not just ethnicity, it's background, it's expertise, it's opinion. And really what you need is to have a good chair that's able to bring diverse individuals together and make sure all voices are heard. Without a diverse board, it's then very difficult for an organization to be diverse and to be inclusive if key topics aren't discussed kind of top down. And I mentioned a few techniques that can be used earlier. Red teaming is a good one because someone plays the role of contrarian, And so you don't feel like you're being difficult, for example, if you're presenting a difficult view, but rather someone has the role to challenge what others are saying. And that really helps to prevent groupthink and to think outside the box and to think more forward-looking versus what's been the status quo in the past. So that's really why diversity is important. It helps to foster inclusion, and it helps to make sure that different angles of the same problem have been considered by board members. Another technique that's used is to kind of present and think and then debate. So if you have a board meeting split over 2 days, you can use one of the days to introduce a topic to the board. The board can reflect on it that evening and then debate the topic the following day. That really, again, encourages diversity of opinion rather than a board being presented with 100 pages of document and people having to quickly give the first opinion that comes to their mind, which doesn't really encourage that creativity and diversity of thought.
Okay, thank you very much. Now, we've got 7 minutes left. I've tried to answer the majority of the questions that were on the chat line that Anastasia has been looking after. One of the major questions are, what were the impediments for SME access to public capital markets? And I think we've actually covered quite a lot of those. It's the onerousness of the extra reporting on the supply side. The fact is that these aren't large enough instruments to justify a lot of the effort. On the demand side, right, we need to mobilise investments that are attractive to a larger investor base. And if you don't have local investors, then it needs to be of a sufficient size, right, to justify investment by global investors. Very similar to Sarah's point about the social response bond being issued in one very heavy marketable parcel of $1 billion, so that it can appeal to a much larger array of investors. There were a number of questions on the mini bond market and covenants, right, which I think was generally covered by Sarah. What we're seeing here, just as a general summary, is that we recognise that no single source of finance is going to fix this crisis. We haven't even talked about the negative impact on government financing, right, which is another area that will need to be covered by the capital markets through increased issuance of government bonds over a period of time. We haven't even covered that area, and yet we've still said that there's a huge amount of challenges that exist in the broader markets for us, for the capital markets have a role to play in the broader market, but they're not going to satisfy every funding requirement in the same way that the banks aren't going to satisfy every funding requirement. And the evidence of institutional investors, particularly foreign investors, aren't going to provide everything that we need, right, to help to develop financing solutions for the broader economies of Central and Southern Europe. I think the point that Iona made about the fact that we need to mobilise the investor base, and particularly the retail investor base, and broaden it via the involvement of women and minority groups is a very, very well made one. Margarita's point, right, about the diversity of a board, not only does it lead to better performance, but one area she didn't cover was it also leads to better governance, because if it's not a men's club, right, it's harder to get a lot of that through. So one of the things that we don't want is we don't want a board that masquerades as a diverse board, right, but is in fact the same, right? All the people are effectively the same. And that then points to what Kate was actually talking about reflecting the need of youth. We need to see more young people at the board level, right? We understand that ESG is a big area. I've always said to Margarita in particular that I think ESG is misnamed. I think that E and S should be in one category and G should be in another. She has a slightly different view and thinks that S should be in another category, I think. But one of these things is that they're all incredibly important to the overall makeup of capital markets, and nothing can be done. We have unlocked Pandora's box of ESG, and even if it's incredibly expensive, right, we still have to recognise that there is a requirement that investors are going to want to see ESG credentials. Now, to Ivana's point about the small organisations that are falling under the heavy cost of this type of reporting, at some point in time, there does need to be a solution. And that solution probably is going to need to come from the EU, who's probably going to provide most of the guidance in this particular area, because a lot of the Central and Southern European states are looking at not EU compliance or EC compliance, but they're looking to obviously normalise their regulations to EU requirements as part of their accession conversations. So there's a lot of very, very rich areas that needed to be covered here. We can help to finance the recovery, but we do need to do the basic things. We need to develop the basic capital markets. We need to make sure that we can settle deals. And this is very, very important, something that Iona alluded to. Brokerage outfits will look at our region if they can settle easily and at low cost and efficiently. They will not look at our region if there are no settlement highways or settlement infrastructure that's in place for them. So in general, there's a broad amount of measures that do really need to be looked at. I don't think we've provided all the answers, but let me just repeat that this is a very, very experienced group of people on this panel. They're also really nice. So they're happy to answer any questions that you get. If you're looking for emails, etc., please just send me a note and I will make sure that they get distributed to everyone. Now, on behalf of all the board, on behalf of all the panel members, I'm realising that it's only 2 minutes until we finish, and I've always liked to finish things on time. Are there any last words from any of the panellists? Quick 1 sentence, 2 sentences. Iona.
Yes, investor confidence. If you create products and investors lose a lot of money, it will be a scandal and you won't get your chance to do it again. So let's make sure the regulators are up to their job.
Excellent point. Any others before we actually close? I think we've answered most of the questions on the chat line. There were over 10 questions. So what I did was I tried to consolidate most of them. Now, none of this panel would have been possible without the assistance of Anastasia Barakina, who has been, not only has she been looking after that chat line today, but I don't know whether you're aware, but I had no IT systems this morning. And Anastasia also fixed that problem, which is a very good thing, seeing I'm in Glasgow and she's in London. So I have to say that when it's all said and done, please reach out to these people. We're all very happy to hear what you see as priorities. It is a central role of the EBRD to help to develop capital markets. And with that in mind, I think we can close and thank all the panelists for your interventions, because it was first class. Thank you.
Thank you, Jim.
Thank you.
Thank you, Jim. Thank you. Thanks to all the panelists. I hope to see again Jim in Trieste face-to-face next year. And now we go on with the next and last webinar, the fifth webinar. First of all, the title of the last round table is Moving Onwards the Eastern Europe Policy Agenda, the role of financial communities. And let me present the chair, keynote, and speaker. First of all, the chair is Goran Svilanovic, is a Southeastern Europe expert on economic and political development. He served as Secretary General of the Regional Cooperation Council and was member of OECD. The keynote speaker is Milojko Spajic, Minister of Finance and Social Welfare of Montenegro. He graduated in Japan, and before coming the last year back to Montenegro to serve his country, he worked in the United States, on Wall Street, Paris, and Tokyo. I mean, all around the world. And then the panelist, Marco Čadec, President of the Chamber of Commerce and Industry of Serbia, President of and Managing Director of Western Balkan Sixth Chamber Investment Forum, and member of the Board of Directors of European Chambers, the largest European business association. Finally, Teresa Coratella, Program Manager of European Council on Foreign Relations in Rome. Now it's time to start with the last webinar, and we start with the keynote speaker. And for this reason, it's very, very great honor for me to give the floor to Mr. Milojko Spajić. Good afternoon, Mr. Spajić. My warmest welcome and thanks for having accepted our invitation. Thanks so much, and the floor is yours.
Thank you very much for a wonderful presentation and for having an opportunity to speak at the forum. It's a tremendous honor for me to dial in from Montenegro and to greet you all here. Can you hear me?
Yes.
Is technology working well? So we just Montenegro went through a tremendous change last year. We had the government that was around for like around 30 years, and there was a time when we needed to take a responsibility, and we needed to come from all kinds of places. I'm just one of the people who came and who joined this government's efforts in making this country, making this, like a push towards fairer, better, and more wealthier society. We are using obviously like our previous experiences to the advantage of the Montenegrin nation. And that's the goal of the next 4 years of this government. Obviously, this government is facing a tremendous political and other challenges, because it's the first time for Montenegro to have a change of power basically in the last 30 years. But it's also we have a situation where the government is fully technocratic. Sometimes, like, even our Western allies don't fully understand the situation, but the Italian ambassador and the Italian foreign minister, they were kind enough to give us the comfort, saying that, you in Italy, you understand the best, like the technocratic and all kinds of governments that are lasting for a year, for two, or something like that. So you are very flexible, you understand the mentality. So I think the Montenegro has a very similar mentality to Italy. So hopefully you will be able to understand the challenges we are going through. Shall I stop here, or what's the best way that we continue on this?
Goran, we can hear you. Goran, try to.
Can you hear?
Yeah.
Yes. Okay. You can manage directly.
Well, first of all, yeah, thank you very much, Federica, for the very kind introduction into a panel, and in particular introducing Minister. And Minister, thank you very much once again for joining us. I would like to ask you to continue briefing us. First of all, we would like to discuss issues related to the recovery process, how it is affecting your daily routine. As you've just explained, you are in a new government with so many issues on your plate, but still on the top of everything, it is a COVID situation. And how do you find your whereabouts to go into recovery process? This would be one question that I'd like you to reflect on. And then I can't simply resist. You are 34 years old. And one of the topics of this whole gathering is what is happening with the next generation. You are the next generation, already in office, and you've done a tremendous work. But I also like to bring you back into your age status and ask you, how do you see what is happening for the people like yourself? You spend years working with hugely important companies, Goldman Sachs, and then you were running a hedge fund. And so you reached some of the goals that the generation, which is of your age, is dreaming of. So I'd like kindly to invite you to reflect on these two things. One, where do you lead your government into after pandemic these days? Where do you want to go? And another one, how do you feel as a young leader in the region, one of the most promising? Please.
Thank you, Goran. So the first question is around recovery process of Montenegro. We had a very difficult situation last year. The economy fell 15%, 15.2%. The fiscal deficit was at 10.1%. The debt to GDP went to 105%, gross debt to GDP. That's a very, very challenging situation, especially having in mind that the maturity of the debt of Montenegro is pretty short. And the interest rate that we are paying on the debt is pretty high. And that's a major difference to some of the other heavily indebted nations, such as Greece and Italy and other Euro members, because just being a part of Eurozone, they had an opportunity to join the ECB programs, various ECB programs, and they were able to push back maturities and also have a very low interest rates on their debt, which deemed their debt sustainable, despite the fact that the gross debt to GDP would be pretty high in their case as well. So that's one factor that we inherited. Also, the second thing that was really challenging for us, then the day we had to actually launch the debt offering, the bond issuance, the biggest one in the Montenegro history, the third day we were in office. So 9th of December was basically the last moment for us to tap into the markets before the Christmas season kicks in. And we managed to get 750 million euros and basically finance our country for next 2 years. At least for a year, but in my mind, it will be for 2 years, depending on the deficit this year that we realize. That was the first thing. So the first thing you do, you solve the liquidity crisis. Once you solve the liquidity crisis, you think about the solvency and also debt sustainability. And the first step towards the debt sustainability is the fiscal discipline. So we managed to, in very short term, we managed to set up a budget that is program-based budget. Program-based budget is basically a normal thing in Europe, and that's being first time introduced to Montenegro. And it has a clear goal, or it's very clearly goal-oriented, as well as like what kind of activities need to be undertaken to achieve these goals, etc. And by just virtue of having such a transparent methods, we were able to save like 10% of the previous year's budget without cutting salaries, pensions, social welfare, the agriculture, or any capex. So basically what we did is like we managed to tame the crisis and maintain the fiscal deficit of only 3%, despite the fact that we fell down 15% last year in GDP, that we have huge problems with the state-owned enterprises, etc., etc. So I think we managed to cut a lot of costs without the most vulnerable people needing to basically feel on their skin that these austerity measures. And so that's one of the big achievements of this government.
Minister, this is great, and this is literally the biggest achievement in these 6 months, and I congratulate you. But I'd like to, before joining this issue on the youth, I'd like you to go a step further. And this is, Montenegro is a leader in the EU process when it comes to accession. And the expectations are huge from any other country, but also from the people in Montenegro. What do you, while in the office, expect from the EU regarding all that, the energy transition, also some other businesses? I mean, in my eyes, this is the case in point in case. Montenegro is a country in which the EU can show that it is possible, with the assistance and support in the process of accession, to really reform the country and bring it into a really green country and economically sustainable. What are the expectations?
So I'll be quick on this. Basically, what is to answer your question, I'll be a little bit indirect. And basically, Montenegro inherited an economy that is geopolitically, we are fully Brussels. We are NATO member already. We are soon to be an EU member. But economically, we are a Central Asian nation. because the major investors are coming from Middle East, Turkey, Russia, etc. The tourists are coming from Eastern Europe, non-EU nations. The infrastructure is built by the Chinese. So you have the discrepancy between the geopolitics and the economy, and that's never a sustainable and long-term solution. That's number one. Number two, obviously, as like energy transition is extremely important. Montenegro already has more than 2/3 of the energy from sustainable resources, but we have a huge potential to increase that. And by having export links with Italy and then with the Western Europe from that point on, we think that we can use the EU's help to diversify away our economy from tourism, and especially over reliance on non-EU tourism, as well as we can also diversify away the economy so that it's more sustainable. Because as we can see, last year the tourism fell 85% in Montenegro, and that caused the economy to basically be on its knees with 15% fall. So these are the things that EU can help, and I think just getting closer economically, EU and Montenegro is going to be like enough on its own. So we think that Montenegro is really good investment case for the EU as well. We are fully aligned with EU policies, number one. Number two, we are the closest proximity of EU. Obviously, we would be as a demand side. We are for the EU goods and services, as well as for the EU companies that would come here and offer their and have their offerings here, as well as invest here. So Montenegro is a place that is naturally tied to the EU, is also already using euro. So Montenegro is one of the countries that doesn't have its own currency. So we are already in a way in the eurozone without having benefits of the eurozone. So we don't have a right to issue our own currency and issue euros. So we are giving seigniorage to the Brussels basically already. So by some calculations, we give like around 2 billion euros of seigniorage to the Brussels without having any flexibility in the times of crisis to increase the money supply, for example. So we need to be fiscally way more aggressive than a normal EU nation. And that this ability to have a monetary policy as a legitimate policy on your table is something that is a big handicap for Montenegro. And I think EU can help us stepping in and helping us investing in the green transformation, in the just transformation for some of the thermal plants, as well as for some infrastructure. Because, like Montenegro is one of the nations that's not plugged into that supply chain, Central European supply chain. You have Serbia plugged in, you have Croatia plugged in, Bosnia is quickly catching up, Montenegro is excluded. So we need to include Montenegro in that supply chain of Central Europe so that we become integral part of the EU economically as well, not only geopolitically.
I am going to let you leave before you really touch upon as I do, colleagues of yours, I guess younger than you are from Goldman, there was a survey and they really said that they are begging a company to go from 83 hours to go down to 80 if possible, which is huge. It is not sustainable. And then the whole ball starts developing. And now we have seen recently in Financial Times a message coming saying that the generation who is now stepping into a real business, whatever they do, they may hope that they will work harder than their relatives, so me and Franco and Paolo, and that they will never earn as much as we did, because the apartments are hugely expensive and many other things are more complicated than ever, and they feel insecure. I mean, you have been working very hard. You are now leading the country into a change process, and you have earned, of course, decent money because you've been working hard. What would be your message for those who are as young as you are and younger?
But it's connected to the question you were asking me about my age, and like I don't exactly. I don't think being 34 is actually that young in the corporate world. But it's I get your point. You have a chancellor Kurz in Austria who who is also like leading the charge, and you have some other leaders who are also doing it pretty well. But it's it's not about the age. I think it's more about experience that you go through, and some of the experience is also enriching, and it's like giving you some other perspectives and so on. So, but there's a point, especially in the Balkans, to have the leaders who don't have 90s as their base, as the base of their character. Because of the 90s in Balkans, they were tremendously poisonous, and they destroy the value systems of the generations to come. So I think the generation that is coming now in the Balkans, that is like 30s, or that is like maybe even younger than that, they were kids in the 90s. This is the generation the EU should be talking to. The EU should be supporting. The EU should be giving its utmost, because basically we have the same value system as the EU does. We don't have that 90s, that kind of outlier generation that suffer immensely. That's like my parents' generation, or generation a little bit younger than them. So I think it's a really tremendous opportunity for EU as well to integrate this part of the world in a process that's going to be good for both sides, not only for Montenegro and for the Western Balkans, but also for the EU, because it would definitely it would increase the security of the EU. It would definitely generate additional demand, because we need to, just like by the virtue of catching up to your levels of income, we would need to grow. And like that growth can be captured by European companies, by European investors, by European markets, increase the money supply that's going to be utilized. It's going to increase, accelerate the money flows, and so, et cetera, et cetera. So I think just by the virtue of these countries joining and not being a weak belly of the EU is going to have a positive effect for everybody.
Thank you very much. I'll give you a break now. Please stay with us, and I highly appreciate your comments, and I believe that the others will follow on what you said. Now, I need to explain that we do not have Marko Čadež. A handsome gentleman here is Mihailo Vesovic, who is advisor to Marko Čadež, who apologized only 1 hour back, and I'm also very sorry, but I'm actually very happy to introduce Mihailo Vesovic, because he is director for strategic analysis in the Chamber of Commerce of Serbia. He is very much behind the processes that we have heard of and have been commented already today, including by Minister. And this is, as Marko is presiding a Chamber Investment Forum, and somehow Serbia is really working very hard together with everybody else in the region, and is setting the scene, so to say. And Mihailo was actually behind the scene, really working on this. So I'd really like to invite you, Mihailo, to tell us, where do we go from where we are now, particularly having in mind that this difficult year behind proved a resilience of the business community in the region, readiness when the EU was slow to engage on a green corridors, to organize the shipping, to open up the borders within the region and then with the immediate neighborhood. Tell us about this experience, please. How do you see recovery process?
Good day to everyone. I hate to disappoint, but that's my role. Well, I must be honest that we learned, although this last year was very hard economically, we took a lot of very valuable lessons. One of the most important lessons is the regional lesson that we learn, and that's actually that if we have the common interest and we set our minds to some goals, we can achieve it. So the process of making the market of West Balkan 6 closer together and removing a lot of barriers, at least at one point of the pandemic, proved that it's possible. And that's the famous green lines that we introduced basically in 3 weeks after the European Union has introduced some model of the green lines in a sense for the sensible goods, and it is possible. And one of the most important lessons that we learned is that region and regional cooperation is maybe for the European Union more substantial than the global cooperation. What we learned is that regional value chains are something that will make a safer future for the economy, at least for the essential goods, for the essential industry. The safety net is to have your supply chain as close as possible and as reliable as much as it's possible. So we opened up a lot of topics last year, aside from the nearshoring, which is one of the topics that European Union is chasing, especially the foreign direct investors. What we learned also is that removal of the barriers, especially in the movement of the people, because a lot of times we talk about industrial products, services, and so on, but I would like to emphasize that the free movement of the people, the recognition of diplomas in the region is one of the key and probably the biggest competitive advantage that one country have. Because what we are facing now in the region is that basically we have potentially a lot of business opportunities, a lot of investors, but we need a human capital and movement of the human capital among our countries. Because not one country is self-sustainable, and we are talking about 6 small economies in every aspect of it. But as we are talking about 18 million people, we are becoming more and more attractive. And to be more attractive for the higher value-added or innovative products, we need to have the human capital available. And this human capital and supply chain must be something that can function as a market as a whole. So we learned that. We learned that we have to move forward as economies, and that we are faster. Business representatives became faster than the politics. That's another lesson, because if there was a problem on the border, if there was a problem with the supply chain, and ministers were not calling each other, business people were calling each other, and then they were calling us, and then we called the ministers, and that's how we removed a lot of barriers. And aside from that, the availability of the financing, because it's the main topic that we want to tackle here, is the availability of the finance sector and the cooperation between business sector and the government, who mostly can influence the means of financing the businesses. It's very important. It has to be practical, and it has to derive out of the communication, open communication between businesses and politics.
Well, thank you very much for what you've said, and really expressing in particularly the role of the business community. As difficult months are behind us, what are the lessons learned? Would you try to answer that? What is a real lesson that we have learned when it comes to what is the role of the business, what we may expect from the immediate neighborhood, and what we may expect from the EU countries?
In generally, the most important lesson that we learned is that basically cooperation between regional cooperation is the key answer of how to bring us closer to the EU and the common market. So the common regional market is a just first stepstone in becoming a part of the EU. What we learned is that we have to look outside of the box. And one of the idea is the free movement of the 4 freedoms initiative that we formed. But aside of that, we introduced something that is probably a little bit outside of the box, and it's called inclusive enlargement. In that sense, the region has to have a clear message from the European community that it's going to become a part of the EU. Nevertheless, how we comply to all criteria of the EU, but the economical parts of the business, of the political agenda bring us much closer and faster to the EU. So there is no way that any country without regional cooperation can become future part of the common regional market with the European Union. First stepstone is the regional market.
Mihailo, thank you very much. Teresa, I'm turning to you. As you're coming from ECFR, I was very much honored to be at the opening of the ECFR. Then the current president of Germany was delivering a famous speech in Berlin, and I really very much enjoy it, and I'm looking forward to hear from you. But look, what we have learned from Minister, it's all about the EU. There are huge expectations from the process. What we have just now learned from Mihailo is, guys, economy first. Let us see what is going to happen with the process of accession. So my easy question for you, what is going to happen with the accession process, and is there a future? We have heard today a very promising speech of the German minister, but still the question is in the air. What process, what perspective, what future for the Balkans, please?
Thank you so much, Goran, and my sincere thanks to the organizers for having invited me and for having put together such an ambitious agenda, a group of such distinguished, high-level speakers, and it was a pleasure to see young voices, female voices, bringing together their perspective. Well, if I have to think about future perspectives and the main theme of this conference, the next generation, I think that we should definitely, when we think about the accession process, start from the very core of this conference, youth. Why this? According to the Youth Progress Index, which was published in June, it was confirmed how the pandemic, alongside with the climate change, are those two elements which are really affecting and have an impact on the youth generation, especially in the Western Balkan region. Combined together, climate and COVID had one major result. They had a major impact on the unemployment rates. I won't go through all the national unemployment rates, but I think we all agree on the fact that the unemployment is representing, and it will probably dominate the agenda for the Western Balkans and the Europe-Western Balkan agenda. Why this? It is not just about how the pandemic freezed the job creation process. It's something that started before. It's something due to a lack of vision, of a goal-oriented strategy also from Europe, and a lack of vision of how younger people, younger actors can really play a major role economically, politically, and of course financially. Of course, this is not just related to the Western Balkan, but it affects Europe. If we look at the Next Generation EU, which is one of the milestones of the European integration process, and it represents the basis of how Europe will shape its future strategy, we see that, of course, we have very ambitious goals regarding green investment, reforms, digital transition, infrastructure transformation. The European Commission asks a lot in terms of policies for the next generation, for the younger people and children and youth. But at the end, when we go concretely through all the plans, and I speak also about Italy, which is my country and which has strong ties with the best Western Balkan region, and which is among EU member states, founding member states, I still see that something is missing there. The second point when I think about the future of the accession process is the issue of interconnectivity. I think that what the pandemic showed, and I think that almost all of us agree here, is that everything is interconnected today, from health, of course, and the pandemic phenomenon confirmed this, economy, politics, but above all, society and generational trends. This interconnection is really marked in every domain that Europe will need to tackle when reflecting again majorly on the accession process and on how
it wants to set the future path of any kind of relation with its closest neighborhood once the pandemic will be over. And then when I think about the future of accession process, I think about 4 major game changers that I think, and I hope, really hope, consider the current path of things, 4 major game changers that will shape the future of Europe, Western Balkan region. 4 game changers which have contributed to emerge a kind of weakness with regard to Europe, but at the same time, if used and implemented properly, they really can lay the basis of the future dialogue with regarding to the accession. Those game changers are health, security. We saw how really health is, apart from the pandemic numbers, which are still dramatic, but health can really represent a basket of cooperation and dialogue, which of course need to be implemented. The second one is the green revolution, I would rather call it, digital transition, and finally the infrastructure success. All those 4 elements, if implemented properly with a clear strategy, which it should not be only regional or European, but which should go absolutely multilaterally, all these 4 elements can really represent an important game changer to set and lay the basis for the future of the accession process and for the next generation, not only of the EU, but the next generation of the region as a whole.
Teresa, I will not let you leave this discussion without being very provocative. What if outstanding political issues are not resolved in the near future? Belgrade-Pristina dialogue, functionality on Bosnia-Herzegovina. What if, come on, is there a future without the political agreement, and what kind of a future?
Well, that's a very tricky question, but I think that without a political agreement, what we might see is a deeper political vacuum related to Europe, and a political vacuum related to the regional and multilateral management.
But there is no political vacuum. Come on, there is no vacuum in geopolitics.
Well, I would say that Europe at the moment is facing real challenges regarding the issue of its political stance. And what we have seen, and the result of this problem, which has been even strengthened by the pandemic, is that at the moment we see other geopolitical actors, great powers in competition, trying to fill in that vacuum. And I think about China, and I think about Russia, I think about Turkey. Those geopolitical actors, or I would say great powers in competitions, are slowly and gradually filling what Europe is missing to implement. And we have saw this with the pandemic, not only in the Balkan region, but I think also about Eastern Europe, with China, very active strategy there. And this is not, of course, not related only to China and the vaccine diplomacy, or rather the scramble for vaccine. We saw this previously before the pandemic started with all the financial active engagement in the Eastern and in the Balkan region. So I see this, I mean, without a clear political post-pandemic strategy, I see this like one of the major challenges that the EU will be forced sooner or later to tackle concretely.
Thank you very much for the moment. As we have heard from the leader in the government, from the business community, from the policy representative, so to say, I'd like to go to the science. Richard Griveson, coming from Vienna Institute his deputy director of the Vienna Institute for International Economic Studies. Richard, we have now heard from Teresa a very important message, and this is the post-pandemic policy. I'd like to actually ask you to think in a medium term. What would you expect, economically speaking, from the region? Where do we go now?
Oh, thank you, Goran. Thanks very much for the invite. It's great to be here again. And like many people said, I hope we can be together in Trieste again next year. I think, the main story of this pandemic is it's very difficult to characterize for the Western Balkans. It's been an extremely uneven economic outcome so far. I mean, we already heard, we saw it with the representatives from Serbia and Montenegro. We have here in the whole of Eastern Europe, the most badly affected and the least badly affected countries. Montenegro was the worst performer in the whole region last year because of tourism, obviously. Serbia was the best performer. And we also see across industries, across social groups, age groups, gender, very differentiated impact in the region. So it's very hard to characterize this crisis for the Western Balkans as a whole. And I think that will apply to the recovery as well. I mean, we're going to see a very different recovery in different countries. Serbia will regain its pre-pandemic GDP this year. For others, Montenegro, for example, it's going to take much longer. So I think the big story is really a very differentiated one. I think as we come out of the pandemic, there is one thing that I think is very important is the structural changes it will bring, and to say that they won't all be negative. I don't think by any means that all of the medium-term impact of this pandemic in economic sense is going to be negative. And I think one thing that that at our institute we're thinking about a lot is whether it gives the region an opportunity to catch up in a way and to attract new investment, new types of investment from outside, better quality investment, more sustainable investment that will produce spillovers to the local economy in a way that hasn't happened so much in the past. And I think there are reasons to be hopeful about this. I think one, as already mentioned, is Western firms are definitely reevaluating their supply chains now. So the proximity factor is definitely more important than it was. And there's an opportunity in this nearshoring story, I think, for the region. The second thing is the digital boost. I mean, this is a game changer, as we see in this conference. It's a game changer for the digital economy, this crisis, this pandemic. And the defining feature of European economic geography for a very long time, going back hundreds of years really, has been proximity to the main areas of wealth in Northwestern Europe and in Germany. And obviously the Western Balkans has always been at a disadvantage in that sense, even compared to somewhere like Czech Republic or Slovakia or the better performing so-called new member states of the EU. And if we really have gone through a digital revolution here and we really can't work online from anywhere, this economic geography will change. And the disadvantage of being so far from Northwest Europe will not be there anymore, not the same way as in the past. And I think linked to that, there may be an opportunity to keep people and even attract people, younger, better educated people back to the region. And we actually see some evidence of that already. We have a study which shows actually a net immigration of younger educated people back to Serbia in recent times. So I mean, there is reason, I think, to think that the economic model and the types of investment could change as a result of this pandemic also in a positive way. And I think the new EU investment plan can feed into that, and the common regional market, and trying to create the region as a single investment space, which is obviously much more attractive to an outside investor than just 6 small individual countries. I think that's all important. I think, though, there are a lot of challenges to this. I mean, we have to be very realistic. There is a positive narrative as we come out of the crisis, but there are clearly a lot of things that can go wrong and a lot of challenges. I think one thing we find in our studies is there are obviously some barriers to investing in this region. So a lot of foreign firms would think about this region, but maybe wouldn't come in. I think 3 are very important. Availability of skilled labor is an issue, and that has to do a lot, I think, with the outward migration, at least historically, of younger educated people. Governance and institutions, which I think is the problem the region has in that sense, is very much related to 20 years of not very much happening on the EU accession process, and then infrastructure. And there's still an infrastructure gap, a big infrastructure gap. And Teresa mentioned this relative to the new member states of the EU who've had 15 years of EU budget to pay for their infrastructure, and the Western Balkans hasn't had that. So I think these are really the issues. I think when it comes to the regional market, it's a very interesting story. These are good initiatives that have been done, but I think we have to be realistic. You know, even if you put the whole thing together, it's 18 million people, but in GDP terms, it's roughly the size of Slovakia. It's a bit more than 1% of EU GDP. You know, I'm not saying that these things shouldn't be done. I very much support all of these initiatives, but we have to be realistic about the upside, I think, of this. And that leads me really to my final point in answer to the question. I think, you know, the economic future of this region, the political story is absolutely central. And no matter how good the domestic reforms are, and no matter how good the regional integration steps are, the future is the EU. And the way for this region to really develop economically and really achieve living standards that everybody in the region wants, and that we, looking from the outside, also want for the region, it is the EU integration process, which feels very much like it has faded in the last 10 years. And certainly, you know, people talked already about the politics from an economic side. It looks much more like a contested zone than it did 10 years ago, also in an economic sense. We heard about the Chinese presence in Montenegro, and my concern would be the further that goes on, you know, a very slow or stalled EU integration process with ever more economic influence, especially from China, then the EU integration process, especially in an economic sense, it's not standing still, it's actually going backwards in a way. When you think about environmental standards, rule of law, public procurement, all of these issues, I mean, the more and more that China is economically present in the region in a way moves away from the EU, not just standing still. So I think there is a positive story, there is structural change in a positive sense that can come out of this crisis, but I think we have to very much aware of the central role of the EU integration process in the region's economic future and creating better living standards and encouraging younger people to...
Richard, I intend to be provocative.
Please.
I've decided I'm going to be very provocative. Come on, what we have heard from the minister, we have heard, okay, regional economic cooperation is one goal, we are there fully integrated, but look, we would like to reach out to the market of Central Europe. Then we have heard from Mihailo Vasovic that, well, in a way, he flagged that there might be a labor demand. And by the way, only months before the pandemic, we've been discussing labor demand in Serbia because it was on a positive note, spiral was going up, and we were really looking for labor in Serbia already February last year. Now, let us see, maybe pandemic changed something, but he touched upon even today that we might be in need of labor. Therefore, he was very much supporting the idea of recognition of diplomas, certification, so that the people can move around the region, meaning also, if you speak from Belgrade, it means that they are coming to Serbia. That's basically the message. Teresa was also mentioning one thing, and this is that we do have a problem with those who are leaving the country, but also said that there are some examples, there might be a possibility that some people are coming back into the region. And now you have, Richard said that, well, look, it is all about the EU, while at the same time, you said, well, the best result at the moment after the crisis is in Serbia, and I'm bluntly saying, but this is the country which is least cooperative when it comes to foreign policy goals of the EU at the moment. So economically, it looks better than the others. When it comes to vaccination process, thanks to cooperation with China, it was possible. I did it in February. And since then, I was driving 30,000 kilometers in the region because I've got the Chinese one in February. And I couldn't get any in Vienna. So come on, I'd like to challenge, because you do have some pieces of arguments for different theses. I am very much about bringing the region into the EU. But let us look into a wider Europe. What does it bring for the region as well? Because you do have some illustration that it helps economic growth, although the money doesn't come from the EU.
Yeah, good question, fair question. I mean, we're talking about two very different things here, though. We're talking about a once-in-a-century pandemic, which doesn't tell us anything really about long-term economic development or growth or inequality or anything like that. Serbia is a very interesting case in this pandemic. I mean, I don't think Serbia managed the pandemic well because of China or Russia. I mean, Serbia used policy space, which many countries had available, but decided not to use in this pandemic. The Serbian policy response was exemplary. The fiscal policy response was excellent. I mean, they put themselves in a position where they could do that because of what they did also in the years before this happened. But Serbia used policy aggressively early to mitigate the worst effect of the downturn, and at least in terms of headline GDP. And there's a lot that goes on below that. You know, we have to be very aware of that. But in terms of headline GDP, Serbia steered itself very well through this crisis. The countries which had just a huge tourism dependence, like Montenegro, nothing they could do really. I mean, this was just a perfect storm for those kind of countries. But if we think about long-term economic development of the region, I mean, how can the region has a long-term economic development problem. It's not caused by the pandemic. It wasn't caused by the financial crisis. It goes back a couple of centuries at least. I mean, this distance from the wealth centers of Europe is kind of the key issue, and then compounded by what happened in the 90s and then the delayed accession process. I mean, the region has hugely lost out by not, you know, Hungary gets 5% of GDP every year from the EU budget. And it's been in the EU for 15 years now. I'm sorry, 17 years now. I mean, that's compounded over time. This is a huge difference for the region. When you see that in the infrastructure, you see that in the institutions and the governance. I mean, and you see that in the types of foreign investment. You know, it doesn't get enough high quality foreign investment with high quality spillovers to the local economy, like you see in Czech Republic, for example. I mean, it's way behind on this. It's really lost a lot of time on this. And I think, I'm not saying it's a perfect economic model. Many people argue that it's not. But if you look at the options on the table to say what is the best way to secure better living standards in this region in 10 years, and it's the case now, it is EU integration. I mean, that is the only game in town in the economic sense.
Thank you very much, Richard. This is exactly what I wanted to hear from you, and I want it to be challenging because I have actually high hopes for Montenegro. I have discussed with Minister that this season might be a game changer because we have high hopes that there will be a good tourist season for Montenegro, and then the figures might 12 months from now look completely different and will prove this idea that sticking with the EU, working very closely with the European Commission brings results. Erika, I'd like to turn to you. You are not forgotten. You do have two hats today. One, because you're coming from the International Institute for Strategic Studies. Therefore, I may introduce you, as I did with Richard, someone who is bringing science to the table. But you do have another hat, and this is that you are part of this youth group today. You've been discussing at the very opening the survey regarding the position of the youth in the region. So please bring the two hats together. And I hope that this discussion was provocative enough for you to tell us, my life is where?
Thank you very much, Goran. So it has been a pleasure today to chair the youth program and the Youth Forum on the Future of Eastern Europe this morning, together with the co-chair, Tobias Fromme from the EBRD. And it is also a pleasure now to have the opportunity to report the highlights of the discussion. We had 5 speakers with different backgrounds and experiences who represent the next generation of the financial communities for Eastern Europe. And we discussed about economic growth, European integration, the challenges and the opportunity for the future in the region. And it is also nice now to have the chance to make policymakers aware of what are the reflections and suggestions that were raised during the forum today. In particular, the 5 speakers discussed the main challenges to economic growth, and some of these have already been mentioned just now. And among the main issues identified, there were institutional pitfalls, trade barriers, and regulatory holes, which contribute to the brain drain. So the immigration of the talents and the lack of institutional investors and the limited youth participation in institutional decision-making. We also discussed about the integration process of Western Balkans into the European Union and whether this has been affected by the COVID crisis and which has been the role of the private sector on this. There was actually a very lively debate about this topic. And while everyone agreed that COVID has had a kind of negative consequence on economic growth, public debt, and unemployment. And so I kind of made more difficult for countries to meet the EU standards. Some speakers also stressed the point of the importance of reforms and regional cooperation, but as well as the involvement of young people to help the integration process moving forward. And for some speakers, actually, economic growth can be also found outside the EU, but everyone believes that the private sector remains the key linkage to the EU. And in this regard, it was argued that the development of skills would definitely help regional companies to increase their competitiveness in the EU market. And then we also discussed about how banks, insurances, and financial sector managed to cope with the COVID-19 crisis and how this changed in the investment climate. And among the points that emerged, we have seen the rise of fintech as a positive side of the crisis and the rise of cryptocurrencies. And so an overall positive effect on digitalization, but the situation varies between countries. And so in some cases, it was pointed out that the greater intervention of government in the economy had been beneficial to certain sectors and less in others. But we also overall asked all speakers to provide recommendations on how to create what we want to see, like a healthier, greener, more digital and inclusive society in Eastern Europe. And we had several suggestions, but among those, we've seen the importance of skill building and the importance of putting efforts to reduce the brain drain, which is a huge problem for the youth generation. And also, so in order to reduce the brain drain, they were suggested to create opportunities for work, and some of the recommendations were about incentivizing the nearshoring, so the outsourcing of tech jobs to Western Balkan countries from the EU. And also, of course, among the suggestions, there was the promotion of the use of technology, such as blockchain, and the creation of innovation hubs for adopting technologies, both for e-government and for the private sector. And to conclude, you will not be surprised to hear that at the Youth Forum, there was a great emphasis on increasing the youth participation in political decision-making and in the support of regional cooperation.
Erika, I'm a parent of two, 23 and now 30. Oxford graduate, University of Vienna graduate, and I'm very worried how they're going to keep office hours together with the private life, what they can do, what they can expect in the years to come. Okay, I have right to be worried as a parent, but I'm asking you now for your personal opinion, not a survey. How do you see the years which are in front of you? Where do you see yourself in your life?
So this is a very difficult question because I am an expat, an Italian living abroad in London, and so I do feel the same problems of my fellow young professionals in the Eastern Europe. I do believe that the importance of knowing that there is an institutional effort in retaining the talents, which means creating opportunities for the brain gain. That means simply that it's totally fair to expect people to go abroad and have experiences and and go through education abroad. But if the institutions will not put effort in trying to have these people coming back to the countries, that of course it's a waste in terms of talents. And in my case, there are some policies that Italy implemented to try to have some expats coming back to the country. This involves tax reduction for employment for people coming from abroad, but of course it depends on the job market, the opportunities that arise. But I think that the institutional effort is something that it's really important. And being an Italian citizen working abroad, also I do believe that in the future I want to contribute to my country. So I think that's the importance of keeping the linkage with the expats and creating the network with the expats abroad. It is important also for the institutions to then try and have these people contributing to the countries of origin economies.
Thank you very much, Erika. I don't want to conclude without giving an opportunity to you, Minister, to somehow respond to what's been said. Just choose whatever you want to comment. We've discussed geopolitics, accession policy, the EU, but China, region, and the youth. Whatever you want, because you are leading the country which is a leader in this small region. Whatever you want to reflect on, you have 2 minutes. We can't hear you.
We can hear you.
Sorry, I apologize for that. You can hear me well now?
Yeah.
Okay, great. So yeah, it was very interesting to hear different perspectives and various standpoints from the panelists, and it was really enjoyable to hear that. Yes, the European perspective is primarily regional perspective. You know, like when you integrate it into EU, it's not only integrated with France or Germany, but it's also integrated within that region. And when I say region, I consider Italy as well as the neighbor, because we have the sea border with Italy. And you know, I expect a bigger involvement of Italy in Balkans, especially in Montenegro, with now export links in energy, etc. But going back to the point, the regional integration is very important, but it's just important in the context of the bigger EU integration. As you mentioned, the global player can only be EU. Region with 18 million and 1% of the total GDP of EU is a small, and it's like it cannot be enough competitive in the global terms. So we need to be part of the bigger EU supply chain. Also very well summed up that, you know, the next 7 years the EU countries will have immense help, especially the eastern members of the EU will have immense help from the European Union. Having billions of dollars distributed through the mechanisms that EU provides, and the Western Balkans don't have these mechanisms at hand, and that will create a huge gap between the countries, just like Hungary or Croatia, Bulgaria, Romania on one hand, and the Western Balkan country on the other hand. And I think that will just increase divisions. It will increase the political tensions, increase the problems, rather than decreasing the problems. I'm not saying that we should be stopping the help for these countries. You know, if anything, you should increase, but as well as like keep in mind the Western Balkans and have them being part of that package, include them with pre-accession plans with these funds, because
you're referring at cohesion funds, which goes to the EU member states, and it's hugely bigger than our pre-accession.
Correct. So that's I think something that needs to be fixed and needs to be tackled.
What do you expect from IFIs versus private investors?
Especially because these are like primarily credits, etc. There's a little of the aid itself. The IFIs, you mentioned IFIs versus
private investors.
I mean, they both have different IRRs, different returns on investment that they require, etc. So it's a different ball game. But both are.
Thank you very much. A big thank you to all of the panelists. And now, Federica, I'd like to turn the ball into your hands. I very much enjoyed talking to these fascinating leaders from the region and from Europe. So please, I'd like to hear your comments and you continue. Thank you.
Thank you so much. Thank you to all the panelists of the last webinar, and thank you to the Minister for joining us for this chat. And now it's time, Franco, to conclude.
Yes, Paolo,
yes.
We should have, okay.
Ecco, we come back to Trieste. We start from Trieste, we come back to Trieste. Hi, Paolo, and thank you for this opportunity for MIB School of Management to collaborate with you, with the FEBAF, for the 7th time. And we start tomorrow to organize the 8th edition, I suppose. And the floor is yours for the conclusion. And I hope to see all of you face-to-face in Trieste next year. Maybe yes. Paolo, the floor is yours for the conclusion and for the greetings.
Thank you very much, Federica, and thank you, Franco, for this very exciting set of webinars, ideas, discussions. Only a couple of comments. Well, I start with an advertisement because I have here a book that has just been released, and it's edited, by the way, by the three of us, so we are the guilty people. And it's called COVID-era Finance in Eastern Europe, where you find a lot of interesting information and actually the essay that Galateri was mentioning, and where we normally collect the main outputs of the Trieste Forum. It's not a book of proceedings because it comes out after a few months, and so I think. This to signal that we will be working on the very useful, interesting ideas that were produced for this meeting in the following weeks and months, and we expect to have webinars presenting this book and presenting different perspectives. So I think, you know, we have been used to work in a modality through which the Trieste Forum is not simply a once-a-year event in Trieste, but it's also a set of webinars, hybrid meetings, partly in Trieste and partly virtual, and I think we will continue, we will have to continue in that modality. On the substance, well, I only want to make a couple of points, because I think there has been throughout our meeting what I would call a constructive ambiguity, a useful ambiguity, on what Eastern Europe. I mean, we spoke about Western Balkans, Western Europe, we spoke of Southeastern Europe, we spoke of the Eastern Partnership, then we mentioned actually this morning also the Southern Partnership, the Euro-Mediterranean, then there is the Vienna Initiative process, the Berlin. So there are several Europes, there are several of them. Each of them is different from the other. Actually, from the previous discussion, that even within the Western Balkans, there are very different situations, but they have a common element, which is Europe, and therefore, I think there is value in bringing all these different Europes into a pan-European context. I think this is our approach. We have been trying to link these different Europes through the European brand, because I think what Europe has to offer is not simply support, money, encouragement, expertise, but I think it's more the values, the European way of life. This is unique about Europe. The rest, I think, all countries can get from other players in the region, other players in the world. So I think we need to build on the pan-European space to structure it, to organize it. We already have for this space a development bank, I mean the EBRD, I mean, I think also due to the reforms underway, covers the pan-European space, including the Euro-Mediterranean. We don't have an IMF or an EMF, a European Monetary Fund, but we have the ESM that could turn, it's an intergovernmental agreement, could be turned into some kind of fund to help countries. I think the minister was talking about the difficulties of financing the debt and getting out of the debt overhang and the balance of payments problem. So I think, and then we have all the problems of creating a common regulatory framework, common market or common markets, but they can be linked to each other. So somehow this space would also work as an antechamber for countries that are in their way to get in, but also for countries, I mean, think of the UK, Brexit, countries who get out of the European Union, but they remain definitely within the European space. So I think we need to continue, in my view, working positively on this concept of a pan-European space. On final comment on the Western Balkans, because I think definitely there is a positive momentum driving the European Union at the moment with the new strong agreement between the main economies of the region, France, Germany, Italy, Spain, and others. So I think, in my view, for the Western Balkans, this is a personal point of view, but as you probably start understanding, I feel strongly about it. I think the time is right, after so many years of engagement, to plan the marriage. I think we need a date. We need to set a date. You see, in the business world, if you have a target and you cannot have it undated, because a target without a date is a dream, is a wish, but it's not a goal. And we need to make the question of the accession a goal. And so I think, the date has to be set realistically, pragmatically. So there should be no dilution of the criteria. There should not be an excuse for exemptions on standards. No, but a date. This should create some kind of political momentum and replicate what we have seen for the euro. Because, I mean, the minister said it very clearly. For many aspects, integration, so the regions, countries in the regions have been paying the cost for the euro, Montenegro for the euro, paying the cost of accession and not getting the benefits. And frankly, that's not fair. That's not what we in Europe experienced in the 50s. I mean, the Marshall Plan came well before the common market. And so I think we need somehow to work on that perspective, and hopefully we definitely from the business perspective to create a climate of certainty concerning the future of these countries. It will be extremely important for the business world, for business decisions, investment decisions, banking, insurance, and so I think I speak obviously on a personal basis, but I think I also interpret a little bit the wish of the business community that want the political world, the policymakers, to take decisions in their hands, commit and do whatever it takes. I repeat the quote, and it's not by accident that I make this quote, to do whatever it takes to bring this to become a reality. No, I don't have anything else to say. I don't know, Franco, do you want to say something, to say thanks, or do you leave this to me? Or
thanks.
I think thanks.
Thanks.
Then I think I will simply want to thank a lot. I mean, really has been very inspiring day, rich, intense. The organizing teams at MIB, at FEDER. Yes. I want to thank the art director and the studio in Rome. I think very professional. It has worked very well. The technician in Trieste. We want to thank all the sponsors. Yeah. Definitely, they have helped us, all the chairs, speakers, and participants. The only other thing I want to say is that stay with us, because, as I said, we will be organizing follow-up seminars, and then au revoir to Trieste, arrivederci a Trieste for next year.
Arrivederci a Trieste.
Thank you. Bye. Thank you. Thank you.